New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me is Mahima Vachajani. And over the next half an hour or so, we'll try and solve all your stock-related queries. So if you missed it in the morning, we're sorry, but we're going to try and taking it in this session. But also, if you didn't write to us, you can write to us now on the WhatsApp number that's flashing on the top of your screen, and can call us, speak to us directly for a stock-related query as well. Before we start and doing all of that, very quick check of the markets. It's been a very difficult session in that sense, and we've seen consistent pressure on the Nifty 50, now down back again on the 25,400 levels. It's like a broken record that we've been repeating, that there is essentially a lack of support between the 25,400 and the 25,900 level on the Nifty 50, but largely we are back again at those levels. And if you look at the heat map, there is one key culprit across the board, and that's the IT pack. 5 stocks in the Nifty 50 for the IT, and all of them down and out, bad, bruised, amongst other key adjectives I can use today, because it's been a very difficult session, and it's unfortunately over the last hour or so, it's actually, the gains have actually more increased in that sense. So the pressure is building on. Infosys, HCL Tech, Tech Mahindra, TCS are some of the ones. Wipro has seen some revival after, breaching that 200 mark also on that stock, while Eternal is the other culprit, as well as L&T, Larsen & Toubro as well. So those stocks are down in trade today. Tech Mahindra, you're flashing that, it's at a 6-year low. Tells you about the pressure. And when you look at the broader markets, the advanced decline ratio also shows you that perspective. It's been, even in the broader markets, consistent pressure. So almost 1900 stocks now that are declining in trade today. But Mahima, in the mid cap and the small cap as well, the pressure is clearly visible today.
Clearly visible, and how, right? And if you try to pull up the BSE 500, you'll see that the top losers are from the IT space, unfortunately. But the mid cap 150 right now is seeing a downtick of around 0.7% and the small cap 250 around 0.8%. And like I was saying, there
it's
you
all
go.
IT,
L&T Tech, Tech Mahindra, Persistent, Affle India, HCL Tech. I mean, I can go on, but it's all IT names that you're seeing in that range of 5 to 7% downtick. But on the flip side, you have counters like Fine Organics, which is still up around 4% and consistently has been gaining. SKF India up 4% as well. Natco Pharma, Endurance Tech, Schaeffler, Bandhan Bank, as well as Bank of Maharashtra. Some PSU banks doing fairly well and upholding, the rally that we've seen in the past couple of days as well. But with that, let me also welcome in Lancelot Dicuna, CIO at ValueX Wealth Connect, joining us now. With regards to where this entire, the AI thing that we've been talking about, how Anthropic came in, how the Centennial report also came in yesterday. Your quick views, before we start taking in the queries.
So, Mahima, thank you for having me on the show. I think, what we see is that generally short-term impacts are a little bit exaggerated by the market. So while, yes, there will be, maybe some loss of jobs, loss of orders, things maybe getting rearranged in the way the IT companies will have to work towards servicing their clients. There is going to be some disruption in the way things are going to function over the next couple of years. But it is not that these IT companies are totally going to be shut down or there's not going to be any business. Yes, business will come, but it will have to come in a different manner, and they are working towards it. I'm sure with the kind of capabilities and resources that they have, they would be able to, get the benefits of this particular change in technology. So it may be a good idea for those people who are not, having a high exposure to technology stocks to start maybe nibbling at this, because it's going to take a while before we see these stocks recover again. And there may be an opportunity to accumulate some of these on the way down, because you can't really time the market perfectly, but at least you can ensure that you're getting in at a reasonable valuation. And when business turns around, then one would see, you would get returns based on where you've accumulated the stock.
You, Lancelot. So, gotta be greedy when others are fearful, and fearful how that we are seeing today on the index. Now, very interesting that we are almost down 1600 points. Let me also welcome in Akshay Bhagwat. He's a senior VP at JM Financial on the technicals. Akshay, actually, before we start, in terms of the show today, largely last time when the Nifty IT fell 1600 points, there was a very swift recovery in just a couple of hours. I don't know if a lot of people were anticipating that, but none of those things today. Any quick view on the Nifty IT index that you have a call on?
Yeah. So first of all, good afternoon to all. Well, see, it's been a one-way waterfall, you can say, in the Nifty IT index, and still there are no signs, at least on the technical charts, about any possible bottom in place. It's just that the charts are signaling heavily oversold parameters of the index. So right now it's just an estimation that somewhere roughly around the 30,000 mark, where the IT index currently trades, there is a small room for a dead cat bounce scenario. Doesn't mean that a support is in place. It's just because of oversold parameters you might see a dead cat bounce in the next 2 to 3 trading sessions. Overall, as I see, 30,000 is a temporary support, and the major support for this index lies somewhere around 27,000. So yes, the index continues to be weak. If you do get a dead cat bounce, look for exits. That's the call on the IT index as of now.
Okay, all right. So that's the view coming in on the IT space. We've got our first caller for the day. Pavitra is calling us from Kerala. Pavitra, hi, a very good afternoon to you. How can we help you today?
Good afternoon, madam. I hold 1,000 MCX
Okay.
at the rate of 1,800. I want the short-term view about MCX.
Okay, all right. Got your question, Pavitra. I'll take this up with Akshay. Then Akshay is sitting on a profit of over 58,000 rupees. Would you recommend him to continue to hold? What's the outlook?
Yes, so MCX is in a strong technical uptrend. It's just that the last 5 to 6 weeks, the stock has stuck in a range. The range is 2100 support. That comes with very much clarity. So 2100 is your short-term support base. Till it trades about 2100, you have no reason to worry. The stock should see new highs in the coming days. So continue to hold. Just keep maintain a revised stop loss approach where, in worst case scenario, if 2100 were to break, then only you consider an exit in this stock. As of now, it's a hold with a positive view.
Just to correct myself here, he's got 1,000 odd shares, so he's sitting on profits of over 5 lakh rupees. So kudos to you, Pavitra, for that and kind of recognizing it at the right levels and making those profits. I think we'll have to learn something from you.
From him, definitely. It's caught it at the right time as well. Sorry, Pavitra, you were saying something. I didn't know you were on call, but you were saying what did you spot, Pavitra, at that time at 1,800? If you can share with us, it will also help our other viewers.
Okay, thank you.
I think Pavitra didn't want to talk to us at all at that time, but he's got it at good price, 1,800, and sitting on almost a profit of almost 5.5-6 lakh rupees as we speak. But next question coming in from Lalita from Bangalore. She's asking if it's the right time to invest in Lemon Tree and Indian Hotels, and if there's a preference for either of those stocks for the short term. Akshay, coming back to you, what would you recommend?
See, on the technical price charts, first of all, Lemon Tree is approaching a support zone. The support is 110, but from an investment horizon, still I do not get any signals to go long or buy in this stock. Even for an Indian Hotels, which I think the other stock is, technically it is still in a negative downtrend. So investment, if you're considering in both of them, on the price charts, it's still a no.
Okay, all right. So that's the view coming in on the hotel space. But moving on, the next question is on Eternal. MM Kapoor is asking this question. He's got 25 watt shares at the levels of 337. So sitting on a significant loss. But since, okay, he's just got 25 shares. So 2,000 is the loss that he's facing. Should I book losses or should I hold for now? Lansar, I'll come to you on this one. We've seen the fall in this counter since the Dipender Goyal news coming out, and today also we're seeing a significant downtick. As somebody who's remained invested at the levels of the 337, what should one do?
So you see, I think it's important to understand the reason for investing in the stock in the first place at 337. If it's a fundamental reason, then one should, probably look at, adding to your position. But, you have to look at what is the kind of valuations you are getting into. Now, these stocks, while they have shown some amount of profitability and there is a easing up of pressure, on its Blinkit's business because the competitive intensity with the other players has eased up a bit. So there's not going to be that much of a cash burn from the Blinkit business or the grocery delivery business. But overall, if you look at it from a valuation, you are paying a higher price. Yes, there is a growth potential in the sense that they can move to more, cities and they can expand the business on a digital basis with a relatively lesser investment. They've also got a moat because Zomato now has become fairly well known, and a lot of people would reach to them as the first food app that they would look at for ordering online food. So these are the positives, but one has to take a call that are these going to get translated into huge amount of revenue and profitability going forward? And the answer is that the valuations still are expensive, but if one is bought it with a 5-year or a 3-year horizon, then you can look at averaging it at maybe these levels, and then if it corrects further, lower levels.
Got that view. Lancelot. But the next question that we're getting is, it's on Karur Vyasya Bank. Now, Satya from Bangalore is actually holding shares at 336, so very close to the current market price, asking what he should do with his 2,500 shares in the short term and when can he book profits. Akshay, your view?
Technically the stock is in a strong uptrend. In fact, in intraday trades, we have a breakout scenario on short-term charts at the levels of 325, and possibly the target estimates right now are working around 350 to 360 zone. So continue to hold. Since it's a short-term trade, you need to maintain your stop losses below 310 for worst-case scenarios, and ride the profits with a 360 target for Karur Vyasya Bank.
Okay, there's an update coming in for IDFC First Bank, and there's an ANI tweet which suggests that overall on the 590 crore fraud case, there has now been a clarification which has come out before the House that the entire amount lost in the yesterday's accident, including the funds of some Haryana government department and boards and corporations, have been deposited back in the accounts in the last 24 hours. And approximately 556 crore was deposited by the bank, on which was also received. There was also received interest of around 22 crores on that, and the interest has been returned as well in just 24 hours. So that's the recent update coming in. Not sure if there's some reaction on the counter. In fact, there's a negative reaction coming in right now. The stock is down by about 1% as we speak, at its day's low point almost, but that's the recent update coming in with regards to the entire case that panned out for something like an IDFC First Bank. So that's the update coming in. But moving on to the next question, which is on Dixon, and this is from Mr. Sundaresan, who's asking this question, wants to know the future of this counter. Is there any chance of improving, is what he's asking. Would you like to pitch in? A lot of tough questions are being asked to Puneet today. Tata Motors, Dixon, all the counters that he tracks. But any view here?
Well, it's a tough one because a lot of emphasis given on cost, right? And because of the memory chip prices, all of those going into data centers now, so smartphone prices are also expected to get impacted. So you could see a volume impact also now, is what the anticipation is, at least in the entry level space. So the lower price mobiles could see an impact, and Dixon, because it gets almost 80-85% of its revenue from the mobile space, could see an impact. But Lancelot, your quick view also, because there have been multiple challenges in terms of growth, what would you recommend?
So, if you look at the Dixon, its growth is probably slowing down going forward. Last quarter, we saw the revenues had dropped as compared to September. And you can expect that with all these pressures, there would be some amount of pressure on the profitability as well. So given that background, if you see, the stock is trading almost 45 times earnings. And this kind of a multiple is assigned normally to a company that at least grows its profit by 25 to 30% year on year. Now, given that we are not seeing the likelihood of that happening in the near future, I think if one has to accumulate this stock, then one has to wait for a serious correction from these levels. And once it becomes, more a realistic multiple, then you can look at accumulating it.
Okay, all right. So that's the view coming in on Dixon Tech. The next question that we have is from Rohit, who's writing us from Hyderabad, asking about Asian Paints. Is this a good time to accumulate Asian Paints is the question. Akshay, would you recommend that?
Well, see, from an investment perspective, accumulation, I do not think it's the right time. You need to time it, and for investments, I think 2200 odd levels would be the right time. From a short-term perspective, yes, 2350 is a consensus support which is building, but still that has, looking at the price volume action, that support doesn't look good enough to hold for long. So I would suggest wait for levels of 2200 if you are keen from a longer term or at least from a 3-month plus investment horizon.
We have another live caller coming in from Chennai now, and Kalyan has a stock query for us. Kalyan, good afternoon. Welcome to the show. What's your question?
Good afternoon. I'm holding some 200 shares of HDFC Bank, bought at rate of 1007.
Okay.
Just want to know, now it has come down to 910, 13, I think. So
right.
Can you let me know whether I can hold or can I add something like that? Anything, I'm just around 100 to 100 shares like that, any add, hold or anything? I just advise.
And Kalyan, did you buy this from the long-term view or a short-term view?
Actually, it was a medium term. I mean to say for 6 months, I just bought for that one.
For 6 months,
been almost,
okay.
Yeah. 2 to 3 months it has gone. Just want to know what is the status. I mean to say,
right.
Almost.
No, fair point, Kalyan. But let me go to Akshay then. Akshay, a 6-month view on HDFC Bank. He's bought it at 1,007. Should he average down, continue to hold?
So look, the bank, the price traction is that it trades steady. That's a good part for you. But unfortunately, the bank index has tested life highs, and somewhere the private bank space is which has been missing out on this rally. HDFC Bank has not fared with the bank Nifty, and I think it will continue to be sideways for the next 2-3 months. So I think you should be open up for averaging because it's not a negative downtrend. It will be neutral. So 880, I think that's the level to average in case you get that dip. And from a 3 to 6 month holding perspective, you can look forward for targets till 990 to 1,000 rupees.
Okay, all right. So that's the view coming in on HDFC Bank. The next question that we have is from Somashekhar, who's writing us from Bengaluru, asking about WeWork. He's bought at the levels of 649 and 100 shares is what he has. Wants to know if he can continue to hold this from a long-term perspective. Lancelot, any view on WeWork?
So I think, if you look at the business model of WeWork, it's a stock that will generate you more like an annuity kind of return, because they are in the business of providing space to to people for co-working spaces, and then based on that they receive income by way of rentals, or they receive income by way of maintenance charges, occupation charges, etc. So considering that the stock actually is still trading at a higher price multiple, the risk reward ratio is not attractive for maybe entry at this point. But if it's a stable business and it has a long-term growth potential, so if one can accumulate this stock by adding at maybe another 10-20% lower, then you would get a much better average, and then over the longer term, you should be able to get decent returns from this company.
Got that view, Lancelot. But viewers as well as Lancelot and Akshay, it's now time for the rapid fire in this edition of Fast Profit. Request you to keep your answers on buy, sell or hold so that we can take as many queries in the next 3 minutes. The first one's coming from Lakshmi. She's a homemaker and been with Profit watching us over the last few years. So thanks so much for that, Lakshmi. But question on EPAC Prefab, bought at 240 and holding 50 shares. What would you recommend, Lancelot? It's been a one-way downtake for this counter.
I think one should exit.
Okay, DLF is the next one. Surya from Dubai is holding 500 odd shares at the levels of 645 from a 6 month perspective. Can you continue to hold, Akshay?
It's an exit.
Gautam from USA is holding Eternal at 290. We've taken the a view as well in this show, but what would you recommend, Akshay, on the charts?
If it's short term, it's an exit.
Okay, Mahindra is the next one. Is this the right time to buy, Akshay?
Mahindra, I think the right time to buy is somewhere around 30 to 50 price point.
And GM Small Finance Bank also, Akshay, a 6 month view on the counter in terms of entering right now?
Yes, you can enter from a 6 month perspective.
Okay, the next question is on Grow. Karthi Satya wants to know if this is the right time to make an entry. Lancelot, your view?
I think one should just wait outside for a while, don't make it immediately.
It's a recent IPO, Lancelot, but on quality walls. Piyusha wants to enter with an investment of 1 lakh. Any view that you have on this one?
So if her outlook is for a long term, that is a holding of more than 2 to 3 years, I think it's you accumulate even at this price.
Okay, the next one is on Lloyd's Metal. The viewer wants to know whether he can buy, sell or hold at the moment. Akshay, your view?
It's a sell.
Sharda Cropchem 8 shares bought by Ramesh at 1187. Should he continue to hold, Akshay?
It's a hold.
Okay, Suzlon 500 shares bought at the levels of 48. Hold or sell? Lancelot, your view?
I would sell at this point in time.
HAL bought at 5034, roughly around 50 shares. What should Gayatri do, Lancelot?
I think we have to hold.
Okay, Delta Corp, Mohan has bought at the levels of 126, 1460 shares is what he has. Hold or sell? Akshay, your view?
If it's short term, it's an exit.
Ola Electric bought at 36, Akshay. I know it's a tough one, but Raja Shekhar is holding 1600 shares. What should he do?
Short term, again, an exit.
Okay, First Source Solution is the next one. Divya has bought 100 shares at the levels of 344. Exit at a loss. Lancelot, your view?
Yes, exit.
Raymond, the engineering vertical is our viewers holding at 398. What should Manul do, Lancelot?
I think you should exit.
Okay, Dabur is the next counter. Nihal from Mumbai is holding 2,200 odd shares at the levels of 509. What price should I sell is his question, Akshay?
530.
Tata Capital and the last one, what would you recommend? Lancelot, is a good time to buy 100 shares for Shankar?
Yes, I think it's a good time to buy.
Got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit. But Lancelot as well as Akshay, thanks so much for helping us solve all these stock related queries. Viewers, we have been able to solve 93 queries across the 2 Ask Profits today.
Tried
to hit the 100 mark, and something that we'll try and come back do again tomorrow. But thanks so much for joining in. It's been a tough day for investors, especially in IT, but a lot more to watch out for tomorrow. The Indian markets do well in the long term is what we have to remember. But that's all the time we have on this edition of Ask Profit. Stay tuned. India Market Close comes up next.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Hi, good afternoon. Thanks so much for joining in. You're watching India Market Close. That's Hiral Dadia. That's Sharad Dubey. My name is Alex Matthew. And we might all have smiles on our faces, but it's a tough day for the markets, isn't it?
Exactly, and I'm reflecting that.
Not everything is about the color of the clothes.
Smile on your face as
well, I was trying to do that. It's good to be back in the studio, guys. This week, yesterday, I had the hope sitting on the outside and looking in that it might be an exciting day. It didn't turn out to be a blockbuster start.
Exactly, the monthly expiry also is there. A lot of positions are being cut. So that example is also there. Of course, the IT is there.
IT is there, and Sharad, we're not breaking below that 25,400 mark, and that's what I'm hoping for. That if you're managing to stay above 25,400 in terms of closing levels as well, there could be some respite on the cards.
That's the 200 DMA level which you're talking about, and that's where the retesting is happening.
Yeah, and I wonder if there are technical aspects that are playing on IT as well, because that index as a whole is 30,000 right now, thereabouts.
Yes,
let's take a look at the benchmark first, right? Because you're seeing very close to the low point of the day, but we're off the low point of the day, 1.2% or thereabouts for the benchmark, trading above that 25,400 mark. And Sharad, it's a pretty bleak picture when you look at the heat map, right? Very little green on the screen.
It's very hard to find, actually.
You can't find green on the screen. It's well, more than morning, but you have most of the benchmark Nifty 50 that's in the red, and you have TechM, you have HCL Tech, you have Eternal, and this is something that we are going to spend a little time to talk about because it's down 5.2%, quite a bit of selling. Infosys, TCS, Wipro, they're all in the bottom line, but you throw an L&T in there as well as a heavy name on the benchmark Nifty 50. You have an HDFC Bank that's losing 1%
and
or
Alex,
so.
Reliance is also in the red, so there's no support coming in from there as well.
So very interestingly, what I find in the contribution chart, despite the fact that you have such sharp gashes for IT, there's only one stock in the list, and that is Infi, that is pulling significant weight on the downside. The rest are actually L&T and HDFC Bank as well as Bharti Airtel. We began today with that investment into the NBFC.
The street is not liking that.
Not liking it, 20,000 crore rupees. So let's also pull up the sectoral chart just before we hand over to look at the factors that are at play today. You have metal that is holding out, the PSU banks, and remember, this happened in trade yesterday as well. The call on the technical side, by the way, and we'll have to speak to our guest today on closing to find out if that's the case for him as well. But it's a sell call to book your profits in PSU banks. Down here is the Nifty IT, and really that is one of the big stories apart from realty as well.
Exactly, and a little bit of textile and cybersecurity stocks, but these are the small cap ones to focus on. But today itself, Alex, looking at the market, the Nifty monthly expiry is also at play. We spoke about the FI shorts also, which was at 8 months, so there might be some changes. It's important to see the data tomorrow. I also remember IT stocks have been a key drag on the AI updates. Now this is falling in the product companies also and the smaller companies also. Hiral mentioned about that key level of 25,400. We should be looking at that for the closing. The 200 DMA level, that bounce is coming from 25,340. No major support coming in from the Nifty heavyweights. That's the concern coming in, we had discussed with Alex. But other triggers also for the markets. Let's pull in Nifty Bank. The buy the dip strategy does hold up. But for Nifty itself right now, it might be an avoid of trade because we need to figure out the key levels, especially on the closing. India VIX, if you're an options player, it's a pretty good setup actually. It's up 14% in the last 5 days, and it's a tradable zone. The India VIX is coming in. The global cues, the risk of sentiment still remains, and tonight is a very important speech from Trump where he'll address the union, the state union, which would be there. So that's very much important as well. But European markets for the second straight day, they have opened in red. But also look at the rollovers data. That's also very much important. And largely 58 to 60% of Nifty Bank rollovers is yes, this is on the screen which you are looking at. This numbers is looking less, but it will change in the next 60 minutes or so. And there are 3 stocks which are having the highest rollovers. It should be in your radar: Avenue Supermart, Pidilite Industries, and PI Industries. So these are the important stocks we should be looking at from the F&O segment. But Hiral, what's there on your watch list?
Okay, in terms of the watch list, interesting names. Shriram Piston, that stock is up 7% in the last 2 trading sessions. Strong moves there. J&K Bank, Bank of Maharashtra. Apart from that, Karur Vysya and Central Bank of India, all of these are seeing some strong volumes in today's day of trade. Moving on, if you have to look at a few of the other names that one should be watching out for, Natco Pharma is also buzzing on the back of volumes. Fine Organics, the volumes are 30 times its 20-day average, and Suzlon has seen an appointment of a new CEO. Eternal selling pressure continues, and Bharti Airtel investors are not really happy with that 20,000 crore infusion in Airtel Money. Ixigo 25% downtick in a month, along with the car trade, which is at a 6-month intraday low. And the AI sell-off continues. Nothing to be mentioned. The entire sector is drooling under pressure, and the impact of RoadTep incentives have been slashed by 50%. And textile companies are in focus with this. Along with this, a quick mention when it comes to IDFC First Bank. Let's pull up that one on the screens right now and see what's happening, because the Haryana government has come out and made some comments with regards to the money that was lost. What they've said is that the 590 odd crores, they want to clarify this house that the entire amount lost in this incident, including the funds of some Haryana government departments and boards and corporations, they have been deposited back into their accounts within just 24 hours. In fact, approximately 556 odd crores was deposited by the bank, of which they've received interest of approximately 22 odd crores as well. And the interest has also been returned. They've deposited that amount and recovered all of that money within just 24 hours. 5 or 4 middle and lower level employees of the bank branch in Chandigarh had colluded to carry out this operation, and there will be action that will be taken against them. On the back of which, IDFC First and AU Small Finance Bank, both of them actually seeing a strong spike in trade as we speak. But before we discuss all of these counters with our guests, let's turn now to a quick snippet from the conversation between Nikhil Kamath and Anthropic CEO Dario Amodei, where they dive into some of the most important ideas shaping the rapidly evolving world of artificial intelligence. Let's listen in, only on NDTV Profit.
What did you do before founding Anthropic?
Yeah, so I was actually originally a biologist. I did my undergrad in physics, my PhD in biophysics, and I wanted to understand biological systems so that I could cure disease. The thing I noticed about studying biology was its incredible complexity. That for example, if you look at the protein mass spec work that I did, right, trying to find protein biomarkers, it's just really incredible how much complexity there is, right? You have a given protein, it's like the RNA gets spliced in a whole bunch of different ways depending on where it is in the cell. Then it gets post-translationally modified, phosphorylated, complexed with a whole bunch of other proteins. And I was starting to despair that it was too complicated for humans to understand. And then as I was doing this work on biology, I noticed a lot of the early work around AlexNet, which is one of the first neural nets, almost 15 years ago now. And I said, wow, AI is actually starting to work. It has some things in common with how the human brain works, but has the potential to be larger and scale better and learn tasks like biology. Maybe this is ultimately going to be the solution to solving our problems of biology. So I went to work with Andrew Ng at Baidu. Then I was at Google for a year. Then I joined OpenAI a few months after it started, and was basically led all of research there for several years. But then eventually, myself and a few other of the employees just kind of had our own vision for how we wanted to make AI and what we wanted the company to stand for, and so we went off and founded Anthropic.
How was it? Was it like a fork in how OpenAI was thinking into what Anthropic eventually did?
Yeah, I would say, my conviction and the conviction of my co-founders when we founded Anthropic were two of them. And I think one, we were starting to convince OpenAI of. The other, I didn't feel that we were convincing of. So the first was the conviction in the scaling laws and the idea that, if you scale up models, you give them more data, more compute. Again, there are a few modifications like RL, but not really very much. It's pretty close to pure scaling. You find that, when you do that, you find, incredible increases in performance. And, I was finding that in 2019 with GPT-2, when we just first saw the first glimmers of the scaling laws. And of course, there were a lot of folks, inside and outside, who didn't believe it at all. And we really made the case to leadership, this is important, this is going to be a big deal. And I think they were kind of starting to believe us and ultimately went in that direction. And there was a second, conviction I had, which is, look, if these models are going to be kind of general cognitive agents, like general cognitive tools that match the capability of like the human brain, we better get this right. The economic implications are going to be enormous. The geopolitical implications are going to be enormous. The safety implications are going to be enormous. It's going to transform how the world works. And so we need to do it in the right way. And I think despite a lot of, kind of verbiage about doing it in the right way, I was, for a variety of reasons, just not convinced that at the institution that I was at, that there was a real and serious conviction to do it in the right way. And so my view is always don't argue with someone else's vision. Don't try to get someone to do things the way you want to. If you have a strong vision and you share that vision with a few other people, you should just go off and do your own thing, and then you're responsible for your own mistakes. You don't have to answer for anyone else's. And maybe your vision works out, maybe it doesn't, but at least it's yours.
Didn't OpenAI believe in scaling laws, because they went down the same path themselves too, right?
Well, we succeeded.
Can you explain what scaling laws are in very simple terms?
It's like if you want a chemical reaction to produce oxygen or start a fire or something like that, you need different ingredients. And if you don't have enough of one ingredient, the reaction stops. But if you put ingredients together in proportion, you get your explosion or your fire or whatever. And for AI, those ingredients are data, compute, the size of the AI model. And so the scaling laws just tell you that, like, if you put in the ingredients to the chemical reaction, the ingredients of data and model size, that what you get out is intelligence. Intelligence is the product of the chemical reaction.
All right, the genesis of Anthropic, the founder, of course, in conversation with one of the premier podcasters out there, but you'll be able to catch that entire conversation today on NDTV Profit at 8 p.m. So watch out for that, and we'll keep giving you snippets through the day. I thought that conversation was quite interesting.
There was Alex Net also. Have you gone into AI also, Alex?
No, that happened 15 years back, and I was just about starting my career in journalism at that time. I promise you, it had nothing to do with me. All right, but let's get on board. We've got Lancelot Dicuna, the CIO of Value X Wealth Connect, and we've got Kunal Shah, senior technical derivative analyst at Mirae Asset, Sher Khan, joining in. Kunal, I want to come to you first on the charts, because quite a bit of pressure on the IT pack as a whole. That's really weighing on the benchmark as we stand right now. So specifically on that, and what is the index view at this point?
Good afternoon, Alex. Good afternoon to everyone. I think overall for the index, what we are seeing that on the higher end, on the technical charts, the weekly 20 moving average, where it is placed at 25,750, 800 zone. So now that's a big hurdle for the markets. We have tested that a couple of times and we are not able to surpass that. On the lower hand, 200 weekly moving average for the Nifty, which is placed at 25,250. That is the immediate support. So we are stuck in this broader range for the markets, 250 to 800, and we are consolidating in this range. The bias remains sideways to negative for the markets till the time we don't surpass that hurdle on the upside on the technical front. So clear cut from the high levels, there is selling pressure visible. Yes, today is the monthly expiry, and that's why you are seeing more of the volatility. But also India VIX, if you look at that, that has spiked up in the last 4 to 5 trading sessions. We have been closing positive for the India VIX as well. 14.5 is where we are trading. And if we surpass the mark of 16, probably we'll see new highs in India VIX as well. So one thing is for sure, that volatility is likely to be there in the start of the March series at least. And we will see this volatility on both the sides. The bias remains sideways to negative. 25,250 is what I will be watching out for. If that is broken on the downside, then expect further downside towards that swing low what we had made of the 24,571 on the downside. That would be tested as well. So these are important levels which one should watch out for. But overall, the approach remains sell on rise for Nifty. Now for the Bank Nifty, we have been consolidating at the high levels. We have missed the all-time high just by a few points. But again, Bank Nifty continues to remain in a consolidation phase. 20 DMA, that is at 60,400, 500, and that has been the support zone for the Bank Nifty. We have been reversing from those levels. Once that is taken out on the downside, then probably the correction in the Bank Nifty will start. So Bank Nifty remains sideways for me at the current levels, no trade. If you are holding long, 60,500 should be a stop loss on the downside. If that is breached, then exit your longs in Bank Nifty.
So sell on rise is the strategy for the benchmark. That's the key takeaway from me. For me, rather. Let's talk about IDFC First Bank, because that was a big headline yesterday. The kind of losses on account of that fraud that a lot of people focused on. But take a look at the chart as things stand right now. Hiral pointed this out to you a short while back. That entire amount seemingly has been recovered. And Haryana Chief Minister Nayab Singh Saini has said that that amount, including the funds of some Haryana government departments and boards and corporations, has been deposited back into the accounts. Listen into what he had to say.
कल का जो प्रकरण में शामिल हमारे कुछ हरियाणा सरकार के विभागों का पैसा था और बोर्ड कारपोरेशनों सहित संपूर्ण राशि मात्र 24 घंटे के अंदर हमारी सारी राशि वो वापिस हमारे खातों में जमा हो गई है, जो वो राशि गई है। माननीय अध्यक्ष जी, लगभग बैंक द्वारा 556 करोड़ रुपए जमा कराए गए थे, जिसमें लगभग 22 करोड़ रुपए ब्याज का भी हमने लिया। जो ब्याज था वो भी वापिस आ गया, उसको भी हमने जमा, ये हो गया है।
Right, that's the view coming in. But remember, overall, if you look at the both of these stocks, you could just point them out. First is your IDFC First Bank. Second is your AU Small Finance Bank. Lancelot, need your views on it. It's a developing story. There was an initial reaction coming up, but still, these counters, the fundamental story, how does that look right now for them, or would like to wait it out right now? Lancelot.
I think from the news, I'm not getting a very clear picture as to whether the money has been paid by the bank and credited into the Haryana government account, and in which case it is actually going to have to be borne by the bank as such, or is it actually recovered from the perpetrators of the fraud and has been deposited back? Because if it is recovered from the perpetrators of the fraud and put back into the Haryana government account, there's practically no impact on IDFC First Bank, and it should be positive as far as IDFC First Bank is concerned. But if it is IDFC First Bank putting that money back into the government accounts, then obviously they have to make provisions for that, because they will have to either recover that from people who created the fraud or opt for some kind of insurance which will, cover this loss. So that is very crucial to understand. From whatever discussions we've heard, at least I don't get clarity on whether it is recovered from the perpetrators or is it just deposited by the bank in the Haryana government account.
So that's with regards to where, IDFC First and AU Small Finance Bank are concerned. A quick question when it comes to the PSU banking space. If you just pull up all of the counters, the smaller ones are the ones which are seeing some good traction in trade as we speak, from a Bank of Maharashtra to a Central Bank of India, UCO, trading slightly in the positive. Quick view coming with you, Kunal, in terms of the PSU banks which are seeing some bit of momentum which has continued in today's session.
I think PSU banks have been the outperformer in the last 1.5 years. Overall, at these levels, I would recommend to book some profits at these levels, because even on the technical fronts, this has been overstretched. The indicators have gone in the overbought zone, so there might be some profit booking coming at higher levels. So now whatever rise you are getting, utilize that as an opportunity to book some profit. You will get lower levels where you can enter again. The long-term structure still remains bullish. But from a short-term perspective, there will be profit booking which will be coming in the PSU bank space.
That's the view coming in. But the metals also, they are also trying to show some kind of a strength in this market. Kunal, a quick check on the metal pack. I just like to point out, if any, like a Hindalco or some stock like that, where the medium-term setup still looks good. Your view on that?
See, I think, definitely. Metals as a pack, again, still is consolidating. If I look at the metal index, it has been hovering around that 12,000 mark. The higher end resistance for the index has been at 12,100, 150 zone, and once that is taken out, you will get the short covering move coming in for the metal index. So metals overall, the sector is still looking positive to me till the time we don't breach the low of 11,600 on the downside. Hindalco, yes, again, Hindalco looks positive from a technical chart perspective. Yesterday, we saw some selling pressure at the higher levels, but now we are consolidating. The 20 DMA on the upside, that is at 938, 939. Once that is taken out, then you will expect that short covering move to come in for Hindalco to go towards the mark of 970, 980 on the higher end.
Okay, so that's metal is a good recovery that's come in from the day's lowest levels as well in this space. But moving on, IT, we can call it the sector of the day. I mean, whatever you want to call it, with the pressure that is building up, no recovery, no respite, 5% downtick in terms of the index alone in today's session. Brokerages are turning cautious. FIs are not really wanting to look at the sector. And that's the story that Jasmeet is decoding for us. Jasmeet, good afternoon. What are brokerages making out of it? A complete cautious view?
Well, right, yes, thank you for that. If you look at the overall IT pack, as rightly said, it is the sector of the day, or the sector of the so far year, you can say, given the fluctuation in the overall IT sector and the fall we have seen in the month of February. Yesterday we did have Jeffrey's note, which did a downgrade on overall IT pack, and today we have CLS note. Now what the CLSA says on the IT is, they say the overall EPS growth turnaround will be the only way to change the current position of the stock and not the commentary. But the commentary wise, they do see a positive commentary on the management, and they feel 2027 will be a base year for them to grow, and they'll see an up move going ahead. Well, they also make a note that the stock prices could still see a downtick of 5 to 10% from the current levels as well. And today, most of the IT stocks are down 5%. If you look at the other key aspects in the pecking order, they prefer Tech Mahindra and Coforge. If you look at Tech Mahindra infos in terms of large cap fund, in terms of the mid cap, they prefer Persistent and Coforge going ahead. While they have also downgraded most of the funds, but they have still maintained their holdings. So suppose like Persistent, we have maintained outperform high conviction, and they've reduced the target price. Now, if you look at HCL Tech, for them also they've reduced the target price at 1500 versus 1600 earlier. While HCL Tech was a company which saw strong upbeat in Q3, and it saw re-rating in the Q3 result as well, given the strong up moves. But post the overall AI fear, the stock is seeing constantly de-rating of the stock. While I also have the next broker, that HSBC on Indian IT, what they demonstrate is they expect a 14 to 16% downtick in terms of the overall top line in terms of deflation risk, which comes from IT. Earlier they were expecting a 10 to 12% risk, but after the overall AI and Anthropic plugins, they expect a higher downtick in terms of deflation revenue. Well, they also make a note that for the companies that are proactive and working on the AI space, this deflation can be set off, and they might see a mid-single-digit growth going ahead. While they also make a note that Indian IT company valuations are not cheap in terms of absolute terms, but relatively IT companies have been running at a higher valuation at 20 to 25. So that makes it cheaper at the current rates. While I also have Citi on it, well, Citi gives a broader perspective on the overall AI space. They speak about balance of payment and overall India as an economy. They say that the current RBI indicates a double-digit growth in the overall IT space going ahead. While they also make a note that the analysis shows if there is no growth, then that can impact the BOP payment going ahead. While lastly, they make a note that if FY27 is a year where IT companies don't grow, and if there is a degrowth, then it can wipe out the entire balance of payment. That's roughly $20 billion at this point in time.
Important. Jasmeet, thanks so much for getting us those details. You said it. It's been the worst performing sector of the year, clearly. 21% downside at this point for the year to date, and just 2026, right? So it's down about 5%. If we can pull up 2026, there you go, 20.8% this year. Quite a bit of that pressure has come through in the month of February itself. And so the question to you, Lancelot, is at what point do you say that this is overdone? Because the mood seemingly is to sell first and to contemplate later whether or not the impact is as bad as it is seeming at this moment.
I think, Alex, if you've heard, there have been commentary from various people from the industry side. We've heard the TCS, Infosys, management also explain how they are likely to use AI in their offerings to their customers, and what can be the impact and how they're changing their business models, etc. And on the other side, we've seen some demonstrations of the technologies as well as its potential usages, which can actually disrupt the entire, it's expected to disrupt the entire working of several businesses, including and IT being major offering of those services. They could be impacted immediately. But I think what the markets or what investors will need to see maybe in the next quarter or the next 2 quarters is how their strategies are holding up as far as their current business model is going, and how quickly they are adapting towards the new unfolding business environment. So if that happens, then, and they are changing rapidly towards a new environment, then it would make sense to look at saying that, okay, we can do some bottom stock picking at that stage and then invest. But in reality is, you have half information and you're supposed to take a decision. So maybe one has to look at situations across the past history when disruptions came in, how much did it get impacted, and then take a call that, okay, maybe you can't pick the bottom, but maybe you can start to buy at least in small quantities on the way down and maybe increase your holdings at some point in time. Because over the long term, I think the IT companies will be able to not only weather the storm, but will also be able to modernize or change their businesses in order to benefit from this new technology that has come out.
Right, so that's the view coming in from Lancelot on the IT space. A long-term basis, if the change is there and the IT companies adhere to these changes, then there is an alpha to be made. Thanks a lot, Lancelot, for that. But keeping our discussion on the IT space, foreign investors are also sharply reducing exposure to the Indian IT with the holdings at a 4-year low. That's nearly 11,000 crore rupees pulled out in the first half of February alone itself. Jasmeet is here again. Jasmeet, what are the key details from the FIs? They're selling more now?
Well, the overall FII overhang has been on IT over last 1 year. 2025 was the largest year which saw largest outflow of FII from the IT sector as a pack compared to last 5 years. But if you look at this year, the overall FI selling in this year has increased, while total FI holding in IT sector is at a 4-year low at this point in time. Further, total FI holding has dropped to 4.49 lakh. That's roughly 16% down from the January data. And if you look at the overall 1-year data, it's down about 38%. So we see a massive selling coming in terms of the IT holding given by FIIs. While if you look at the overall FIIs, they have sold nearly 12,800 crore so far in FY26. That's in last 45-46 days. They have sold almost 12,800 crore. And in terms of the first 15 days of February, after the Anthropic launched its AI plugin, they have sold nearly 11,000 odd crore. So the massive selling coming is on the back of that AI fear, where initially the thoughts were the AI will help IT companies. Now the thoughts are AI will replace IT companies. Well, after that thought, the selling has increased. Now in terms of the scale of increase, how much it has increased, last 4 out of 5 years I've seen negative FII investments in IT. While if you look at the overall calendar in FY25, that marked the highest at 74,000 crore of outflows from IT or FIIs. But further, to just give a comparison to the users, in 2023 entire year, the overall IT selling was at 7,000 crore. And just in 15 days of February, the IT selling is at 11,000 crore. So that's the major impact that we're seeing on the back of IT. Well, here we also have category-wise over the years how the transaction has been. In 2021, we did see a small sell-off. 2022 saw a sell-off on the back of that overall COVID. 2023 was a recovery year. 2024 did see some part of coming inflows from the FIIs. But again, 2025 was the largest year in last 5 years, saw the major fall, followed by February of 2026 until Feb 15th. While if you look at the overall IT as a pack and how it has performed in last 15 days of February, we have seen that Nifty IT is down 15% in first 15 days of February on the back of the FII selling. And what stocks impacted the most is Infosys. Infosys is down about almost 22% so far in February on the back of the similar FII selling. If you look at what is driving this sell-off, firstly is the overall AI fear, which we have seen on the back of that Anthropic and AI replacing the IT firms. Secondly is the slow growth and no growth phenomena, where from past few quarters we did see no growth in IT, and we saw a very slow growth in the previous quarter. Though Q3 was upbeat, but still the growth remains slower in mid-single to low single digit. In terms of the other aspect, there's global uncertainties also fueling in the overall IT sell-off. Lastly, we have also given the brokerage's view of what they think in a line of, according to them, what they feel about IT. We have Jeffrey's view. They see the overall pain is not over yet and they have to remain selective in terms of the stocks when it comes to the IT pack, while they also lowered their EPS estimates of 1 to 4% and they have cut target price for all the companies in their radar by almost 33%. While we also have JP Morgan, where they see the AI fear is driving the overall sharp sell-off, while we have Nomura, which is being constructive. They see the overall sell-off is too much at this point in time, with basically front-loading. But lastly, we also have a couple of notes that came today morning, which point out that overall CLS's note, we said overall EPS growth turnaround may change the narrative for the company, not the commentary just. So they want to see the action. Lastly, HSBC expect a 14 to 60% deflation in terms of top line of the IT going ahead.
Okay, thank you, Jasmeet, for that. And stay with us. This is very interesting with what brokerages are making out of it. In fact, let's also hear in what Vishal Sikka had to actually say in terms of the disruption that AI is causing, whether it's going to be positive, negative, are there going to be job losses, and what's that upskilling that is required. And this comes in at a time when your sector has been ruling under pressure. Let's listen in.
The transition from one category of jobs to another category of jobs happens all the time. One thing declines, the other thing rises. And we by and large managed to make that transition quite successfully, partly because we have a bunch of time to do that, to retrain people, to reorganize the workforces, to reorganize the business models and all that. I think the change here is that this is all happening much faster, which means that we need to be much more agile and bold about embracing this. I used to talk about this, 10 years ago, 11 years ago. If you read my shareholder letters and my speeches from that time, they were all about it. And it is here now. And it is happening at a breakneck speed, because these big model companies have money to make. They are in pretty deep holes with large amounts of funding raised. So they are not taking any prisoners. So the long answer, that's a long way to answer your question, which is that, yes, we have faced transitions like this before. Yes, it is happening much faster than before, so the windows are smaller. That means we need to act faster. We need to be bolder, but it can be done because we know that new categories of applications are in front of us, which can deliver tremendous value. So how fast can we abandon the parts of the business that are sinking, and how fast can we jump our workforce onto the new things that are growing is going to define the winners versus the losers.
All right, so that's going to determine the winners and losers. The thing is, in the interim, who picks up the pieces? Let's hope it's not the individual investor. So bear in mind that you need to adjust your strategy accordingly. We have to slip into a break. We'll be back on the other side to talk about the key trading strategies and the start of the new series. What do you need to bear in mind? Stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets
Welcome back to India Market Close on NDTV Profit. Now, the Tata Sons board meeting is ongoing right now, I would say right now, and reports are suggesting that the board may take up the matter of the extension of Chairman Chandrasekharan's third term. Whether anything's come out of it, how much time we have to wait, all of these updates, Nisha Podar gets for us from location right now. Nisha, you've been there since almost, 9:30 in the morning. You've been catching glimpses of a lot of board members who are coming in, going out. What's the latest update that you have?
The action has been quite palpable when we talk about the entrance of the Bombay House headquarters of Tata Sons, and there has been a lot of activity with board members going in. And this morning I also had the chance of greeting N. Chandrasekharan when he was walking into his office at 9:15 a.m. getting ready for a very crucial day of board meeting today. So that board meeting, as per we hear at the current moment, is not yet over. We're just waiting for the board members to come out of this very entrance of Bombay House, and we are really camping here to really see what the outcome is. Of course, reports have suggested, and there have been many speculations, that Tata Sons could be taking up the matter of extension of N. Chandrasekharan for the next term, the third term of his chairmanship at Tata Sons, which starts from 2027. And now that his term is ending in less than 1 year, from February onwards, Tata Sons is in its rights as per rules to really take up that matter, especially with Tata Trusts, which, remember, is the 66% majority controller of Tata Sons, which has approved by way of a resolution last year that N. Chandrasekharan should be continued and given another term of extension. So we are just awaiting the outcome of this Tata Sons board meet, which is going on. But the action has been quite hectic at the entrance of Bombay House today, with N. Chandra going in. We also met Noel Tata as well as Neville Tata getting in. And also remember, there were some important updates to be made on to Tata Sons board by some of the key businesses that are underway. So especially the AI Trust under Tata Consultancy Services. K. Krithivasan was seen entering. Even Semiconductor Tata Electronics was to give an update. So we're just awaiting the outcome of this Tata Sons board meeting.
Nisha, thanks so much for getting us that update. And of course, once things are done, I'm sure that you're going to catch the who's who there and get us the latest update. But let's go across to Amrish Baliga, who's an independent market analyst, joining us on this leg of India Market Close. Amrish, your opinion on the risk. First of all, thanks so much for taking the time. But there is a buzz, and there are a few reports that are circulating, that N. Chandra is fighting for his place at the helm of Tata Sons. So what is the risk, if at all, if this does not come to pass in terms of a reappointment for N. Chandra?
Well, first of all, I think, there's not too much of an indication of any change. And I would assume that he would continue. And he would possibly continue till the age of closer to 70, as against the regular retirement age of 65. But in case that does not happen, I think we could see some sort of a knee-jerk reaction as far as the Tata Group company shares are concerned. Because, like I said, generally investors prefer continuity of the leader. So if that doesn't happen, yes, I think there will be some reaction.
Got it. Okay. All right, on that note, it is time to do our rapid fire round. And Kunal, this one's for you. I'm going to run through the list of stocks and encourage you to give us a quick view in rapid fire on what the view is, right? Eternal is the first stock on the list, and it's taking a bit of a battering in trade today. In fact, it's down about 10% over the last 5 sessions or so. Most of that damage today. What would you do?
I think definitely the view remains negative. Eternal has been facing strong rejections around the mark of 300, and that has been the hurdle for the stock. Expect further downward momentum into the stock. The immediate swing low support is at 250. Once that is broken on the downside, the stock can extend towards 240, 235 on the downside.
Got it. Shriram Pistons is the next stock, and we're seeing a trading volume jump. It's trading at 3 times the 20-day average. It's up as much as 18% in 30 days. Is it time now to take some money off the table, or do you ride that high?
I think definitely we'll ride the high. I think a good breakout is what we've seen in the stock, and potential of the upside towards the mark of 3300, 3350 is what I'm looking in the short term.
Okay, car trade tech. Quite a considerable amount of pressure seen in the stock over the recent past, down 10% right now. In fact, would you take money off the table? Would you sell?
See, I think overall the structure is weak, but not at the current levels. I will sell because even on the larger term time frame, the indicators have gone in the oversold zone. So there will be a technical bounce. Utilize that bounce to exit.
Ixigo. The trading volume is 3 times the 20-day average. The stock is down considerably, down as much as 8% in trade today. What do you do?
I think again the structure is weak, can come towards 150 to 153 on the downside. So still some downside left. Any intraday bounce again should be utilized as an exit opportunity.
Okay. Moving on from the list, we have fine organics as well. Strong trading volume. Stock is up 25% in the last 30 trading days. How are you looking at it?
I think definitely a resistance of 4680 has been taken out decisively with volume, so that's positive. The stock can extend this rally towards the mark of 5,000, 5,100 in the very short term.
Okay. Wari Energies, what's your view? Because they're signing an agreement with ZFI to expand their 2.5 gigawatt electrolyzer project, and they've bagged a separate 500 megawatt solar module order as well. The stock up 3.5%.
So I think there was a gap area around 2800, 2900 zone. We have filled that gap area and bounced back. So the short-term view remains positive, can extend this rally towards 3200.
Morpin Labs, 825 crore order. The stock was up 14-15% yesterday. Gains have got extended today as well. What are charts indicating?
I think still further a little bit of upside left towards the gap area of 51 on the upside. So this can extend the rally towards those levels, but probably that would be a good time to book profits.
And what about a Hyundai Motors? Stock advanced 21% in the past 52 weeks. So it's almost at a 1-year high. Today, the stock has been trading under pressure with 5.5%. Should someone book profits?
I think the spike what we had seen 2 days before, we have seen a complete reversal of that. So again, the view remains negative for the stock. Bounces to be utilized as an exit. A break below 2120 will see further selling pressure towards 2000 on the down.
Okay, so that's with regards to where the overall, view coming in terms of the rapid fire. Amrish, let me come to you with regards to IT as a sector. I mean, We've been talking about the kind of disruption AI has been causing. People are still finding the valuation steep when it comes to IT. You have your FIIs who've been on a selling spree in terms of IT. How are you looking at this space right now? Are you saying that structurally you're not seeing a major downtake? From a longer term perspective, probably these levels could be good ones to start nibbling in, or are you saying this is going to be a complete avoid for you?
No, I mean, right now what you see on the street is fear, because AI surely is a threat for IT companies and will clearly disrupt the way they've been working till now. But the way I see it is there's an opportunity to cherry pick. I mean, especially those companies which would be able to ride out of this disruption. Because the way I see it is in the longer run, IT companies would have to reinvent themselves, become more leaner with productivity multiplying. And as far as employees are concerned, clearly, I think they need to reskill themselves to remain relevant. And I mean, we have seen such disruptions in the past. I mean, every time, although we say it's different, but finally it works out as the same. I mean, we have seen Y2K, we have seen cloud, we have seen SaaS, software as a service. But every time we have seen a disruption, but then number of companies have used that as an opportunity. So at the same time, I think people are very bothered about the IT companies, but I also see that companies in manufacturing, services, retail I think all of them are going to get affected by AI unless they are able to utilize it to their advantage. So it'll be quite interesting to see as to how it pans out. In fact, I normally talk about the 90s. I mean, computerization itself was a threat. But then just see the amount of employment this industry has created over the last 3 decades. So finally, I think over the next few years, we may see a leaner and more effective IT firms. Productivity will improve substantially. So those who see it as an opportunity will surely do better going ahead. So I think from an investor's perspective, I think we need to identify the IT companies which are more fleet-footed. And I believe that more of these companies would be in the mid-sized space. I mean, where they are not too large, not too small, and still have a decent amount of cash in hand to shift to AI. Because the larger ones will find it quite difficult. The smaller ones may not really have that cash in hand to spend on AI. And in fact, like what I was saying earlier, that it's going to affect the other sectors. I mean, if you have seen the recent Bajaj Finance Management call, I mean, maybe they deployed AI to analyze about 20 million calls and generated about 1 lakh new offers.
Right, Ambrish. That's the important view coming in. The way AI has spooked the IT stocks, even the FPIs have spooked the Indian markets, and they have been scaring Indian markets for the last 8 to 10 months. But let's just see the data. What does it suggest? Now, the NSE listed firms, FPI ownership, that has fallen to 16.7% in the December quarter. This ownership is at the lowest level since 2010. That's an important data to look at. Other important thing I saw in my analysis of this report is that the ownership value, however, has risen by almost $18.9 billion in 2025 despite the shrinking share. That means, of course, the markets have also gone up. That's why you are seeing a higher market cap coming in. The important portion of this report is that this has reflected a continuous reduction in the foreign participation, and that is where the retail or the domestic investors, that's where they come in. Also, let's look at the Nifty 50 index, how things have moved around. FPI share in the Nifty 50 index has slipped by 25 basis points to 23.8%, and remember, that's a 13-year low. The share in the Nifty 500, however, is still stable. That means the FIs are not actually giving a big sell-off in the small cap and the mid cap space. That'll be a very interesting trend to track. Apart from this, the FPI holdings in the Nifty index, this has risen by almost 5.5%. In terms of market value, it's around 50,000 lakh crore. I mean to say 50 lakh crore, and that's where even if the ownership has declined, their value has gone up, and now 4.6 percentage points below the pre-pandemic peak level. That's where the FI holding was. Now let's compare that with the retail and the FPI ownership. Individuals are now holding 18.6% of India's listed markets. That's the NSE universe I'm talking about. And the retail ownership is higher versus FPIs for the 5th straight quarter. That is where the bullishness keeps coming in. Also, what does this indicate the sector-wise? We spoke about financials remaining the top sector. Communication services, that's where the allocation is rising. That's one part of it, which is not technically IT, but cautious view is still coming on the consumption and the commodity space. During this, of course, this FPI report I checked. Ambrish, I want to get you on this. The FPI sell-off, which is there, of course, IT, we had a detailed discussion. In the banking, private banking space, also some kind of sell-off is there. Just want to get your view, Ambrish, on this, especially on this private banking space. Is there a flight to safety? Generally, FIs move their money from IT to these banks, and if yes, anything good which is looking, especially in the PSU or the private bank, which you think comfort is there now?
No, I think there's a decent amount of comfort in the PSU banking space. I mean, if you look at the sort of earnings which I've seen from most of them in the last 6 to 8 quarters, I mean, continuously we have been seeing improvement. I mean, as compared to the private sector banks. And clearly, going ahead, I expect another set of consolidation happening in the PSU space. Clearly, from the 12, 13 banks which we have, I think it will come down to about 4 or 5 banks. And you'll only have those top 4 or 5 names standing out. So from that point of view, I think one should still possibly hold on to stocks like SBI, Canara Bank, Bank of Baroda, and PNB.
Important clarification coming through from IDFC First Bank. Those are the flashes at the bottom of the screen. And this is exactly what the question was that Lancelot was asking earlier, when that initial message came through from the Chief Minister of Haryana that the money was paid back. This is money that has been paid by IDFC First, that has been moved in all probability from provisions into the accounts that were targeted by this scam that has taken place. They've said they've paid 100% of the principal and interest to the Haryana government, and so therefore they would have to work with the Haryana government in order to recover this 583 crore rupees. In all probability, there is going to be a balance sheet impact that will take place at least in this quarter, and beyond that, once there is recovery, then maybe there will be something to talk about. But Amrish, just to comment on this, the stock is up, of course. Maybe to a certain extent, the worst is being factored in. Maybe it's in the price, because they've essentially accounted for it completely at this point. So anything that they get from now is going to be positive.
No, because see, I mean, you can't afford a bank to default. So they had to pay off, and surely they would have provided for the full amount. Now the question is as to how they go about the recovery, and that's going to be a very slow process. So the way I see it is, I think the financial impact really is secondary. I think the bigger question is on the reputation, because this is the first major issue which you've seen after takeover by Mr. Vaidyanathan about 8 years back. And always there would be a fear of what next. Because if you remember, IndusInd in the last 2-3 years, I mean, every time there was an issue, the management came and clarified, and then again, a new issue came up. So that sort of a fear will always remain. With the IDFC First, at least for some time. And you'll also have the regulatory scrutiny going on, which again will slow down its growth. So, I don't see the stock falling much more from here. I think we've already seen that huge fall yesterday. Possibly it'll just consolidate in a band. But going back to those levels which we have seen recently, 85, trying to cross those 90 levels, I think that's going to take at least some time. I'll not be surprised if it takes at least the next 9 to 12 months for the stock to move to those levels.
Volatility will definitely be there for IDFC First Bank. But Kunal, just want to get your views also on the BTST trades, if is there any, or if any STBT trade is there today.
I think on the BTST trade, I would like to go for GMI Airport. Already the stock has been forming a high top, high bottom. We had 5 to 6 days of consolidation into the stock in a weaker market, and now we are looking at buying momentum from the lower levels. So this is a buy for me here as a BTST trade. 101 is where it is currently trading. One can keep a stop loss of 19.9 on the downside and look for targets of 103 to 105 on the upside.
Okay, in fact, GMR Airport's interesting spike that's coming in on this counter as we speak. But apart from this, textile as a sector is also very interesting that one should be watching out for in today's day of trade. If you can just pull up all the textile companies, there is pressure that has built up on these counters. From a Trident to a Keytex, Welspun, Gokaldas Exports, all of them have been trading under pressure. And this is again in terms of the export incentives that have been halved, and that's what will put pressure when it comes to their EBITDA and their profitability margins. In fact, we did have a conversation with the management of Trident. Let's quickly listen then to what he had to say.
Impact will be there on the EBIT up to 2 to 3% easily on that part. Well, it all depends on what product you produce and what kind of supply chain you have, and obviously it's going to have an impact on the EBIT, but in certain areas it could be double digit. We have not lost any top line because of this earlier tariff. Yes, it has hurted the bottom line, of course, but now the renegotiation has been started. So whatever the saving on the duty from 50% to 15% plus what the all, I think they're willing to revisit their own prices or their own POs at this moment.
Okay. All right. So just a quick view, Amrish, on the latest update, if you've read it, with regard to this RODTEP announcement and the rolling back of certain advantages that were given to these textile companies. Some have suggested it might just be too early to pull these things back. The swirling uncertainty hasn't really gone away. So it's a negative in your opinion, or do you wait it out and do you parse the data as it comes through?
This is surely negative in my opinion, because even if you're talking tariffs, At 18% tariffs was clearly better for the textile sector than the latest 10 or 15. I still don't know whether it's going to be 10% or 15%, because at 18%, there was a competitive advantage against other countries who had higher tariffs. Now at 10 or 15%, it's an even playing field for everyone. So that's a negative for the Indian textile companies. And along with this, if you have the export incentives going off, that's a double negative. So for the time being, I think there would be pressure.
Textile companies, we have a couple of lines that are coming in from the cabinet where they have put out a decision to change in terms of name for Kerala to Keralam, so no major impact there. But one which I'm picking up right now is a new integrated airport terminal at Srinagar, and I think that was the reason why we saw that spike coming in terms of GMR airports as well. Let's just pull up that one on the screens and we'll see the kind of spike that stock is at the day's highest levels, 1.5% up move coming in there. Apart from that, they've said they are going to look at doubling of Gondia-Jabalpur rail line, and the amount is close to around 5,200 odd crores. Punarak, Kiul, third and fourth line is around 2,700 odd crores, and the Gamharia, Chandil, third and fourth line is around 1,100 odd crores. The Ahmedabad metro extension of phase 2B, we're talking about little over 1,000 odd crores is what you should be watching out for. And there is MSP for raw jute. So Ludlow and Gloucester, two stocks that come to my mind when it comes to jute. 430 odd crores is what you're looking at there. And power sector reforms, Sharad, is what you're looking at, a policy decision. No major announcements yet there.
But the BSE power index just to show that it's at the day's high level also. And we see largely the regulated businesses, NTPC, Power Grid, kindly show them, because its expectation was there from these reforms that largely the regulated entities, they might get the benefit out of it. But of course, the large top, now look at that, NTPC is also at day's high level as well. If you could just show the BSE power index as well, and then we can understand the constituents of it. And Ambrish, I want to get you on this. The India's power story is of course a structural change. We know about the power and power ancillary stocks also doing well, but now these reforms are coming in. Your views on India's power sector?
Our power sector is clearly going to boom going ahead with the sort of a capacity addition which we're talking of, at least over the next 5 to 8 years, and especially on the green energy, renewable energy. So any of the companies which are linked to the power sector, and especially the power ancillaries, I think they should do extremely well.
What about the charts? Kunal, any view on the sector as a whole? And why don't I throw as an extension some of these ancillary plays and equipment manufacturers in the power space, right? Because you saw a few of them have a bit of a pop earlier, a couple of sessions back, maybe last week. What would you say about some of these names?
I think, definitely. Firstly, if I talk about the Nifty CPSE index, which is the power index, I think that is what we have recommended to our clients also to add into our portfolio on an ETF perspective. Our long-term view on the Nifty CPSE index is bullish, and we expect a good robust momentum for the next 1.5 years. So I think here the view continues to remain on the positive side. Currently, it is trading somewhere around 7,085, the Nifty CPSE index. Our positional targets over here, the all-time high has been 7,661. We expect this to go towards at least the mark of 8,300, 8,500 in the near term. So that is where our view have been on the positive side. From the equipment perspective over here, I think LG equipment still looks positive to me, a good recovery, what we have seen in the stock. On the weekly chart also, we have seen a double bottom formation happening from the lower levels, and now we have seen buying momentum resuming into the stock. The hurdle over here was 515, which has been taken out, which is acting as a support, and you can expect this momentum to continue towards 600 levels in the very short term.
All right, these are the important stocks. If Adani Power also gaining in trade, there's a sharp up move coming in, and looking at the most of the power related stocks, Tata Power also the day's high level, so you can expect something positive coming from these counters as well. I just like to point out Reliance as well, Reliance Industries, if you could show, that's where also a good recovery has happened. It's at the day's high level. I just want to see the, you could say the Nifty index also, whether that recovery has also happened or not.
Just a tad bit. I think it's still trading with cuts of over 0.1%, but it's off the low point of the day. At least certainly you can take that.
And I think with this, we need to also just look at a quick, make a quick glance with regards to railway counters from RVNL, Titagar. I mean, not sure which ones would benefit out of this, but RealTel has seen a mild recovery from the day's lowest levels. RVNL is at the day's highest levels as we speak. Titagar, Texmaco, RealTel, a few of the other names that could be in focus, but no major moves. The kind of power that you're seeing in terms of the power-related stocks, that's not the case with the railways. So strong moves there. But one stock which is in focus is also a Northern Arc. A very interesting note, Sharad, when it comes to Northern Arc.
Exactly, and in such a market also, Northern Arc has actually maintained it. Motilal Oswal's report has come in. They have initiated a buy rating. Target price is at 360 rupees per share. Now, from the current prices, it's more than 40% of upside potential coming in. They are building scalable tech-driven credit ecosystem, balanced business model with earning stability, D2C transition, diversified fee income, which will aid the ROA, which is nothing but the return on assets. Risk management will also aid well for the company as its AUM increases. Today, also the stock is up 3%. Kunal, just wanted to get your technical view on it. Is the medium-term setup looking good?
I think there has been a hurdle for the stock somewhere around 260 that needs to be taken out decisively, 260, 262 to be precise. Overall, the momentum is on the positive side. We just need a breakout above this 262 mark. Once that is taken out, and probably you can see the rally extending towards 280 on the ups.
So that's with regards to Northern Arc. A quick view, Amrish, in terms of Northern Arc as well, because this has been a counter where fundamentally it seems very strong. Lot of bets on it, and the kind of performance uptick that it has seen in a very short time is very strong.
In fact, I've not really tracked Northern Arc very closely, so it's a bit difficult for me to really advise on that.
No views coming in terms of Northern Arc, but the rally that you're seeing in terms of power stocks, Amrish, any quick view with the surge that's already coming in? Anything that you think could be announced?
See, again, there could be some sort of SOPs being announced, just to ensure that the goal of the government as far as 2030 and 2032 is concerned is met. And like I said, it will be more of the power ancillaries which should do better. But at the same time, stocks like Tata Power would be on my buy list, Tata Power and NTPC. And among the ancillaries, I would surely look at something like a Power Mac Projects, which is one of those leading ancillaries as far as the power sector is concerned.
Thanks a lot, Ambarish and Kunal, for your time. And of course, there was a lot of volatility in the day's trade, but thanks for your technical and fundamental picks. Thank you, gentlemen. But let's go back to the closing and see how the markets are panning out. If you could just show the Nifty comfortably that 25,400 levels that has been defended. There has been a recovery coming in, though you might be seeing Nifty still down 1%, but that 200 DMA retesting on a monthly expiry day is something which will definitely give a little bit of cheer to the markets. But the declines are on the higher side, almost you could say in the ratio of 1:3. Nifty Bank, the technical setup is good, but still a 200-point downtick coming in the day's trade. Let's look at the stocks from the Nifty index to see where the action is lying. There was a mild recovery in the last 15 minutes, and that's what puts Adani group of stocks like Adani Ports and even Reliance holding up well. Most of the stocks, especially in the power sector and coal, NTPC, Coal India, all jumping up in trade as we're expecting some positive announcements from the cabinet meeting. But what's not working is, of course, going to be L&T. There is an impact of your IT services company also. TCS, Infosys, Eternal. That's where majority of the tech sell-off still continues as AI updates is spooking the entire world. Let's talk about the sectors. And of course, we have talked about IT, but the sectors which are doing well, which are showing strength, this is the PSE pack, the energy, oil, gas, and the metal. That is where the street is finding comfort. But when it comes to selling, of course, we see largely realty and the IT pack that have taken a good pasting. Little bit of index management is also something we are hearing. And today, remember, is Nifty monthly expiry day. Let's talk about the advanced decline ratio, how things have actually panned out. And largely, we see it has been, remaining. The gap has been big, but it tried to, come slower on the lower side in the last 15 minutes. And that is where we saw a little bit of action coming in the small cap space. Let's pull out the BSE 500 index to show you the stock specific move. And Natco Pharma in such a weak market is showing strength. Fine Organic, SKF, that's where the value buying is happening. Nothing much there coming on the news flow front, but definitely these stocks are doing well in trade. But what's not working, it's largely product-based company, IT company, IT company, IT, and it's entirely IT. So there is nothing to actually talk about apart from these stocks yet, but today itself is also a very important day, and we'll be getting to what to watch for tonight and for tomorrow. First thing is definitely going to be the Donald Trump. He'll be talking about the State Union as well, and that will impact the global volatility. But that's all, folks, for today. And there was a weak selling in the overall markets, especially IT dragging the entire picture. So that's all, folks, for India Market Close. Stay tuned to NDTV Profit. Up next is Market Express.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Thank you so much for tuning in to Market Express with me, Shreyanti Singh. Let's get straight into the show. This is a show that will get you a snapshot of everything that is happening right now, be it headlines, even the top buzzers of the day. First things first, let's talk about the markets. Then markets saw a sharp decline in trade today as benchmarks fell over 1%, dragged by the IT sell-off. When you're talking about Nifty, that failed to defend 24,500 on expiry day, while Sensex also declined by about 1,000 points. So that's something that you're looking at when you talk about the markets. Broader markets, however, fared better as compared to Nifty and Sensex. Volatility index spiked again today, crossing the 14 mark, surging 14% in last 5 days, and that's something that you're looking at when you talk about the indices. Now, Nifty IT index, that's also something that we should be talking about right now, because that dropped over 4% amid fears of AI disrupting business models. The sector has now slid over 20% so far in the month of Feb, erasing 7 lakh crore. In terms of market capital here, Now, IT stocks are pressured by mounting concerns over AI-driven business disruptions and the impact of persistently high US interest rates. So that's something that you're looking at even when you talk about the picture when it comes to IT. Let's also talk to you about brokerages. In fact, turning cautious on the IT sector then, because they're acknowledging that an earnings turnaround could be ahead. CLSA in fact says that the macro cycle may improve this year, but also warns that stocks could see further downside in the near term and has trimmed target prices across several majors. Now, when you talk about HSBC, they've in fact flagged the risk of pricing pressure from AI over the next few years, though it believes other revenue streams can cushion the impact. Citi, meanwhile, says that growth remains healthy for now, but the sector must avoid any year-on-year slowdown, and that's something that you're looking at in terms of the brokerage view here. Let's also talk to you about cyber security stocks that were trading under pressure globally after fresh AI disruption fears. The trigger is Anthropic's new enterprise security tool, which has raised concerns that automation could dent traditional cybersecurity revenues. Global names have been seeing sharp selling, and the weakness is spilling over to Indian stocks as well. And now, when you talk about the view coming in from analysts, they're saying that the reaction may be ahead of fundamentals, with focus now shifting to earnings guidance and even how companies integrate AI into their offerings. Let's also talk to you about Airtel, that is entering the lending space now with the launch of its NBFC arm, Airtel Money Limited. Now, the company has secured a license from the Reserve Bank and plans a phased capital infusion over the next few years. So that's something that you're looking at, 2.5% downtick coming in for that particular counter with support from its promoter group. They're going to be making this particular foray. The strategy is to leverage Airtel's large telecom customer base and also expand digital lending. Now, when you talk about the management commentary coming in here, they believe that there is significant headroom for growth in India's under-penetrated credit market despite rising competition. Let's also talk to you about some of the brokerages in terms of the verdict here when it comes to Bharti Airtel. Morgan Stanley maintains an overweight rating on this particular counter with a target of about 4,500 rupees. Now, the brokerage sees the launch of its NBFC arm as a strategic step to deepen diversification into financial services. It also highlights Airtel's already established lending platform and says a dedicated NBFC structure could unlock incremental revenue streams, although it will be more capital intensive, and that's the view coming in terms of the brokerages here. Now, the street is going to be watching out for how Airtel manages operational separation between its own lending book and also partner institutions. Let's also talk to you about the government cutting the RoDTEP rates by 50% with immediate effect, reducing export support for the textile sector. In fact, that caused quite the rout when you talk about some of these counters that are flashing on your screen. So Gokuldas Exports as well as Skytex Garment, among others, were falling in trade. This follows the FY27 budget move to lower the overall allocation towards RoDTEP. And for exporters, these incentives, in fact, put a key margin cushion. And that's something that you're looking at as a background here. Home textile companies are seen as the most exposed, followed by garment makers, while yarn and fabric threads also are going to be seeing a relatively lower impact coming in here. The focus now shifts to pricing power and cost control. Let's also talk to you about IDFC First, that is in focus. In fact, you do have Haryana's Chief Minister saying that the entire 590 crore lost in the IDFC First Bank fraud has been recovered within just 24 hours, addressing the State Assembly here. Now, he said that about 556 crore rupees was returned by the bank, along with roughly about 22 crore rupees as interest. The funds included money belonging to Haryana government departments and boards as well. The Chief Minister alleged that 4 to 5 million lower level bank employees colluded in the fraud. He's also assured strict action against anyone involved and also announced the formation of a high level committee to fix accountability and prevent such incidents in the future as well. In fact, IDFC First Bank has clarified that it has fully paid principal and interest dues to the Haryana government. Now, the bank says that it remains committed to working closely with state authorities and law enforcement to pursue those responsible for this particular fraud. IDFC First Bank, in fact, also emphasizes its focus on recovering any outstanding amounts and ensuring accountability while also maintaining strong cooperation with the government. Now, big leadership change at Suzlon Energy is something that we should be talking about right now, because you do have the company that has appointed Ajay Kapoor as its new group CEO as Suzlon pushes into its next phase of growth and diversification. Remember, the company has spent the last few years cleaning up its balance sheet and rebuilding market confidence. Now, with the renewable sector booming, the company wants to move beyond traditional wind solutions and expand into newer as well as emerging clean energy segments. Now, you do have Kapoor's appointment that signals a more aggressive expansion strategy, bringing in someone with deep experience managing large industrial businesses. The idea is to sharpen execution, widen the portfolio, and position Suzlon for the next energy landscape of the next decade itself. Let's also keep it going and get back to the word coming in from brokerages, because MOSL has initiated coverage when it comes to Northern Arc. That was one counter that was buzzing away in trade, as you can see on your screens as well. There's a buy rating that they have and a target of about 360 rupees, signaling an upside of about 46% versus the current market price. And you do also have the brokerage highlighting that the company's scalable, tech-driven credit platform and a balanced business model that supports stable earnings is something that we're looking at. Northern Arc's direct-to-consumer lending now forms more than half of its portfolio, while disciplined risk management continues to deliver resilient asset quality as well. In fact, MOSL expects strong growth in both AUM and profits over the next few years, with valuations remaining attractive at under 1 times price to book. Let's also talk to you about MobiKwik's subsidiary that has received approval from the Bombay Stock Exchange to begin its stock broking operations starting February 24th. Now, this follows the company's SEBI registration granted in July 2025. With this final clearance, you do have this particular subsidiary now authorized to execute equity trades, including buying, selling, dealing, clearing, and settlement, marking the completion of all major regulatory steps needed to operationalize its broking business. And that's the latest update that you have coming in as of today when it comes to this particular counter. Let's also talk to you about Vari's subsidiary that has taken a major step forward in its clean energy ambitions by expanding its 2.5 gigawatt electrolyzer project as well. Now, the company has inked a strategic MOU that includes the supply of 50 megawatts of electrolyzers, strengthening its footprint in the fast-growing green hydrogen space. Alongside this, the arm has also bagged a 500 megawatt solar module order, further boosting its integrated renewable energy pipeline. Now, together, these developments position Vari as a stronger player when it comes to both solar and even hydrogen technologies. Let's also talk to you about Patel Engineering. Through its joint venture, this company has been declared the L1 bidder for an irrigation project worth about 133 crore rupees. The company's share in the project stands at about 68 crores. The awarded work is expected to also significantly strengthen the company's order book and also reinforce its presence when it comes to the infra and irrigation segment. Now, the project is slated for completion within 48 months. So that's the timeline that you're looking at here, marking another long-term execution opportunity for the JV. Let's also talk to you about Pace Digitech that has secured a major 159 crore purchase order from Reliance Industries. Now, the contract involves supplying lithium-ion battery packs, strengthening the company's position in the energy storage and battery solution space. The order underscores Reliance's trust in Pace Digitech's manufacturing capabilities. It also marks a significant addition when you look at their order pipeline as well. Deliveries under the contract are scheduled to be completed by August 31st of this year, giving the company a robust execution timeline going forward. Let's also talk to you about some word coming in from the brokerages. Morgan Stanley has reiterated its overweight rating on Indian Oil Corporation with a target price of 219 rupees per share, expecting the stock to rise meaningfully in absolute terms. The brokerage notes that IOCL has returned to growth in both fuel market share and also capital allocation efficiency. They're also looking at strong operational performance and strategic investments that are projected to drive a sharp improvement when you talk about their profitability as well, with EBITDA estimated to nearly double by financial year 28, underscoring a bullish long-term outlook. Let's also talk to you about one other counter, Signpost India, that is one of 450 crore thereabout order, 10-year extendable order that you're looking at here. Now, exclusive outdoor advertising contract is something that they've managed to bag from the Calcutta Municipal Corporation under the Kolkata Streetscape Renaissance project. Now, the deal grants premium advertising rights across the key stretches. So that includes Park Street, that includes Kamak Street, Theatre and Park Road as well. And that's something that reports are indicating. The company projects about 450 crore in gross advertising revenue, while KMC is expected to receive somewhere close to 250 crores, supported by an annual fee of about 16 crores with 5% escalation every 3 years. Now, this long-term PPP project significantly strengthens Signpost's footprint when you talk about the high visibility urban zones, and that's the takeaway that you should be taking from this particular report. Let's also talk to you about Samvardhana Motherson International in partnership with Marelli that has inaugurated a new manufacturing facility in Gujarat. Now, the plant has been set up under a strategic joint venture and will focus exclusively on advanced exterior lighting systems for the automotive sector. Now, this is a move that you're talking about that strengthens the company's presence when you talk about the high-value automotive components and also expanding its manufacturing footprint in the country. That's also something that you should be looking at. The facility is expected to cater to both domestic and global automobile makers. Let's also talk to you about PNGS Reva Diamond Jewelry that will launch its 380 crore rupee IPO from today to February 26. The issue is entirely a fresh issue with a price band between 367 to 386 rupees per share and a lot size of 32 shares. The company operates 34 stores across Maharashtra, Gujarat and Karnataka under the brand Reva. It sells diamond and gemstone jewelry in gold and platinum. Proceeds are going to be funding 15 new stores thereabout and even marketing spends. That's something that the company is backing with the help of these proceeds. Financially, the income rose to about 259 crore rupees in financial year 25. Profits stood at 59 crore rupees, though margins have moderated over the past 2 years, so that should give you a little bit of background when it comes to this one. Let's also talk to you about Centum Electronics that has secured a large order from Hindustan Aeronautics for its radar systems. Now, the contract worth about 668 crore rupees will be executed in 2 phases. The company is expected to deliver the systems over the coming months, further boosting its order book and even their revenue visibility. Let's also shift focus onto some business news. Then the Union Cabinet has approved a series of key infrastructure and policy decisions amounting to over 12,200 crore thereabout. The measures include major railway expansions, a new integrated terminal when you talk about the Srinagar airport, and even an extension of the Ahmedabad Metro Phase 2B. The government has also approved reforms in the power sector. The cabinet has also, in fact, approved enhanced delegation when you talk about the power grid to increase the equity investment to about 7,500 crore rupees per subsidiary. Now, it's also set a new minimum support price for road route, and that's another update here. Among the policy decisions, the centre has formally approved changing the name of Kerala to Keralam. These clearances aim to boost connectivity, improve state infra, and also support agricultural producers. So that's something that you should be looking at as the takeaway here. Now, let's also talk about a futuristic breakthrough from India's aviation tech space. Chennai-based the Eplan, that's a company that you're talking about that is teaming up with NVIDIA to develop what could become the country's first electric air taxi. The goal is simple but ambitious: short hop aerial mobility inside cities. Think airport transfers, medical transport, or even quick intercity hops, that's something that you're looking at. So India is getting its first air taxi without the noise, pollution or cost of helicopters. NVIDIA is going to be providing advanced AI and simulation tools to design safer and more efficient aircraft systems. Now, E-Plane brings the engineering and aeronautics expertise. If successful, this could open up a completely new segment in urban transport, one that blends aviation and even EV innovation. It's early days, of course, but this partnership puts India firmly on the map in the global race for next-gen mobility solutions. Let's also talk to you about a major legal escalation in the US logistics space. FedEx has filed a lawsuit against the administration of US President Donald Trump seeking refunds for tariffs it says were improperly withheld. This follows a recent Supreme Court ruling that opened a pathway for companies to recover certain duties paid under previous trade actions. Now, when you talk about FedEx, they want its share of those refunds, arguing the government unfairly blocked reimbursements. The case matters for more than just FedEx, though, because it could set a precedent for how companies challenge historical tariff collections. At stake are millions of dollars and potentially broader trade policy implications. So yes, this is another chapter in the long-running battle over US tariff rules, and FedEx is now taking it head-on. Let's also talk to you about the global AI battle that is heating up. Anthropic has accused Chinese AI developer DeepSeek, Moonshoot and Minimax of stealing the capabilities of its Claude model. Anthropic claims these companies illegally replicated or reverse engineered key parts of Claude's architecture to accelerate their own AI products. The firms named in the complaint have rejected the allegations at this point in time, but the case has already triggered global attention. And you must be wondering why, right? Because this is not just a business dispute, it touches on national security, AI, ethics, intellectual property protection in one of the world's most competitive industries at this point in time. With regulators in the US already tightening AI controls, this legal fight could have wide-ranging consequences for cross-border AI development. And finally, the Hollywood takeover saga just got more dramatic here. Paramount has raised, in fact, its offer to acquire Warner Brothers, intensifying the fight for control of one of the industry's most iconic studios. This comes even as Warner is still backing its merger plan with Netflix, but Paramount's improved offer puts fresh pressure on Warner's board and shareholders to reconsider. Now, the new unspecified bid improves on the $30 a share all-cash proposal that Paramount took directly to Warner Brothers shareholders on December 8 and addresses some of the company's concerns with previous Paramount bids, according to the people who asked not to be identified because the details are not public. You do have Warner Brothers that reopened those talks with Paramount for a 7-day period ending Monday. If the Warner Brothers board deems the new Paramount offer as superior to the current agreement, Netflix will have 4 days to respond. So that's the timeline that you're looking at here. On to national news, then India is gearing up to launch its long-anticipated nationwide HPV vaccination program aimed at preventing cervical cancer among adolescent girls. Health Ministry officials have indicated that the vaccine's rollout is expected within the next few months. As part of the National Immunization Framework, the move aligns with India's broader public health goal of eliminating cervical cancer, a disease that remains one of the leading causes of cancer deaths among Indian women. With strong backing from global health bodies and domestic policy commitments, the upcoming program is set to provide free HPV vaccination for girls between the ages of 9 to 14, significantly expanding access and strengthening preventive healthcare efforts nationwide. Let's also move on and talk to you about some more news and updates. New details have emerged about the tragic air ambulance crash in the state of Jharkhand. According to reports, the aircraft crashed within 23 minutes after taking off from Ranchi after losing contact with air traffic control. Moments before impact, the pilot reportedly requested a route deviation, suggesting deteriorating weather or technical difficulty before the aircraft went off radar. Now, the air ambulance was transporting a patient and medical team when it crashed in a forested area. Search and rescue teams located the wreckage soon after, and further investigation is underway to establish the exact cause. Officials say that they're examining communication logs, weather conditions, and technical records of this particular aircraft. Families of the victims have been briefed, and a full DGCA probe is in motion right now. Now, the newly launched Namo Bharat rapid train on the Delhi-Meerut corridor recorded over 1 lakh passengers on its first full day of commercial operations. This marks the highest ever ridership on this particular route. Now, the NCRTC has said this comes a day after Prime Minister Modi inaugurated the complete 82-kilometer corridor along with the new Meerut Metro link, making the entire stretch fully operational. Now, the Namo Bharat RRTS, designed for speeds up to 180 kmph, is expected to significantly cut travel time between Delhi, Ghaziabad, Modi Nagar, and even Meerut. Let's also move on and get you some other news and updates. Supreme Court has issued notice to the center as well as the Uttar Pradesh government on a PIL seeking effective implementation of the 2024 EV charging infra guidelines. The petition says several states are not enforcing the guidelines uniformly, creating difficulties for residents in housing societies to install EV charging units. The plea seeks directions to enable group housing societies and RWAs to provide safe charging infra and allow residents to install private chargers at their own cost. Now, it also calls for strict compliance with fire and electrical safety standards, and the court, in fact, has sought responses from the governments as well. Now, US President Donald Trump's new global tariffs have come into effect at 10% lower than the 15% rate he had indicated previously. The temporarily imposed duty was imposed under Section 122 of the 1974 Trade Act, allowing tariffs for up to 150 days without congressional approval. The move follows a Supreme Court ruling that blocked several of his earlier sweeping tariffs under emergency powers. The White House has not issued any directive to raise the rate. Analysts, in fact, warn the shifting policy could raise trade tensions, with countries including the UK, EU, and India reviewing their responses. And a powerful winter storm has battered large swaths of the United States, grounding more than 11,000 flights and knocking out power to over 500,000 homes. The blizzard brought heavy snow, strong winds, and dangerous travel conditions across the central and eastern states. Airports from the Midwest to the East Coast saw widespread cancellations, leaving travelers stranded. Thousands of customers remain without electricity at this point in time as utility crews work to restore service. Authorities have warned of icy roads, reduced visibility, and continued snowfall, urging residents to stay off the roads and prepare for prolonged disruption. And a helicopter carrying 7 people has crashed into the sea near the Andaman Islands, but all aboard were successfully rescued. The aircraft went down off the coast during flight, prompting an immediate search and rescue operation involving local authorities. All 7 passengers and crew were pulled safely from the water and taken for medical checks. There are no reports of serious injuries so far. Details on the cause of the crash are still being assessed by officials. The Navy and Coast Guard were among the agencies that responded to this particular incident. Well, with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in. Stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal.
Market ends in the red with benchmarks falling over 1% lower. Nifty closes below 25,500 mark while Sensex loses over 1,100 points. Broader markets reflect the fall in the benchmark. Anthropic fear hits Indian cybersecurity stocks. Names such as Quick Heal, TAC Infosec and Tech D Cybersecurity lose between 5 to 20% after Anthropic's new enterprise security tool triggered AI-driven disruption fears. FII ownership in NSE-listed companies fall to 16.7% in December, lowest since 2010, but the ownership value rose to $18.9 billion in December, despite the shrinking share. Cabinet approves power sector reforms, gives a nod for an enhanced delegation to Power Grid to hike the equity investment of 7,500 crore rupees per subsidiary, also changes Kerala's name to Keralam. IDFC First Bank clarifies that it has paid out 100% principal and interest to Haryana government. Clarification comes the same day as Haryana Chief Minister Nayab Singh Saini claims that entire amount lost has been recovered. Trump's temporary 15% tariffs take effect from today. These replace the tariffs struck down by the US Supreme Court. Experts question the legality of these tariffs under Section 122 of the Trade Act of 1974. Prime Minister Modi will embark on a two-day state visit to Israel from tomorrow. He will hold wide-ranging talks with Israeli PM Benjamin Netanyahu and attend a series of programs scheduled later. Hello and welcome viewers, a very good evening. This is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest updates on markets, national as well as international news. We start with the markets and it's been a bruising session on Dalal Street. The Nifty has slipped below that crucial 25,450 mark on its F&O expiry day, ending near the day's lows, while the Sensex 2 closed over 1,000 points lower. Heavyweights like Infosys, L&T and Bharti Airtel dragged down the indices, with Tech Mahindra and HCL Tech leading the fall in the Nifty. In fact, both cracked down over 6% in trade today. Broader markets also mirrored the same pain. For the full market roundup though, Jasmeet joins us. Jasmeet, walk us through the session. What led to this sharp reversal and how widespread was the damage across sectors?
While Nifty ends in red to red, ends 1% down in line. While in terms of the market closes below the 25,500 mark, and Tech Mahindra and HCL Tech lead the fall in overall Nifty, both down about 6% in trade. While in terms of the broader market reflect the benchmark both in red. Nifty Midcap 150 ends 0.21% lower in trade today, and KYC Tech and LTT has become the top losers in Nifty Midcap 150, down about 6% in trade. While in terms of small cap 250, they're down about 0.5% in trade today. AFL and Zensa Tech lead the fall in Nifty Small Cap 250, both down about 5% in trade. We see that overall IT pack is creating the pressure on the broader and the benchmark markets as well, and they are all suffering in trade on the back of that extended AI losses and the AI fear that the streets saw with a major sell-off going on globally as well. Now, in terms of sectorial sectors, end on a mixed note. Nifty IT leads the fall in all the sectors and becomes the top sectorial loser. Nifty IT down about 4.5% in trade today, while Nifty IT falls for the 5th day in a row, majorly on the back of that AI disruption. While in terms of Nifty IT, it hits the lowest level since August 2003, while down about 20% in this particular month. In terms of the overall pack in the Nifty IT, we said Tech Mahindra and LTIMindtree lead the fall in Nifty IT, both down about 6%, while Nifty Metal becomes the top gaining sector, about 1% in trade today. Vedanta and NMDC gain the most in Nifty Metal, both up about 2% in trade. In terms of the overall trend, we say that Nifty Financial Services, Nifty Auto snaps the 2-day gaining streak, while Nifty Bank snaps its 2-day gaining streak. While Nifty FMC, Nifty PSU Bank gain for the 3rd consecutive day in the row today, while in terms of Nifty Pharma, Nifty Oil and Gas, they gain for 3rd day as well in row.
Right, thanks so much for that market roundup. Viewers, as thunderstorms hover over the Nifty IT index, many would wonder whether you should enter or not. Axis Mutual Fund's Ashish Gupta believes the debate around valuations in the IT space is shifting. He says near-term earnings risks are limited, but the real question now is how investors should think about long-term growth, especially with AI-driven uncertainty clouding the valuations. Gupta seems cautious, and he said that despite the recent correction, valuations still do not look attractive enough. Let's listen into that portion from the interview.
Most of the companies kind of delivered revenue growth at the upper end of their guidance. And if I look at trends such as services exports out of India, last 2 months continue to be very strong. So the question is not really in terms of near-term earnings impact, but what is the terminal value you assign to these businesses, and that's where the uncertainty is. And given the cloud on that, I think we are not in a zone where the valuations are compelling given the risk of disruption.
Moving on, the foreign portfolio investors have sharply reduced their exposure to Indian equities, with FII ownership in NSE listed companies slipping to 16.7% as of December. Now, this is the lowest level in more than a decade. The pullback reflects global risk-off sentiment and higher allocations to other emerging markets. My colleague Sharad Dubey now joins us with more on what's driving this trend.
The way AI has spooked the IT stocks, even the FPIs have spooked the Indian markets, and they have been scaring Indian markets for the last 8 to 10 months. But let's just see the data. What does it suggest? Now, the NSE listed firms, FPI ownership, that has fallen to 16.7% in the December quarter. This ownership is at the lowest level since 2010. That's an important data to look at. Other important thing I saw in my analysis of this report is that the ownership value, however, has risen by almost $18.9 billion in 2025 despite the shrinking share. That means, of course, the markets have also gone up. That's why we are seeing a higher market cap coming in. The important portion of this report is that this has reflected a continuous reduction in the foreign participation, and that is where the retail or the domestic investors, that's where they come in. Also, let's look at the Nifty 50 index, how things have moved around. FPI share in the Nifty 50 index has slipped by 25 basis points to 23.8%, and remember, that's a 13-year low. The share in the Nifty 500, however, is still stable. That means the FIs are not actually giving a big sell-off in the small cap and the mid cap space. That'll be a very interesting trend to track. Apart from this, the FPI holdings in the Nifty index, this has risen by almost 5.5%. In terms of market value, it's around 50,000 lakh crore. I mean to say 50 lakh crore, and that's where even if the ownership has declined, their value has gone up, and now 4.6 percentage points below the pre-pandemic peak level. That's where the FI holding was. Now let's compare that with the retail and the FPI ownership. Individuals are now holding 18.6% of India's listed markets. That's the NSE universe I'm talking about. And the retail ownership is higher versus FPIs for the 5th straight quarter. That is where the bullishness keeps coming in. Also, what does this indicate the sector wise? We spoke about financials remaining the top sector. Communication services, that's where the allocation is rising. That's one part of it, which is not technically IT, but cautious view is still coming on the consumption and the commodity space. During this, of course, this FPI report I checked.
And viewers, and while investors reassess equity markets, this particular sector is especially feeling the heat. Cybersecurity stocks are under pressure globally. Cybersecurity stocks are sliding worldwide after fresh AI-driven disruption fears triggered by Anthropic's new enterprise security tool. The belief is that automation could squeeze traditional security revenues, keeping investor sentiment cautious. My colleague Jasmeet joins us back again with what's spooking the markets in this space.
Every day we have the other AI news flowing in and targeting different sectors. We have wealth management last week, and this week we have the cyber security. While the cloud companies, what AI is seeing is that the overall disruption being faced in the overall cyber security space. While what we see is the overall cyber security global tech firms see a downtake on the back of this new cloud AI tool. While this AI tool can simplify the overall cyber security, and it can impact directly the traditional services firms that are giving the cyber security at large. While we also saw the global tech firms where we saw mass sell-off in those on Sunday, Monday, as well as today in trade. What we have seen that major names like CrowdStrike and Palo Alto Network slide in the trend. If you look at the overall global ETF, which handled the global security companies, even that saw a slight decline in the overall performance and which hit the low of November 2023. If you look at the Indian firms, so Indian firms that provide cybersecurity also slide in trade today. We saw Quick Heal down about 5%. The Tech D is down about 13% of similar thing. And we also have many small cap names which have been suffered on the back of the similar AI disruption news in terms of cybersecurity.
Thanks so much for that, Jasmeet, once again. And even as AI reshapes market expectations, it's also reshaping the workforce, and one industry veteran has a firm message about what needs to happen next. So at a time when AI is transforming workforces across global tech firms, Vian AI Systems founder Vishal Sikka tells NDTV Profit that the world needs to react swiftly to rapid job transitions, and the answer lies in learning AI, not fearing it. He says these transitions are faster but not unfamiliar. Let's listen in to his comments.
The transition from one category of jobs to another category of jobs happens all the time. One thing declines, the other thing rises. And we, by and large, manage to make that transition quite successfully, partly because we have a bunch of time to do that, to retrain people, to reorganize the workforces, to reorganize the business models and all that. I think the change here is that this is all happening much faster, which means that we need to be much more agile and bold about embracing this. I used to talk about this, 10 years ago, 11 years ago. If you read my shareholder letters and my speeches from that time, they were all about it. And it is here now. And it is happening at a breakneck speed, because these big model companies have money to make. They are in pretty deep holes with large amounts of funding raised. So they are not taking any prisoners. So the long answer, that's a long way to answer your question, which is that, yes, we have faced transitions like this before. Yes, it is happening much faster than before. So the windows are smaller. That means we need to act faster. We need to be bolder. But it can be done because we know that new categories of applications are in front of us, which can deliver tremendous value. So how fast can we abandon the parts of the business that are sinking, and how fast can we jump our workforce onto the new things that are growing is going to define the winners versus the losers.
Okay, so we need to adapt AI as fast as possible, and the answer lies in that strategy. But switching tracks to corporate stories, and on top of our list is Voltas. Mukundan Menon, their managing director, spoke exclusively to us on incorporating artificial intelligence in ACs. Menon explained that artificial intelligence enables a device to pivot from being just reactive to predictive, in his words. He also spoke to us on demand trends, raw material prices, capex plans, and growth strategy. Take a look at a brief portion from that conversation that took place at the launch of their 2026 summer collection.
This changes it pivots the entire air conditioner category. The device pivots from being a very reactive device to becoming a predictive and adaptive device. So it automatically senses your usage pattern, your preferences in terms of temperatures, air quantity, and so on and so forth, and it adjusts the air conditioners after a 7-day learning curve. Compared to 2024, where we had seen a tremendous growth, the 25 was a degrowth of around 20 to 25% for the industry as a whole. On that low base of 25, the industry is poised to grow by roughly 20 to 25% this summer. The predictions is that it is going to be a normal, or if at all, a little better than normal summer from a heat perspective. Yeah.
Viewers, shares of One MobiKwik rallied over 9% in trade today and ended in the positive territory as well. The upward momentum was observed on the heels of the company's foray into stockbroking operations. However, when we spoke to Upasana Taku, who is chairperson, co-founder, CFO and executive director of MobiKwik in this regard, she clarified that the broking stack will take time to come to life. Listen in to know more.
I want to clarify that we are not launching the broking operations anytime soon. We are just building the entire stack because we do want to come to the market with a differentiated offering. Like I said, most of our users are, now young Indians coming from tier 2, tier 3 markets. And our focus is to use product, tech, AI, and build a very simplistic, investment product for them.
Let's quickly look at an IPO. Gaudium IVF's IPO has been oversubscribed more than 7 times on the last day of its issue. Non-institutional investors led the IPO with 13.95 times subscription, followed by retail investors who subscribed over 7 times. The size of Gaudium IVF's IPO is 165 crore with a fresh issue of 90 crore rupees and an OFS worth 75 crore rupees. But moving on, the Union Cabinet has cleared over 12,236 crore rupee worth of key infrastructure and policy decisions, including major reforms in the power sector. The Cabinet has in fact also approved changing the name of Kerala to Keralam. The Cabinet has also approved enhanced delegation to Power Grid, raising its equity investment limit to 7,500 crore rupees per subsidiary. And in fact, in response to NDTV Profit's question, Union Minister Ashwini Vaishnav said that the move follows Power Grid to participate in larger projects with a 2,500 crore increase in its equity investment cap. He added that India is undertaking multiple high voltage direct current projects, also referred to as HVDC projects, to strengthen the national grid amid rising power demand, noting such projects require heavy investment. Listen in.
पावर सेक्टर के इस रिफॉर्म से जो सबसे बड़ा बेनिफिट ये होगा कि जो बड़े प्रोजेक्ट्स होते थे, उन बड़े प्रोजेक्ट्स में जहाँ पे ज़्यादा इक्विटी की ज़रूरत होती थी, वहाँ पे पावर ग्रिड पार्टिसिपेट कर नहीं पाता था, कम्पीट नहीं कर पाता था, उसमें पार्टिसिपेट नहीं कर पाता था, क्योंकि इसका लिमिट था 5,000 करोड़ रुपीस तक की इक्विटी आप एक सब्सिडरी में लगा सकते हो, उससे ज़्यादा इक्विटी नहीं इन्वेस्ट कर सकते। 7,500 करने से बड़े प्रोजेक्ट्स में भी पावर ग्रिड की पार्टिसिपेशन बढ़ जाएगी। और अभी बहुत सारे HVDC हाई वोल्टेज डायरेक्ट करंट के प्रोजेक्ट्स बनाए जा रहे हैं, जो हमारी ग्रिड को आने वाले समय के हिसाब से बहुत एक रोबस्ट ग्रिड बनाने का काम है। उन सब प्रोजेक्ट्स में कैपिटल बहुत लगता है, इक्विटी भी प्रोपोर्शनेटली ज़्यादा लगती है, तो उन सब में पार्टिसिपेट कर पाएंगे।
And there's an interesting update on the IDFC First Bank fraud case. After especially it rocked the nation, IDFC First Bank has issued a statement claiming that it has paid out 100% principal and interest to Haryana government. The bank has ensured commitment to pursue action against the perpetrators of the fraud. Earlier, in this context, Haryana CM Nayab Singh Saini said in the assembly that the entire amount lost in the fraud, including the funds of some Haryana government departments and boards and corporations, have been deposited back into their accounts within just 24 hours. And this is inclusive of interests also. Listen in to the Chief Minister giving his clarification in the House.
कल का जो प्रकरण में शामिल हमारे कुछ हरियाणा सरकार के विभागों का पैसा था और बोर्ड कारपोरेशनों सहित संपूर्ण राशि मात्र 24 घंटे के अंदर हमारी सारी राशि वो वापस हमारे खातों में जमा हो गई है, जो वो राशि गई है। माननीय अध्यक्ष जी, लगभग बैंक द्वारा 556 करोड़ रुपए जमा कराए गए थे, जिसमें लगभग 22 करोड़ रुपया ब्याज का भी हमने लिया, जो ब्याज था वो भी वापस आ गया, उसको भी हमने जमा, ये हो गया है।
Viewers, the government has rolled out the National Monetization Pipeline 2.0, setting out an ambitious asset monetization roadmap for the next 5 years. The plan covers over 2,000 assets across power, ports, railways, coal, roads and urban infrastructure, aiming to unlock capital for fresh public investment. My colleague Rishabh is here with all the details on this.
What we're picking up with this particular national monetization pipeline is that we had about a 90% utilization in the first one. So the government has chosen to be a little more ambitious this time, given the fact that they were quite successful with the first one. Like you said, the government has that big on roads, power, ports, railways, highways, logistic parks, roadways. These are some of the major sectors that they've chosen to sort of anchor their plans at. If we look at the asset-wise division that they've come up with, you have about a 3,100 crore stake pairing target in GAIL gas by 2028. There's about a proposal to lease about 38 land parcels by BSNL. That's another about 2,400 crore target there. Ashok Hotel will be privatized. Hotel Samrat will be privatized. In the rail sector, you have stake sales in about 7 PSUs, and that target is roughly at about 84,000 crore rupees. So that's a major one to look at. Apart from that, you have NHPC, SGVM. You have those projects also lined up for monetization. That's about a 12,000 crore target there. And you have the PGCIL transmission lines. Those are also going to be monetized roughly at 33,500 crore target there as well. So lots of interesting companies, public companies that will be up for some sort of stake sales over the next 5 years. And you will have more of those details come up. So an interesting, more ambitious NMP 2.0 rolled out back in the area.
And viewers, on an unfortunate note, 7 people on board an air ambulance were killed after an aircraft crashed near Simaria district in Jharkhand's Chhatra district last evening. The Beechcraft C-90 operated by Redbird Airways Private Limited was en route to Delhi from Ranchi when it lost radar contact 23 minutes after takeoff. The aircraft took off at 7:11 p.m. and went missing around 7:30 p.m. on board. On board were a patient, a doctor, a paramedic, 2 attendants, a pilot and a co-pilot. All bodies have been recovered and sent for post-mortem. Reports also indicate that strong winds, heavy rain and lightning in the area at the time were noticed during the incident. The IMD had also issued a lightning alert as well, but despite this, the accident took place. Debris has been found scattered across 3 locations with suspicion that the plane may have hit a mountain. A probe team from Delhi is headed to the crash site. The black box, which is critical in the examination, is expected to reveal what exactly went wrong. Tragically, the deceased patient, Sanjay Kumar, a 41-year-old man, had earlier suffered 63% burn injuries in an accident and was being taken to Delhi for medical care when this crash occurred. A SpiceJet flight operating from Delhi to Leh, in another news, returned to Delhi after experiencing a technical issue involving one of its engines shortly after takeoff. SpiceJet spokesperson said that the aircraft landed safely in Delhi and all passengers were disembarked normally. There was no fire warning in the cockpit as well. Sources to NDTV Profit have also revealed that there was no mayday or pan call made to the ATC. Full emergency was declared at 6:30 a.m. However, there was a single engine failure. Prime Minister Narendra Modi will begin a 2-day state visit to Israel tomorrow, starting with wide-ranging talks with Israeli PM Benjamin Netanyahu in Tel Aviv. And he will later travel to Jerusalem for multiple engagements as well. A major highlight of the visit is the fact that PM Modi will become the first Indian leader ever to address the Israeli parliament in Knesset. He is also slated to participate in a community event interacting with the Indian diaspora in Israel. On day 2, PM will hold an extended meeting with PM Netanyahu, during which documents of agreement will be finalized and exchanged in the presence of both leaders. Ahead of the visit, Netanyahu posted on social media that the bond between Israel and India is a powerful alliance between two global leaders and building an axis of nations committed to stability and progress. This signals the strategic depth of the partnership and the significance Israel attaches to PM Modi's arrival in the country. In another news, the Karnataka High Court has granted interim protection to actor Ranveer Singh in the Kantara case. The High Court has directed authorities to not take any coercive action against him for now. However, the court has made it clear that he must fully cooperate with the ongoing investigation. The matter will next be heard on the 2nd of March, when the court will review the status of the probe and decide on further directions. Legal teams on both sides have been asked to submit additional documents ahead of the next hearing. For now, this order gives the actor temporary relief, but the investigation continues. But viewers, that's all the time we had on this edition of Profit 360. Stay tuned to stay ahead of all the news and updates. This is Malika Mishra. Have a good evening.
Stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. And let's start the show. Today is a very interesting company I have got in KYC for you, but some hints before I reveal the name. It's a kitchen solutions provider, sinks, faucets, and a lot of surface area products are there. The second hint I would like to give you, and it's a very big hint, it's backed by Sunil Singhania's entity Abacus. Also Ashish Kacholia is also backing this entity. So there are some large investors already backing the stock. Very much interesting, right? But let's see how the stock has moved also. That's another hint I'd like to give you. Last 1 month stock is up 21% as well. Now you must be wondering which company is that. I'll give you some more hints. You should be a bit careful about it. And the company in focus is Cera. That's what I'm talking about. It's almost a 30-year-old plus company, and we'll be talking about the company's growth trajectory as well as what the industry stands. But the question remains is, why have I called the company in KYC? There are some questions which needs to be answered by the management. The revenue and the margin guidance side, especially the margins, gross margins have kind of, actually you could say topped out. So will these margins go up or will there be a pressure going ahead? That's the query which everybody has asked who reads KYC. Also the tariff benefits, once the clarity emerges, particularly in the export business, how much inquiries start picking up. The US, UK business also the company has, the Europe business is there, and it's an international exporter. Also the capex utilization and the expansion plans, some plans were deferred. They're waiting about the clarity from the US trade tariffs. When will be the important timelines for these plans to start for different categories? That's a very important question to be asked for the company. And also the demand trends in the client confidence is one of the most important things. How the inquiries are picking up and from where and for what product. Also the quad sinks business, the growth outlook for it. That's one of the key major revenue drivers, and how things pan out, especially in the US markets post the clarity which we might see in the trade tariffs or not. That is where it's a cliffhanger for a lot of export plays and the new product pipeline, so that they de-risk their portfolio, and some new surface area segment, that's what they call, on the kitchen ecosystem. That's what the company is focusing on. On the show will be Anand Sharma. He's the CFO, and we'll ask Anand all these questions about the company. But speaking of about the company, let's give you more details about it. And largely I have given you some hints, but these hints is not enough for a show in KYC. We need to explain it to you. The first one is the kitchen solutions provider, sinks, faucets and other products are also there. I'll give you the detailed analysis of it. Remember, this is Asia's largest and world's 4th largest quartz sink manufacturer. A unique product, and the way the premiumization plays out, and they are having a good market share in that. Also, it's the only manufacturer in Asia with the German technology, and the way the supply chain is moving, company stands to benefit a lot. 6 state-of-the-art manufacturing plants, 4 is in India and 2 are in overseas. That's an interesting take, and its presence is across 60 plus countries worldwide. Another important trivia I would like to give you about this company, they are having 4,500 dealers across India. India business is also a decent contribution coming in terms of revenue. I'll give you all those details as well. It's a diverse customized portfolio of 500 SKUs. These are the number of units, different product categories which the company deals with. Key shareholders, look at that. Sunil Singhania, promoted Abacus, has 5.34% stake in the company. This is coming in the December quarter. Ashish Kacholia has around 3.5% stake. So that you can see, markets are large legends. They're almost having 10% stake in the company. That means there must be something here. Let's talk about the sectors which they are operating in and what's the planned capacity, or you could say the current capacity. I'm sorry, this is the units per annum. Quartz is around 10 lakh. Steel sink comes in at 1.8, and just is starting, appliances and faucets, that comes in around 50,000. But of course, this is the kitchen appliances we are talking about, and this entire setup is the kitchen segment. The key clients, especially the global ones, is something which I'd like to talk about. And remember, these are long-term agreements. This includes Karan, this includes IKEA, and also Grohe. Just forgive my pronunciations, I'm not good with European languages, but nevertheless I'm decently good when it comes to the companies and their numbers. Let's go to the other sectors also to look at, and the product revenue breakup. That's the thing. Quads is still 48%, but from 2020 chart I've seen they have de-risked their portfolio, and it seems it's a good play, in their strategy. For the surface area, what you go inside a kitchen, a lot of products are there in the kitchen, that is called surface area. That has done well. Apart from that, looking at the kitchen appliances and the stainless steel sink also, that is the entire product revenue coming up. But after that, the geographical revenue, and it seems it's very much decent. And UK, remember there's an FTA trade completion already done. USA, you talk about it, the tariff issues are getting solved, but from that 50%, now we are in the teens. There is a negotiation going on, and company had a wait and watch policy, and they were giving some US discounts also. Because of that, the revenue growth was lesser than the volume growth. But India business is decent, it's 18% and rest of the world is 20%. So you see the diversification is actually benefiting the company. So whenever any good geographical news flow comes, that is where a good bump up will come. That's why the main reason for me to show you that. But there was a con call also, I listened to that, and some important points have come up, but I'd like to mention them one by one. The first is the new horizons they might open up in the exports market after the trade deals. Especially I'm talking about the company having a German tech, good supply chain systems globally. Another key takeaway is the US services that expected to grow at around 15% as per the management, and the UK business will still be soft. That means we are waiting some clarity. It's not that you're going to get all good news in the company in one shot in a short period of time. It will take time. And a very important statement is the fourth quarter would be better than the third quarter. Third quarter results are out. I'll show you that, how the numbers have panned out. Some concerns are there. We'll address that. Q3 revenue growth was lower, but the volume growth was on the higher side. And this US discounts, that is what was impacting some of the global numbers. So is the company giving more US discounts right now in fourth quarter also? That's something to look out for. But if you are an investor, you should be looking at one date, which the management is talking about, April 4th. Key announcements will be coming in. This might be their budget planning, this might be their expansion plans and everything else. So if you are an investor, if you are a stakeholder, April 4 is the day. And of course, before that, KYC, the show is there, which will give you all that perspective about the company and the growth outlook. So this is the entire talk about the company, but about KYC is also very much important, because we follow a standard format so that we give our viewers the maximum which a KYC show can give. Income statement, balance sheet, cash flow, these are the numbers which you talk about. Apart from that, return ratio is also very much important. This includes ROC, this includes ROE. But apart from the numbers, we need to see how the institutions have played out. Remember, two big marquee investors are already loaded in this stock. Almost 10% stock they are having. That's the shareholding I'm talking about. Street cred, kitna paisa bana? 1 month, 6 month, 1 year. That's what we talk about. And also from its listing, or we could say like almost a 5-year basis. Also, if you're a long-term investor, valuations largely they do not have an apple-to-apple comparison. So I'll be comparing the valuations in its various stages of its life cycle and the outlook, industry and company specific. That will be the key triggers ahead. So we will talk about that. So this is the entire picture of the rating parameters we'll give to CARISL. But the first one is the income statement. It's the most important thing to look at. And you must be wondering, the revenue, EBITDA, profit, the last 3 years, it's been decent. But of course, FY25 was an impact. 9 months, FY26 also we saw. So it's been a decent growth. I wouldn't say out of the park. It still takes time. And there are some overhangs, and those overhangs are coming in the 3-year CAGR numbers. But it's not really bad. Neither it's really good also. Let's talk about the Q3 numbers, how they have panned out. And luckily, the EBITDA numbers is something which caught my eye. Of course, PAT numbers are impacted. There are various reasons for it. The margins are still under question because, of course, the company is putting in money, expanding capacities. But net, it is still a mixed view coming in, a neutral on the long term, mixed on the short term. And the margins itself, we see in the third quarter, it's trying to step up. That's what I really liked about it, that company is moving towards that 19%. Remember, their backward integration also is at play, but there are other key factors also. The detailed ones we'll ask the management. Net, I would give a neutral rating when it comes to the income statement. Let's talk about balance sheet. And during this time, whenever the industry issues are there, there's one unique thing about this company I noticed. They have started working on the debt equity ratio. That level has come down. Interest coverage ratio, the interest which you need to pay for loans, that has gone up. So that's a very good sign of a financial position of a company. And the cash balance, that's also coming up at 68 crore rupees. That means company has some kind of a dry powder to spend. Now, where will they spend? Will it be expansion? Will it be a shareholder reward? Or maybe another acquisition, because they already do UK and US. In the history, I've seen 5 to 6 major acquisitions. So the company is at a sweet spot with the money. And because of that, a good balance sheet management, I'll give this a strong thumbs up when it comes to the balance sheet. But apart from numbers, another third important number is the cash flow. That cash flow is very much important irrespective of the business cycle. And cash flow from operations, that has actually kind of lightly narrowed down. It's around 60 odd crore rupees. And these are the net cash flows you're looking at. One thing interesting was in the presentation was the EBITDA to cash flow ratio. That itself has gone down. It's at, I could say, a multi-year high, but that was for FY25. So this side it was benign, but their presentation in the third quarter was very decent. But adding both of them and giving a balanced approach, I'm still not convinced. I'll still give a neutral rating when it comes to the cash flows, and we need to see, as you know, the months and the quarters go by, what does the cash flow numbers mean? Return ratios, that's a very big concern, and the company itself mentioned it, why that is happening. The return ratios in FY22 was 26%, and of course the listing numbers keep going down. It's around 12% now, half. And ROC also, the story remains the same, but remember, there's a lot of changes happening in the company. I would like to mention, the first is, of course, they're putting in a lot of investments, and these investments need time. That's why you see the pressure on the return ratios. Let's pull out the ROC numbers also to give you the feel of what it was. It was 33%. Then it almost went down 1/3 to 22, and then down at 18 coming in. So, of course, the return ratios are under the pressure. Concerns are there, but will this bottom out going ahead? There are good signals, those green shoots, but I'll explain you that in the outlook segment, not now. So net, it's a thumbs down when it comes to the return ratios. But apart from the numbers, shareholding is very much important. We spoke about two marquee investors, Ashish Kacholia and Sunil Sanghani, has promoted at entity. Abacus already invested in the company. That comes under the public, and some comes in the DI. There was a good increase coming. March 24 was 7%, and then a 4% increase coming into 11%. That itself shows the strength of loyalty coming from the DIs, and promoters, however, have reduced the stake, but it has been absorbed by institutions. From 1% in FIs, now it's up to 2%. So now the foreign interest is coming in. There are some really strong marquee investors. DI participation is going up. It's hitting all the cylinders when I come for this analysis of the shareholding pattern segment. So I'll give a strong thumbs up for that. But let's talk about the street cred, how much the things have moved around, and last 1 month the spike has come in. Stock was in you could say almost 8 to 9 month consolidation. There was a big dip, and then a good jump up coming up, of course, on their back of their earnings and the sentiment opening up. But 6 months it was flattish, I spoke about. But after that, let's see how much returns have come in 1 year. Stock, despite so much happening, is up 64%. And if you see the last 5 years numbers from the listing, its stock is up 148%. It has been a very good, decent compounder. But over the last 4-5 trading sessions, some profit booking is definitely happening. And that's why for traders or a very short-term investors, at least for a week or 7-8 sessions, it was not good. And just to balance that out, I've given a neutral rating when it comes to the street cred. Let's talk about the valuations. Valuations also very much important. And there's a very big hype when the company had come up in the IPO. The peak near the IPO, that number actually is a mistake. It's around 55 times. And if you talk about it, the peak in 2025 was 31 times. And even despite the peak numbers, the current numbers are at 22 times. That means you could say the valuations are still cheap. These are the 12-month forward P numbers we have taken. So I'm going to give a strong thumbs up when it comes to the valuations. We spoke about a lot of these numbers, but the most important thing right now, and the street is always forward looking in the stock markets, is the outlook. Now they have stated that the domestic business is expected to grow 3 times in the next 3 to 4 years. That's around 18 to 20% revenue contribution, and an additional quad sink capacity units that's likely to come on stream in April 2026. This is very much important because there was a delay. That's where the patience of the investors was tested in this counter. The kitchen faucet stainless steel sink expansion plan, they are also there. They're on the lower side because, of course, the largest amount of sales happen in the quad sink. but nevertheless the expansion is going on, so return ratios might be depressed going ahead. Also product mix upgrade, and when that happens, high margin comes in, and the manufacturing scale efficiency, these would be the margin triggers. So we'll definitely ask the margin guidance also, but overall the outlook looks very strong, so I've given a thumbs up. But let's add up all the ratings in our analysis to give you the entire picture. The income statement, the company needs to show some good numbers in the coming quarters. Expectations is good of Q4. Balance sheet, very good management, I must say. Hats off to the financial team. But the cash flow return ratios, that's a bit questioning for the investors. Shareholding, we have star investors already there, and the institutional pickup is there. Street cred, it's been largely neutral, but last 1 month stock is up 21%. Last 4-5 days, a little bit of profit booking coming in. Valuation still very cheap, and outlook also remains strong. So let's add up the total KYC rating to give you the entire picture, and comes in at 5.5 out of 8. This is largely above average in our analysis in our KYC rating show. But to give us more clarity for Carousel, we are joined in by Anand Sharma. He is the CFO at Carousel Group. Good afternoon, Anand. It's always a pleasure to talk with you. Anand, talking about, first of all, the US trade deal. You had been giving US discounts, but now it seems a lot of clarity is coming, especially for your business. Already UK trade deal has been done. What's your view right now? How much things open up for the company now as we start to understand that the global trade might be stabilizing?
Good morning. Thank you for having me on this show. I think it's a sweet spot for us. This trade deal is something we were looking forward. So I think with the clarity coming in, we are going to go very strong. We were like a 50% tariff, and this now came down to 18 with the trade deal going to happen, and in all probability going to settle below 18, maybe 15 or anything. So overall, this is going to have a very good impact on our business. Our customers are happy. We are very upbeat on the US, and we have a lot of good things coming in. In terms of tariff, I think we are at a good spot. We had given some discounts earlier to our customer to mitigate the tariff impact, which will be rolled back. So that is going to have a positive impact on our profitability also.
All right, but let's go deeper into the number. And I must say, the way you have managed the balance sheet in these, I couldn't say trying times, but definitely last 12 to 18 months, that has been done really well, I must say. But Anandji, the question is, the cash balance is definitely a little bit on the higher side right now, and D ratio also is on the lower side. Are we looking to deploy this cash in your expansions, or are you looking at acquisitions? Because I remember in your older business playbook, you had a lot of acquisitions coming in the US, UK, and you must have delayed those, seeing the uncertainty in the tariffs. Your views on that?
Yeah, so I think the cash balance, what do you see, and related return ratio, the major is because we had QIP. So with the QIP, now the expansion plan is going on. So that fund is in the process of deployment. Once this fund get deployed, we'll get the return, and this ratio also get improved. So I think it's a matter of time. We already have our capex going on. Once this fund of QIP, which we have raised, fully deployed, we start getting the revenue and the profitability. It is going to improve from here. Like you said, debt equity is already reduced. We have already improved on the EBITDA side. And with this fund, which is going to be, which is underutilization, the capex, the revenue will going to increase, as well as we are going to increase our profitability. So I think all the ratios, which currently, because of the QIP, you are looking at the numbers, which is not on the side which we want, that will come and reflect in the next financial year.
Of course, we'll hope for that. But the margins, the return ratios, I just saw your numbers itself from your investor presentation. You yourself stated, a lot of activities are happening. The return ratios are, dipped. Gross margins are dipped. So is this the bottom? And if yes, what could we expect in the margins in the medium term, and even the ROE, ROC numbers? What are you looking at, Anandji?
So, see, we have delivered the result in the worst period. The company was like, US is a big market for us. With the 50% tariff, still be able to deliver like a 19% EBITDA. Gross margin on last quarter also improved. So overall, as I said, there was some discount which has gone in the previous quarters. That will be rolled back. And from here onward, we're going to improve both on the revenue side as well as on the margin side. So I think, and on the return on equity side or ROC, as I said, the fund which we have raised is already getting deployed. So once this is fully deployed and the capex is fully complete and running, this all ratio will get changed and you'll see the improvement. Coming to the earlier, I mean FY22 ratio, I think that was the COVID year where we have a lot of sales happening and we have not started increasing capacity. So that may be an exceptional, but going forward, as I said, we are going to improve from here on the ROE and ROC both.
By when we can see that? 2 quarters, 3 quarters?
So yeah, so I think next financial year will start seeing improvement quarter on quarter basis, and of course next 27-28 will be fully, you can see the impact. But even FY27, I think quarter on quarter you can see the improvement coming on these ratios.
Right, that's a very important take which we have given. But the queries on the US discounts, the Q3 discounts were definitely there. Are you giving Q4 discounts also? Because you mentioned in the con call that Q4 will be better than Q3. So just give us that perspective of both of these queries.
Okay, so like quarter 3, it was full discount. Now quarter 4, till this tariff came, I mean, the lower side of tariff, which is going to come from the February onward. Already 1 month we have already with the higher tariff rate. Now with 1.5 months, we're going to roll back. It is not fully rolled back. As I said earlier, the tariff was almost nothing. From nothing to 50%. Now from 15 it came down to 18%. That means there are some impact. So it will be pro rata rolled back. But this will definitely going to improve our margins going forward because that rollback already happened in this month only.
Right, so the rollback definitely happening, and we actually saw that in the stock prices also. But apart from the non-US markets, what are you looking at? The European market, the rest of the world market. Let's just leave USA aside. How are these markets looking like? Is US going to be UK going to be a soft quarter, or are you going into new products also? Because I remember there's a German tech you have, and the way India is placed now is you can actually go into other countries also, the non-US countries also. So what's your strategic plan on that?
So I think apart from US, also UK and Europe, we are doing great. We have a lot of inquiries coming in from the Europe. With this European deal gets signed, it become more. More doors are getting open for us, and we are going to increase our presence in Europe also. We already have a substantial business in Europe, and going forward, it is going to increase only. We are working with all the big brands of this segment. We are working with Brohe, we are working with IKEA. In the UK, we are working with the biggest company, Howden. So I think from here onward, we are coming from Europe. And talking about the new market, I think we are doing good in GCC market. We entered last year only. From almost nothing to we already crossed the revenue of 25 crore. So I think new and emerging market, which is like GCC, South Africa, Southeast Asian countries, New Zealand and Australia. I think we are going across all the new geography, and this is going to add business on the export side.
Right, and Anandji, of course, the last question is there, and I'll try to put in one more question with it. Your important capacity additions which are happening, there was some delay because of course, the global tariff issue. In fast motion, what are the important dates for your plans to start? And April 4th, everybody is waiting for it. In the con call also you mentioned. Just give us a little flavor of it, what the announcement can be around.
Okay, so I think this capacity addition, we already said that from quartz zinc 1 million, we are adding another 100,000. That will become operational from April onward. Steel zinc also, we are adding from 180,000, another 70,000 getting added. That will also coming from the April onward. And on the appliances side also, we are going to activate another 50,000 capacity. So appliances, as on date, we have 50,000. We are going to activate another 50,000 in the next financial year. Faucet side also, we have 50,000 current, and we are going to add another 50,000 in the next financial year. So I think on the capex side, we are going to have all this coming in the next financial year. And of course, we are also very excited about our expo, which is planned. So we'll come out with more details once we are ready with the announcement.
Right, so of course the street will be looking at, but nevertheless the company seems to be coming out from a bad trajectory. Thank you very much, Anandji, for your time, for giving and clearing the doubts of all our viewers and the people who write to me for KYC show. Thank you very much and best of luck for the future.
Thank you very much for having me on the show. It's always a pleasure talking to you. Thank you so much.
Thank you, sir. So, of course, this was the management of Carousel, and interestingly, I'd like to point two things from this conversation. The first is, seems like the worst is over, and also we can see the old capacity expansions which were delayed last year, they themselves are now starting to go up. So that is something which is very bullish coming in from the management. But that's all, folks, for KYC. Stay tuned for the next show.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboard.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. It's been a tough day for the equity markets, and most of the selling has taken place in the IT space, and that's really something of a theme that we've seen in the recent past. But if you think about it, quite a bit of the bad news has started dissipating. I hope that I'm not jinxing anything by saying that. So the question that I'm asking today is, how do you look at small cap funds? And this is where a lot of you actually do have your investments, and you've probably seen an underperformance in all probability over the course of the last 1 year or so. So how should you react? Is this time to double down on those investments, and how should you approach the space? Which schemes should you choose? I'm joined by Provident, the founder of FinFix Research, to talk about just that. Provident, thanks so much for taking the time. First of all, are people asking you, or have they been asking you, should I pause my SIP in a small cap fund? Should I sell my small cap fund investments? Is there further downside from this point?
Hi, Alex. I think not really sell, but definitely I think returns have been disappointing. So you have to do that hand holding that over a 2-year period. Also, if we look at the returns, they can be negative for a lot of schemes or very low. And these, Alex, are definitely times when people start to ask that perhaps I was better, if not ask, at least think that, they were better off with a fixed income product. So small caps have had such a great rally that, this correction has, I think, taken a lot of investors who were invested at decently high levels. And when you start off with the SIPs, which are at high valuations, you have to go through that process, little pain period. And, to investors who are out there and who've already invested, I think it's very normal for SIPs in small caps to give you low or negative returns for a 2 or 3 year period as well. So if you've already invested, just stay put.
Stay put. But let's talk about some of the schemes, right? So first, let's lay the context to say that a lot of schemes, when small caps were doing incredibly well, took the call to say we're going to pause fresh investment, especially through the lump sum route. So let's take stock right now. How many are still closed? And we know, for example, that ICICI Prudential opened up once again, and they don't have the largest AUM, just over 8,000 crore rupees last I checked, right? So they took that call. They've opened up. So what is closed right now?
Right. So SBI has been one of the first fund houses, Alex, and they did this long back in 2020 that they still have that 25,000 capping. A lot of fund houses then followed in 23, 24. Kotak was there, then they reopened again. Nippon was there. Tata is still close to lump sums. And ICICI, I think, is a name, because fresh investments were paused in March of 24. And it is also a name from the fund house where their chief, Mr. S. Narain, had given, quite a warning signal that it's not the time to take in allocations to small caps. So they've opened it up. So, which also, of course, puts everybody to think that, is it a good time now to invest in small caps? And I think over this time period, while a few fund houses are still moving on with those restrictions on lump sums, a majority of them are open to STPs and SIPs with a very, decent sort of a capping, let's say 2 lakh a day or 50,000 a day, which is okay, which is almost like open, but lump sums are still a lot of SIPs are close to. But overall, I think small caps have relatively underperformed the benchmark indices. And during this time period, we've actually seen a lot of small cap stocks fall by 40 to 50%, Alex, from their peaks. So some euphoria is gone. That craze which was there to catch the best performer, I think that's also evaporated. So perhaps, it is time to relook, and for those who've already invested, to continue.
Yeah, some of the data that you've pulled up, Provident, is really very stark. From the 23rd of September to the 23rd of February, 14% downtick for the small cap index as a whole. And of course, you can argue that small cap funds by and large do manage to beat the benchmark, but here we're still talking about negative returns for quite a few of them. And those that missed the bus really missed the bus. So let's talk about how schemes have performed, right, over the last 1.5 to 2 years, because that's really been the pain point and the period of underperformance.
Right. So Alex, this 1.5 years, so we'll take September of 2024 as the starting point when we started seeing this correction in the markets. And, just to give a perspective to investors, let's see how Nifty 50 performed in this last almost 1.5 years. So Nifty 50 is still down 0.87%. And after today's fall, it would be more. Mid-cap index is down by negative 2.42% in small caps, as you just mentioned, still down by close to 14%, 13.94 to be precise. And I think this has been a very difficult time for a lot of schemes. From across the schemes which are available, currently there are 34 schemes which are there in the small cap space, with 28 of them having a track record since September 24. Lowest return is still 19.93% in this time period, this 1.5 years. And the highest for the small caps is still negative 0.46%. So definitely everybody out there who just started investing somewhere around, Alex, in 2024 would have a very low or negative return in their portfolio in the small caps. 2-year SIP, if we see, let's say we say that 24 February you started and now we are in 26 February, the highest returns in the small caps currently in SIP terms is 7.78% and the lowest is negative 8.17%. The benchmark is down by minus 2.71 in terms of SIPs. And this is also why, Alex, the SIPs do help a lot. Overall, if you see the index is negative 13-14%. But if we had gone through the SIP route, it's just down by close to 2.71%. So overall, this time period has been tough. And a lot of schemes were also launched in this 1 to 3 year period, which have this track record. And some of them, I think, got a very good starting point. For example, Mirai, they're just about a year old, Trust MF. So all of them are up by, 20% on 1 year basis. So that's really interesting because they got to do the allocations at the right time when small caps had corrected. And small caps initially through price correction and then through time correction, overall there has been some bit of cooling in the space. So definitely it's been a tough time for all these schemes and for investors as well.
Just goes to show if you get your timing right, it works in your favor. But for the top 3 to 5 schemes by assets under management, and here we know the likes of Nippon will come through, maybe an HDFC will come through. So how do they stand out in terms of the performance that they've had? Because people naturally gravitate towards the market leaders here.
Yeah. So we have Nippon, of course, at 65,000 crores. Alex, it's the largest scheme. I think it's tremendous. It's almost, it's really intriguing how they're able to manage such huge corpus and still give us performance which is at par with those which have a smaller AUM. So it's really great. Over a 10-year period, they have a CAGR of 22% still. If you're looking at 10-year SIP returns, they have a 22% return. And during this time period, Alex, which is September of 24 till now February, Nippon has been down by 9.71%, which is lesser than the benchmark index. If you're looking at, but Nippon also, the difference between these top 3 schemes, Alex, is that Nippon holds a lot of large cap instead of holding cash. So when you're sitting with cash, idle cash, and let's say during the same time period, your large caps are able to perform, that gives you an edge. And of course, it's a huge portfolio that the scheme has with about 200 plus stocks. The second largest is HDFC. HDFC managed to contain the downfall quite a bit since September till now, February. It's only down by 3.95%, which has been good. Over the long time period, the 10-year returns, the CAGR is about close to 20% and SIP returns close to 18%. It doesn't keep too much of large caps. It's about a 3-7% range since September, what we've been tracking. And it's got 75 to 80% throughout. It's held in small caps only with a 8 to 10% range in cash. And SBI, I would say, has lagged a bit here, although it's one of the most respected fund houses. And I think small cap management has been great by the fund house, but it's been down by 12.21%. And I think some disappointed in the 1 and 2 year returns for the scheme. But overall, it's given good returns. The CAGR has been 20% over a 10-year period. In terms of SIP, it has been close to 17%, so slightly lower than the other two. And it's been holding a huge amount of cash, definitely. So it doesn't hold large caps. So I think a high allocation to cash, which now they've started to deploy.
Let's very quickly talk about a few more things, Praveen, because we've got 5 minutes more and quite a bit of ground to cover. So therefore, if I look at the various types of return, we've looked at point to point largely, but if you look at rolling return, if you look at SIP return, does that change the picture over the last 5 to 7 years?
So it's interesting to see, Alex. I think one observation is that if you're looking at 7-year returns, be it your annualized returns, SIP returns, or your rolling returns, the benchmark was always in the last, and all the actively managed schemes were able to outperform the benchmark. I think if you're looking at a 5-year period, that has changed a little bit. The number of schemes outperforming the benchmark has reduced. So, for example, over the 5-year period, out of 22 schemes, 17 have beaten the benchmark in terms of trailing returns. 3 have been in a very close range, and 2 of them have actually lagged. In terms of SIP returns, for example, over 5-year period, 13 have been able to beat the benchmark, 6 are in a very, very close range, and 3 have lagged. So definitely data is suggesting that maybe as newer schemes are coming and how the markets are becoming more transparent and more efficient, the outperformance of actively managed schemes at points can be challenged now by the benchmark, even in the small cap space. Over a 2-year rolling returns over a 5-year period, Alex, out of 22 schemes, 13 have beaten the index, 5 have been close, and 4 have lagged. But over a 7-year period, because rolling returns is the best way to gauge returns, so 3-year rolling returns over a 7-year period, of course, 19 out of the 19 schemes that we had at that point, 17 were able to beat. And when we are seeing over a 5-year period, out of 22, only 13 were able to beat. So, that's the kind of difference that we are seeing. So I think we have to take a look at the benchmark as well, the normal market cap based index.
That is a fair point. I do want to ask a couple of things now, just to close out the conversation, Praveen, which is, you have strategy indices in certain other pockets, and you're talking about smart beta, etc. Are there options in the small cap space, 1? And 2, what according to you is the strategy? And I know that you alluded to it earlier on in the conversation, saying that now might be the time to look at small caps more closely, and maybe you can start once again allocating. So just to close out the conversation.
Right. So we do have 2 strategy indices in the small cap space, Alex. One is the Momentum Quality 100 Index, and one is the 250 Quality 50 Index. But I would say at this point, strategy indices don't make too much sense in the small cap space. I think the first entrant, if you are looking at a passive allocation, then it has to be the market cap based index, and strategy indices. For the shortest time period that we have the records for, there is nothing very superior that they are reflecting. So I think they need a little more study period, and I think for now they can be given a miss. And for investors looking to invest in the small caps, I think go through the SIP route, go via the STP route with a long-term view, long-term being at least around 7 years. And I think any additional allocation, if your scheme is allowing, can be done whenever the markets are down by 15 to 20%.
Okay, and just one more supplemental question, which is it okay to have more than one, and maybe advisable to have more than one small cap fund? And do you have schemes that you like in the category, and why?
I think it's okay, Alex, to have more than one, but only if you're really looking at a substantial allocation, and also if your time horizon is very long, then I think you can have a passive and an active combination in the small cap space. Otherwise, usually one small cap fund is good enough. And the funds that I like, I think Invesco has done quite well to contain the downside as well as move up. So the up capture and down capture board quite compelling. In the recent ones, I would say Bandhan over the last 5-6 years has, of course, done equally well. Nippon continues to do quite great. And in the newer ones, I think Motilal managed this time period, this 1.5 years quite well. Although, Motilal is a very new scheme, so it'll require some more, periods of actually seeing how it performs. But I think amongst these is Bandhan, Invesco, Nippon definitely look good.
Okay, all right. Thanks so much, Praveen, as always, for taking the time. Pleasure speaking with you. And I know that we've spoken about this in the recent past, but I think it bears repeating again and again. It takes a little time for some of these things to sink in. Thanks so much for taking the time.
My pleasure.
Major update for the Employee Provident Fund. Sources at NDTV have picked up that there is a major decision that is underway, and that is soon to be taken by the Ministry of Labour, and that relates to inoperative accounts with deposits of 1,000 rupees or less. And this is, I know, not going to be a very large portion, but then directionally it means that the government and the EPFO as a body are looking to return the money of all of these inoperative accounts. What it says is that there are 600,000 inoperative accounts with deposits of less than 1,000 rupees, and the money will be deposited immediately in those that are linked to Aadhaar, and the remaining accounts will be distributed gradually. A total of 600 crore rupees is accumulated in that. So it's quite a substantial sum of money that will be returned. Bear in mind that if you do have investment in the EPFO, that you should track it on an ongoing basis by getting getting a login to that EPFO website. It's something that you should track. But speaking of tax-free returns, I thought it's a nice conversation to have. EPFO exists, of course, the Employee Provident Fund exists, but what else do you have? And what are the factors that you need to bear in mind? Joining me today is Abhishek Mehta in studio. Abhishek, thanks so much for taking the time.
Thank you, Alex.
Specifically on EPFO, there are a few fallacies that people have, and we've tried to correct some of those on this program as well.
Right.
One of them is that all investments in the EPFO and into the Employee Provident Fund are tax-free. That's not true, right?
That is not true, yes. So there has been some changes in that. So there are two types of contribution which goes into the EPF. One is your employer contribution, another is employee contribution. Let's break it down, both of them, and take it up one by one. In terms of employer contribution, 12% of basic and DA is tax-free. The only caveat is the maximum amount which is allowed now is 7.5 lakh. So your EPF, your NPS plus your superannuation, everything put together in a year can be maximum up to 7.5 lakh. So the employer, what he is contributing to your EPF doesn't becomes part of your income up to 7.5 lakh or 12% of basic and DA.
And anything above that
becomes taxable. That will considered as your perquisite.
Correct.
Right.
And the interest on that becomes taxable.
That's also become taxable. In terms of employee contribution, now if you are in old regime, you can claim ATC, which is 1.5 lakh up to that amount. And if your contribution is more than 2.5 lakh, your personal contribution towards the EPF is more than 2.5 lakh, even the interest on that additional amount becomes taxable. Up to 2.5 lakh, the interest is tax-free, but over and above 2.5 lakh, the interest also becomes taxable.
Because that means that your employer is also contributing 2.5 lakh.
Yes.
The total contribution is crossed at 5 lakh.
Yes. So that is one thing. One very important thing is when you redeem this money, whenever you get to your retirement, most of it is, the entire amount is tax-free.
Right.
But lot of time what happens if you take a break from your employment and there is a less than 5 years of continuous service, then the entire amount what your employer has contributed in the last 5 years, or if you have left the job on the 3rd year, the entire amount will get taxed. The entire interest which was tax-free for the last 3 years will get taxed. Third, whatever employee contribution you have done, and if you have claimed it under section ATC, that will also get taxed. So before leaving your job, you have to ensure that did you had a full 5 years of continuous service, and if no, then plan your taxes well in advance.
So let me understand this. In a hypothetical scenario, you worked from 2015 to 2019.
Yes.
You had a break for 2 years.
Yes.
And then you started in 2021 or 22, and you worked till 25. That means that you've not had continuous service.
No,
right?
not continuous. So in 2020, when you left your job, or probably 2019, in the next 6 months, if you don't get a job, then you have to pay the taxation on the entire amount. So there is a 6 months window. If there is
even
more
if you've
than,
not redeemed it.
Even if you are not redeemed it, you will have to pay the tax, because the Act says that you have to be 5 years of continuous service. And if there is a break, so a lot of time, that is why when people are going for a career break, we advise them to plan their things properly, because a lot of time if you have just completed 4.5 years, better you complete another 6 months and then take a career break in your life, so that this entire 5 years amount doesn't get taxable. And all three things get taxable: employee contribution, employer contribution, plus the interest of the last 5 years.
This is in the EPFO Act.
Yes, right.
Okay, so that's something to bear in mind. What else in the way of tax-free returns are still relevant and should be considered actively today?
One is a lot of people, like Nirmala Sitharaman said yesterday, only banks are, selling insurance more. Mis-selling insurance more rather than, concentrating on the banking operations. Very important points on the insurance. The insurance proceeds are tax-free. Okay, but few things which you have to bear in mind is, one, if you have taken a guaranteed income plan, okay, if you have taken a pure term plan, I have taken a 2 crore pure term plan, then the entire 2 crore is tax-free on my death. But if I have taken a guaranteed, income plan, the insurance plan,
the traditional
policies, then if I am paying a premium of more than 5 lakh rupees, then that amount becomes taxable. Okay, so premium up to 5 lakh is allowed. Anything if you pay over and above 5 lakhs in a year. So suppose I took a 4 lakh policy last year. This year I took a 2 lakh rupees policy. Then this 2 lakh policy, whatever proceeds will come, I will have to pay tax.
Oh, okay.
Okay, so 5
it's
lakh
an incremental thing.
Incremental thing, right. Second, if you have taken a ULIP policy, only up to 2.5 lakh rupees of premium paid in a year is tax free.
Okay.
Now, one thing you have to bear in mind is, if suppose I have taken a policy of 5 lakh, I cannot disproportionate it saying the first 2.5 lakh is tax free and the next 2.5 lakh is. If I have taken a single policy of 5 lakh, the entire amount will become taxable. So that is why a lot of time then people break and take 2 policies. So better you take 2 policies. But if you take a single policy, you cannot come and say ki Abhishek 2.5 lakh was tax free, then I will pay only on the remaining 2.5 lakh. So you have to bear this in mind, because banks are really pushing these products a lot.
Yeah, and of course you should think about the right fit for you. Ask yourself whether this is a product that you absolutely need, because in the investment space there are a lot of options available to you. Beyond that, there is of course the Public Provident Fund, there is the Sukanya Samriddhi scheme.
Yes.
What do you need to bear in mind?
I think Sukanya Samriddhi scheme is a very good scheme, because it is one of the highest interest right now. 8.2% is the interest which you get on Sukanya Samriddhi. So it's basically for girl child. If your girl child is below 10, you can open a Sukanya Samriddhi account. You can put 1.5 lakh rupees every year. Now this amount you have, how can you withdraw this, which will be tax free? At the age of 18 of your child, you can withdraw 50% of the amount, or for the education or for the marriage. Okay, in these 3 circumstances, you can redeem the amount before completing 21 years.
Okay.
Or the maturity of this proceeds is basically, once I have opened the account, I have to keep it for 21 years. Premature withdrawal is allowed, that also tax free. Conditional. But at the age of 18, I can redeem 50% of the amount without any reason, or I have to have either of the reason, which is marriage or further studies. That in these cases also the entire amount is tax free, and 8.2% tax free is a very good interest income what you can earn.
Public Provident Fund.
Public Provident Fund, again 1.5 lakh rupees every year you can put. That will get you an ATC benefit of 1.5 lakh. The interest is tax free, and even the redemption is tax free. The age of the account is about 15 years, and you can extend it by 5 years 2 times more. So you can have a PPF account for a total of 25 years in your entire journey.
And it's tax free.
And it is tax free. The interest income right now which is coming is about 7.1%.
Which is pretty low.
Which is little low. Better is Sukanya Samriddhi or even your senior citizen schemes, which is 8.2%. But that the interest is taxable in that.
And it's also not compounding.
It's not compounding, because that interest comes to your bank account.
Sure.
So the amount doesn't get compounded. But again, 8.2% that is taxable. Sukanya Samriddhi 8.2% non-taxable. PPF 7.1% non-taxable.
Okay, so it's interesting. I think we've covered quite a bit of ground. And of course, there's the standard agricultural income, which is non-taxable, but you need to be able to prove that you have agricultural income. It cannot be
you need to have a land. Income tax department nowadays checks Google images to check whether that land actually was cultivated and the products were sold. They ask for receipts of that mandi where the products were sold. So it's not that easy to say that I had some agriculture income which was tax free.
I'm growing cabbages in my backyard. On that note, Abhishek, thanks so much for taking the time. Pleasure speaking with you.
Thank you, Alex.
Well, You might want to grow cabbages in your backyard for what you can make with it, but you can't sell it and claim that it's agricultural income. There's lots more that we've got lined up for you over the course of this evening. Do stay tuned. This is NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The idea of the conversation today with Dr. Vishal Sikka is to probe some of his core themes. AI as a bounded tool, inherent hallucinations in LLMs, India's responsible AI opportunity, if you will, and the need for guardrails while tying into the latest developments in 2025 and 26, like agentic systems, persistent hallucination concerns, and enterprise adoption gaps, which he's trying to solve, I presume. Remember, in addition to his reputation that precedes him, he's the founder and CEO of Vian AI Systems as well, wherein he helps enterprises in this very opportunity. Dr. Sikka, thanks so much for joining in. And it almost seems, Dr. Sikka, that AI is our own Frankenstein. We created it. It'll eventually turn on humans because every single day there is a sector singled out for punishment.
Well, yeah, there is a lot of reaction happening to the developments in AI, but, this whole Frankenstein idea, I don't subscribe to that. It is a bit like saying this pencil is going to turn on me,
Okay. I presume, sir, that you've described AI simply as the newest and the most powerful tool rather than being a friend or a sentient being with frontier labs now embedding tools, etc. The question that would come is that what do you see as the hard computational and architectural limits that might keep AI firmly in the tool category and not beyond?
So this generation of AI, what we call generative AI, it is based on this idea that you take very large neural networks and you train them on vast amounts of training data, which is primarily textual data, all the way from the Wikipedia and all the digital books. And now, of course, it has gone far beyond that into all kinds of data, but nevertheless, it is data. And over the last year or so, we have seen these reasoning models which go further in the computational chain by creating complex amounts of multi-step kinds of reasoning. And so the end result of that is very sophisticated ways of generating content, whether it is text or even audio and video or writing software and going through large, elaborate chains of this computation, which of course is massively energy consuming and so forth. But ultimately, it is actually, when you look at an individual generation step, it has a very small bound on it. It is in computational terms, it is a quadratic complexity operation that happens to generate the next token and then the one after that and the one after that. So there is a basic bound on what these things are doing. And as a result, my son and I wrote a paper on this. A lot of people have done research on this. Folks at Apple, folks in NU Singapore, a friend of mine, Rao, from Arizona State. There has been a lot of work around the limitations of LLMs. But, we get caught up in the fact that they are so articulate, they are so great at generating, artifacts like text, summaries of documents, essays, poetry, software, especially software, that, but there is, in the end, there is a machine. Even though it is a vast machine, it is nevertheless a machine with a limit on it. And
Okay. So, I'm trying to gauge what do you believe could be the business impact? Because like I said, every day, IBM being the latest casualty, but Indian IT is not far behind, has been documented. Now, someone that I spoke to, Dr. Sikka, pointed out that most enterprise is brownfield, legacy systems accumulated over decades, offered 7-5 years plus of tech stack, still running critical operations, and therefore, and pure LLMs would excel in greenfield scenarios, but fall short in high-stakes environments. And therefore, that pie of the business is not going away in a hurry and not going away maybe for the next 5-10 years. Would you second that?
So, Neeraj, there are a couple of things we should keep in mind at the same time. Everyone has different ways of articulating this. The way I feel comfortable articulating it is that in the hands of people who know what they are doing, who understand how to use AI, it is a tool that delivers an astonishing productivity gain, especially when it comes to routine knowledge tasks or software development or routine operational tasks. I have given examples of this. I have seen personally examples of 20 times, 30 times or more productivity gain when it comes to writing software. It is not that it doesn't make mistakes. It makes mistakes all the time in writing software. But the people who understand what they are doing are able to overcome those and are able to make it, guide it effectively in order to do their work with an amount of excellence, with an amount of productivity that is simply astonishing. On the other hand, as a result, you could say that a lot of the kind of work that we have done in the past could be, susceptible to this kind of disruption. But the disruption is not that these agents are autonomously doing things, etc. It is more that there are people who understand what to do with it, can do the same kinds of things with a dramatic productivity gain. And so therefore, then the question becomes, why do you need large numbers of people to do, those kinds of tasks? So this is one side of the reality. And therefore, you see the impact to services, you see the impact to several kinds of software like workflow software, or today there is this thing around COBOL migration or cybersecurity, or even things like what you do for developer productivity around various kinds of mundane tasks that used to happen in software tools. Those are, more and more showing up inside the AI, inside the LLMs. And therefore, again, the productivity of one person or two people doing something with that AI far exceeds now what was possible to do before by one or two people. And they might end up replacing the work that used to happen with a team of people. So this is one way of looking at it. The other way of looking at it is that using this profound improvement in productivity, this profound capability, you can do things that we were not able to do before. That we can do unprecedented kinds of things. And I have also given examples of this. And in particular, I'll repeat one that I have spoken about recently. This comes from my company, Vian AI's work. One of our customers in the Middle East is a distributor of home goods, from FMCG companies. And one very large global FMCG giant recently decided to shut down operations in a country where this customer of mine operates. And they operate in several countries, but this is one of those countries. And what happened was that the shutdown of the factories means that all those goods have to now be imported. And so that changes the entire cost structure and so on. And so what they did was they used our product. We have a product called Hila, which not only lets you have conversation with transactional data, and we guarantee correctness of the results and no hallucinations and all that, but you can then start to ask composite questions, which can layer 7, 8, 10 questions underneath those. So you can start asking questions like, hey, if the cost of this went up that much, and if the cost of that went up so much, what would that do to the profitability? Or find me 10 areas of how to reduce costs. So things like that, which then break down into large chains of reasoning and then give you a composite report, which would have otherwise taken a team of people weeks to do.
Right.
So this customer of mine, Neeraj, was able to, in a 2 or 3 days of analysis, they ran a whole bunch of scenarios. And I asked him, he was presenting to one of our events where a bunch of prospective customers were present. And he said that we decided to exit that country. And I was shocked by that because I didn't know that until he actually presented it live in front of our customers. So I asked him later, when did you decide to do that? He said, after 3-4 days of analysis, we realized that there is no way this can be profitable, and therefore we just exited the country. So I asked him, how long would it have taken you to do this otherwise? And he said, probably a year. Because, you look at the quarter, at the end of the quarter, and then you say, oh, what is happening in this country? Let us put some corrective measures in place. Then you do another quarter, and again, nothing happened. And so by the time you have realized that, guys, this is not going to work, we are getting out of this country, a whole year has gone by. Instead, you do this analysis in 3 days. So my point is that we can do these new kinds of things that were simply impossible to do before. And I feel excited about that, instead of looking backwards on things that we used to do.
Most certainly. And maybe which is why you said that don't panic about job losses because AI will create applications and roles we can't yet imagine. But I would like to maybe try and understand this from two perspectives, Dr. Sikka. One is the impact on I can't call them legacy IT companies, but IT companies that have been there for a while, one of which you headed for a brief period, and then the people who work on those companies. Now, the question is, sir, that if an average IT service firm has X quantum of revenue over the last 5 years as an average, do you reckon AI and tools developed by Anthropic, by some of the other LLMs, can it append the business model that the revenue will go off and collapse? Or do you reckon these companies can figure out ways wherein with lower employees, they can still grow higher?
Neeraj, my perspective on this, it's guided by one of my teachers, Alan Kay, who says that the best way to predict the future is to invent it. So I don't believe that these things just happen to us and, what can we say? This wave came and it took us and we got affected by it. I think it depends on us. And I'll give you an example. You and I are talking on television right now. And I'm talking from my laptop, having a live conversation with you across 7 continents, across 7 seas. And this was impossible 30, 40 years ago when I was a teenager, when television first came. The routine that we used to have was that the newsreader, some famous person who were celebrities, would literally read from a piece of paper like this,
Sure.
What is the point of a television when you have to read something from a piece of paper? I can just as well take radio and put a picture of the person of Neeraj on it and say, hey, now I'm listening to Neeraj talk. But by the time television could do the kinds of things that we are doing now, or MTV or live telecasts of cricket matches, it took a while for us to understand the power of the medium. And so it is very natural when a new medium comes that we look backwards and say, oh my goodness, what is this going to do to the farmers? What is this going to do to the stenographers? And the farmers, the manual farming is gone, the stenography is gone. And so first of all, this is natural. What is different this time, I think you can argue, is the speed at which all this is happening. Just compared to last year, we are in a situation where things are very different. Which means that I was talking to the Prime Minister about it some time ago, and he mentioned the stenographer example, by the way. He said, we used to have armies of stenographers sitting inside offices. Now they are not there. So all these jobs routinely disappear. Agriculture has had perhaps the most profound change over the last 100 years, that we used to have 97% of our economy was based on people working in agriculture, and now it is in the US, it is less than 1%, and you still have an obesity problem. And so, the thing about it is that the transition from one category of jobs to another category of jobs happens all the time. One thing declines, the other thing rises. And we, by and large, manage to make that transition quite successfully, partly because we have a bunch of time to do that, to retrain people, to reorganize the workforces, to reorganize the business models and all that. I think the change here is that this is all happening much faster, which means that we need to be much more agile and bold about embracing this. I used to talk about this, 10 years ago, 11 years ago. If you read my shareholder letters and my speeches from that time, they were all about it. And it is here now. And it is happening at a breakneck speed, because these big model companies have money to make. They are in pretty deep holes with large amounts of funding raised. So they are not taking any prisoners. So the long answer, that's a long way to answer your question, which is that, yes, we have faced transitions like this before. Yes, it is happening much faster than before. So the windows are smaller. That means we need to act faster. We need to be bolder. But it can be done because we know that new categories of applications are in front of us, which can deliver tremendous value. So how fast can we abandon the parts of the business that are sinking, and how fast can we jump our workforce onto the new things that are growing is going to define the winners versus the losers. I cannot say to you X percentage of companies will not make it, etc. But I think it's a foregone conclusion that many of them will not make it and many of them will make it. The ones who are able to make this transition are going to have a wonderful future for the next decades to come.
Got it. So very, very bottom up, very, very company specific. Some IT service companies as well might reinvent themselves. and really turn out to be winners, I presume, is what
they have to.
The layman in me is understanding this. Am I correct?
Absolutely. And this is what I am working on. I'm not interested in building yesterday's companies. I am interested in building a next generation company which can thrive with this kind of a thing, because enterprises will always need help. And like you said earlier, enterprises are complex. So how fast can we reorganize ourselves and get our, act together in terms of training and skilling people, building the right business model and all of that, which is not easy, especially the bigger you are, the more complex it is.
Most certainly.
But it has to be done, and it has to be done fast.
The argument that some of the existing business models still have a moat because at the complex, high-stakes environment, people may not want to risk completely transitioning to AI-led work, and therefore that legacy ERP system might sustain for a bit. Is that a valid argument, or are there holes in that argument?
I mean, the transition always takes time. Waymo, we have Waymo now. They did 15 million or so rides last year. It's an astonishing engineering development. It's an incredible achievement. And yet, the DARPA Autonomous Driving Challenge was in 2006. That was 20 years ago. A friend of mine, Sebastian, made his car at the time. It takes time for this adoption to happen. That is true. But at the same time, I see I'm on several boards, and I see every company who is putting pressure on because they expect their own teams to deliver more productivity because of AI. They expect their suppliers to deliver more productivity because of AI. So they are demanding these efficiency gains already. So this is all happening now already. So it is an urgent situation, no doubt, but it is something where there is clearly a vast new horizon in front where we can thrive.
Got it. Dr. Sikka, at this recent AI Summit conversations, you praised the government's proactive stance on ethics, deepfake regulation, and safety, I presume. But you also stressed that India must build every layer of the AI stack itself rather than rely on others. Now, my question is, sir, is India late? Or do attempts like Sarvam and a few others give you hope? And also, given AI's massive energy compute demands, what specific foundational investments you believe should a country like India do?
So I think that India is too big and too important to the future of the world that we have to have a stake and a key position in every layer of the stack. This is, to me, an absolute must. This does not mean that we become insular, obviously. This is far from it. We have to embrace every partner, every great provider that is out there that can play a role in the AI of the future. We have to define the boundary and how we bring in other technology in there. But over time, there is no doubt that all the 5 layers, we have to have our own say in those. We must. Second thing is that it is still very early. This whole idea that, we did not build a foundation model and all that, I don't believe that. I don't subscribe to that idea. I think that there is a long way to go, whether it is in energy consumption or in the inherent safety and safeguards in the technology, bias in the data, appealing to low resource languages and people in underserved communities. When it comes to correctness and the ability to do reasoning, represent world models, the physical models, activities, and so forth. There is so much to be done in the decades to come that we have to both create workforces that are able to thrive with what we have today and build things like Sarvam, like you mentioned, which is an amazing initiative. But at the same time, we also have to do the leapfrog and go build the next generation of technology, which is a lot about, power efficiency, about correctness. I mean, I was just having dinner before I got on this call, and we eat, 1,500 calories, 2,000 calories in a day. That's like 15, 20 watt. The power part, that's a 100 watt light bulb, basically. 2,000 calories is like a 100 watt light bulb. And out of that, 20 watts or so goes to our brain, to our nervous system. That's it, 20 watts. When I shut down when my laptop goes on sleep, it is basically consuming that much power. So there is so much gain that is still to be done. It's still like, it's like the first over of a T20 match,
Okay, not necessarily a 50 over the test match by 2020, but even that is good enough these days.
Yeah.
No, just one last question, Dr. Sikka, if you have the time, just one more question.
Yes.
A countless
Sure.
number of Indian tech employees where the concerns run sky high about what is it that they should do, or for that matter, any employee who's got a tech future. Everybody needs to be tech enabled now. But let's say the software company employees in particular and employees in general, what is that one or two pieces of advice that you would give for them to reskill, upskill, or skill themselves at the start of the career to make the most of this wave, if I can call it that?
Learn AI, learn what it is, learn to understand the underlying technology itself, learn to use it, and use it to solve problems that are breathtaking. Like when this customer said to me, we have one of our customers, which is a massive company in India. They, one of the things they use my software for is to shrink down the time it takes to do reporting at the end of a month from 15% days to 5 minutes. You have a technology that you can use for a CFO to change their reporting from 15% days to 5 minutes. And the CFO told me that, Vishal, why would I waste 15 days of my employees' time if I can do this thing in 5 minutes?
Wow.
And this is reports that he gives to his board, to his audit committee. This is one of the iconic companies in the country. I cannot name them, unfortunately, yet, but, why wouldn't you solve a problem like that? Or, like the protein folding that DeepMind did, or all these amazing problems that are out there in healthcare, in agriculture, in manufacturing. Learn AI, learn to use AI, and use it to solve, unprecedented problems. I think there is so much that can be done.
Solid advice. Thank you so much, Dr. Sikka. Lovely talking to you. And maybe during the course of the year, once this wave has past grade 1 of its ferocity, we'll get a chance to talk to you again and learn more from you. Thank you so much for today.
Absolutely. Thanks so much, Neeraj.
Thank you, sir. And viewers, thanks for tuning in. Thank you, Dr. Sikka. Really appreciate it.
Awesome. Thanks, Neeraj. Bye.
Thank you so much. Bye-bye.
Ashish, thanks so much for taking the time. And first on the IT space, a lot of people are wondering whether the calls were right. Of course the calls were right, those that were underweight before this entire wave hit. But heading forward, what do you think is going to emerge once the dust settles?
I think as you and Neeraj were also talking, I think what we have to watch out for is who are going to be the new winners. Right? And I think we are very clear that if you look at enterprise spend on technology, on IT, that will increase significantly over the years, right? So every company, every business will have to adapt, and it will need to spend more and more on technology and IT. The question is that who will benefit from this spend, right? And clearly with all the IT tools that are coming in, all the AI tools that are coming in, the per unit cost of providing the IT service is coming down, right? But with the tectonic shift that is happening in the technology, the aggregate spend by enterprise will have to go up. Now, historically, we have had track records of companies to use and say that who's going to be beneficial in which domain. Some companies are stronger, for example, in BFSI, some are stronger in telecom, and that's been used for by us to kind of project how the revenue growth for each of the companies will be. But I think now we are going to be in uncharted territory, really to see which company will have products which will have capabilities to use these tools more efficiently. And the other important thing is that the beneficiaries may not be really dependent on the size, right? So it is not necessarily that those who have large workforces will get larger share of the revenue pie. So I think that's the challenge, that even as the enterprise spend will go up, who are the guys who will benefit from this spend might be very different from what has been in the last decade or so.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello and welcome to the big question on NDTV Profit. I'm Vikram Oza. Now, India's urban households, they're now outsourcing the grind, as it were. And yes, they're doing it in lightning speed as well. So urban companies InstaHelp, it has crossed 50,000 daily bookings. This is a landmark. Did it under a year now. It's a scale that urban companies' core services has reached only after 6 years. So you see the kind of impact that this entire sector has on urban life. We're talking about 10 to 15 minute turnarounds for cleaning and laundry, dishes, of course, and meal preparations. This is happening across Mumbai and Bangalore and Delhi, NCR, Hyderabad, Pune. So a habit formed by quick commerce is now spilling into the kind of home chores that we are so used and adept at doing. The numbers are racing. Orders have surged quarter after quarter. The revenues are climbing, and while losses, of course, they remain, but the adjusted EBITDA loss per order has become half of what it was. From about 760 rupees, it has gone to 381 rupees. So this is happening as utilization improves and the micro market densification is kicking in. So discounts are being cut now, and net order value is also rising. Early signs of tightening of that cash burn, as it were. And this is playing out in a market which around FY25 was anywhere between 5.1 and 5.21 trillion rupees. It is projected to hit as much as 8.4 to 8.5 trillion rupees by FY30, which means a CAGR of about 18 to 22%. It sounds promising. 85 to 90% of the demand is from India's top 8 cities. So this is not, of course, a one-horse race. We're talking about Snabit as well. Now, Snabit has raised as much as $56.2 million. Pronto is another player. It's about $13.1 million. And both of these are promising on-demand help in under 10 minutes. It's a contest that some investors compare to the early food delivery wars, which is why we're asking right now. The question on our show today is about InstaHelp. Now that it's hit 50,000 daily bookings, are home services the next startup boom that we're talking about? Yes, we've seen it in food delivery. We've talked about Zomato and Swiggy in the past and how it's done. But now looking at these kind of home services, is that going to be the next key driver for our startup ecosystem? Or is there going to be a lot of cash burn which will need to be fueled by VC money? All of that is up for a debate, and we've got the perfect panel to discuss this with. Let me introduce you to them. Right now on the show, let's welcome in Lloyd Matthias. He's an angel investor and independent director. Good to have you with us, Lloyd. K. Ganesh is also with us. He's been a promoter of Big Basket and Portier Medical and Home Lane. He's here with us along with Kushal Bhatnagar. He's associate partner at Redseer. And Janmajaya Nanda is with us. He's director at Tech Squad Team. Hello, everyone. Gentlemen, thanks for joining us. But before we dive deeper, let's begin with this first round of quick responses to my questions so that the audience immediately understands where each of you stands on the big question today. So if you can keep these answers concise, please, at least for the first round. And starting with you, Lloyd Matthias, you know, when InstaHelp is hitting that 50,000 a day mark in under a year, it's far faster, like we said, than urban companies' core services, how they manage to scale up. How do you read this? Is this durable demand forming, or is this a peak day spike, which is more likely to be driven by the supply pushes, the kind of promos that a company does?
Hey, thanks, Vikram. Good to be on your show again. I would be a little wary on these headline-grabbing numbers.
Okay.
Right? For two reasons. I think one is seeing an increased uptake of home services, right? I think this has been gradual over the last 2 years, and one has seen reasonably quick updates. I would get a little, be a little, easy on some of the big number claims. Having said which, I really see that this is something that seems to be catching on. In a quick sense, I would say just like e-commerce and quick commerce happened out of the blue, and no one expected, Blinkit and Zepto to take off. I think here too, a lot of people look at immediate help for small household chores, and very often as a replacement. If their regular home house help doesn't show up, nothing like getting someone. So I would say, yes, it's picking up. I think there's a whole generation of younger couples that are beginning to find the need of this, plus a lot of single person households and such like. So I think it's a positive move. I think it's available, and it deeply leverages India's large labor force and easy availability. So
Right.
I think it's clearly going to be an upswing.
So skeptical about the headline-grabbing numbers, but more positive about the overall growth of this segment. K. Ganesh, would you agree? This 10 to 15-minute fulfillment speed, can that category ever reach the steady state profitability without actually materially slowing down or raising of prices? Is that even possible? K. Ganesh.
Yeah, can you hear me?
I can hear you now.
Yeah. So this 50,000 bookings is generally impressive number.
Yes.
But the uncomfortable truth really is when you're pricing the services at 49 to 149, you're not really discovering demand.
Right.
You're actually manufacturing demand.
Right.
Okay. And at 49, I'm happy ordering someone to fold my socks. Right. But that's not clearly a market signal.
Right.
That's a signal of discounting and subsidy. So the real question is, what happens at 300 to 500 rupees, which is even urban companies saying that is the average order value to break even, which is 2 to 3 times the current pricing. That's a real test. Having said that, I do believe there is a genuine latent demand, as was mentioned.
Yes.
There are 50 to 90 million domestic workers, whichever numbers you take, that's a 5,000 billion rupees kind of a market, where only 1% online penetrated. And for reasons just mentioned, there's good positiveness about it, but the real test, I want to see what happens at 300.
So you're not quite sure whether it's the discounted prices which is manufacturing demand, or is this likely to sustain or not once we get realistic about the pricing? Kushal Bhatnagar, what do you say, especially on the competitive front, because multiple reports are suggesting that the instant home help market is consolidating into this two-horse race. There is Urban Company, you have a Snabbit as well. So from a market structure kind of lens, do you think a duopoly is inevitable in a space right now like the one that we are talking about, or you think that a credible number 3 like a Pronto, for example, can still break through with a differentiated kind of model in this universe?
Yeah, so typically when we have looked at marketplaces, whether you talk about mobility or you talk about food delivery or quick commerce, we have typically have had a 2 to 3 player play, even in scaled industries. And generally, the first 2 players are the ones who have grabbed the market first, and the third one has been a challenger who challenges the market on some particular front, right? So when we borrow that learning and apply that to home services, especially in metros and the high demand micro markets, there is space for 2 to 3 players to sustain. And when we've also looked at some of the micro market level performances of these players, each of these players have different strengths in different micro markets.
Right.
Because it's a lot more about local execution rather than a broad model. So whoever captures a micro market first and executes very well in that is likely to stake share in that market, and so on and so forth.
Right. So it's easier to scale when you have you're catering to a micro market. Janmejaya, competitors Snabbit and Pronto, they've attracted tens of millions of dollars and they're scaling fast. They're trying to match Urban Company's push in instant help. So is this kind of VC firepower, is it expanding the market constructively? Or do you think this is a kind of inflating burn in a way that is going to force some kind of painful correction in the future?
No, this is not the correction. If you see 50,000 booking a day, and if you calculate it is coming something like 1.5 million per month, which is exactly like 18 million per year. This is the volume, we are talking about. So if you see the scaling in the market comes in India and international, like both in India and international, if you say in home service, we do a couple of services like AC repair, cleaning, beauty, plumbing. A lot of services is there. So where we are getting, actually customers are looking right now after COVID-19, the customer are very prone to do home service, Somebody has to come to the service and give this kind of kind of model, like how we can do better in the home service. So I would say like this is the real demand of the customer. Nowadays, people are very, if you see before 10 years or now, people are really prone to do the home service, That is really great, and we are doing really the service is growing day by day,
So yes,
so
of course.
Not the market fit in the industry.
Yes. So the menu is growing and the demand is driving the business, as it was your take. Lloyd Matthias, Consumer behavior is clearly shifting. Now, urban households, they book these micro chores. Like you started talking about this as well, the unpacking of the wardrobe, the tidying of the house, the preps before the gatherings taking place, the social gatherings. All of it goes beyond the dishes and the laundry. So yes, there is an expansion of the menu. Some micro markets, they're seeing up to 8 bookings a month per user cohort. So one wonders if this is a deeper cultural transition, or is it going to be a convenience spike which could plateau when the novelty rides out, when the discounts fade as well?
Great question, Vikram. I would say that this is actually a quiet culture change. I know households that have full-time domestic help, albeit this may be a very small percentage of the households, but very often they ask the requisition for additional services, right? So people want, let's say, a barman for a special party. People suddenly realize that they're going to be out for a couple of days. They need someone to do some dog walking services, including things like babysitting. So it's a wide variety of things, as was pointed out by the previous panelists. But I would say 2 things. I think one, there will be a lot of hyper-localization. Different markets have different characteristics. Some may need things like electricians, plumbers, carpenters at short notice. Some will require more evolved services like barmen, waiters, and such like. So it's going to happen. The second point, and I would certainly go back to the point that Mr. Ganesh made, is that one has to see the price elasticity, right? I know that this is rapidly growing, but to what extent are consumers going to be willing to take on this additional service, right? And to what extent? 150 rupees looks pretty good, but when this pricing stabilizes, or is it clearly that we are in a land grab stage where everyone's just trying to, get the highest numbers so they can in turn pitch to their investors and say, okay, we are growing at the fastest pace? I think that needs a little watching, and therefore one will be a little cautious in kind of reacting to the numbers as of now.
So indeed, absolutely. And Mr. Ganesh, perhaps you can weigh in on this, especially when you talk about the supply side, because these kind of business models, they like these fixed shifts. There is an assured 20 to 25,000 monthly earnings, like Snabbit is doing it, and they are being used to deliver reliability in the 10 to 15 minutes kind of span of time, but they require heavy onboarding. They require training. They require incentives to get that supply side fixed. So do these kind of business models, are they going to truly uplift livelihoods of workers? Can that happen at scale, or are they operationally still very fragile without any kind of sustained subsidies?
Yeah, so no, that's an important question because India's digital economy right now is growing, and the key question really becomes, are we platformizing or are we formalizing this gig economy?
Correct.
Right? And we need to be honest about the distinction between the two. Okay, right? If you are formalizing, that means we need to get workers social security, health insurance, minimum wage guarantee, skill certification, pensions, and all of that stuff. I was on the board of Domestic Workers Sector Skill Council, that a Government of India entity. Okay, right? And this question keeps coming up. What the platforms currently are offering is just digital visibility, some level of insurance coverage, payment through UPI. That's not really formalization. I mean, you're organizing to some extent the informality. In fact, if you see the latest economic survey 25-26 that was tabled last month, okay, it's very blunt about this. Okay, India's gig workforce has grown to 12 million, but most workers remains classified as independent contractors or platform partners. These are labels specifically designed to avoid employer obligations. Okay, right? The Code on Social Security 2020 formally recognizes the gig workers, but implementation has been just glacial. Now, having said that, and this is where I'm very, very bullish, even organized informality is a step up from where we are.
Right.
India's domestic health market is completely unregulated, completely informal. No records, no insurance, no accountability. Even if the Insta Help or Snabbit worker gets insurance, earns this 25,000 to 30,000 a month transparently through digital payments, gets some level of skill training, I think that is great progress.
Right.
Incomplete progress, but progress. Okay, right? And we have seen this in Big Basket, vis-a-vis Kirana stores.
Yes, you have that experience behind you, yes.
Kirana stores will get destroyed. Nothing happened. The Kirana stores came up.
They survived.
So I think the workers deserve that honesty.
Right.
Let's not pretend that gig work is same as formal employment, but it's definitely a positive step much
So it's
better
moving
than
towards
yeah.
formalization. You think this is an entire space which is moving towards formalization from the entire informality of it. Kushal Bhatnagar, you tell us from the business perspective, the broader home services opportunity right now. From the numbers, we're looking at it, it seems large and it is growing fast. And the category is increasingly now skewed towards the metros, the big cities. How do you feel about this multi-billion-dollar outcome that is being projected for this kind of business, the instant health business? Are these projections that are being made, are they overextended compared to what you see currently as unit economics?
Yeah, so I think the way we have seen the model evolve, and even looking at some of the other convenience-seeking services, it seems like a metro-first play. And it seems like even in the years to come, it will stick to the top 8 to 10 cities for the most part. Yes, there may be small demand here and there in other cities, but metro is where majority of this market would actually lie, even in the long term. When I compare to quick commerce as well, almost 70-75% of quick commerce GMV still comes from the top 8 cities, of which 50% will be top 3, right? So there's a very strong concentration of demand in convenience-seeking services that exist within metros, and within metros as well, there's specific micro markets where this exists. So I believe there will be a lot of consolidation that will exist in the top market itself where this industry will thrive.
Right. So there will be that concentration. Janmejaya, talking about concentration, one wonders in terms of festive months. We've seen 8 to 9 lakh instant service orders that we've seen industry-wide. And of course, Urban Company has that share, which is about 60 to 65%. So it's a clear seasonal spike that we see, at least in Urban Company's case. But should operators now benchmark strategy to that festive peak behavior? Like, you know, you build capacity for that time, or on the pricing front, you offer those incentives as well. Does that make sense to plan around a lower stable baseline to avoid any kind of whiplash in the utilization and the burn that you see in these kind of businesses?
See, when we give discount, like if you see home service, in festive season, we get a lot of customers because customers is the discount. And we have the customer base, like they would say, okay, we have discount on the festive season. So service like cleaning, painting, so those would be attracting more. But here, you know, we are having a lot of returning customers. 40 to 50% customers are coming on the returning side, you know. When the returning customer comes, so discount doesn't work that much. You know, they are our customer always, right?
Right.
So they used to have the services either in festive or non-festive season. It will be always the service is there. You know? So 50 to 70% booking are coming from the repeating customers, even if it is festive or non-festive season. You know.
Right.
But here, you know, in summer season, like we have AC, you know, in summer we have a lot of hard, so people used to take the service on the AC services, right?
Right.
So here, the discount, they would to see this, they don't look the discount much, you know, they would to see like how we can get the service faster, you know, the faster concept.
So you're saying it exactly against what we heard from Mr. Lloyd Matthias when he started out by saying that this is actually manufacturing demand. The discounts that are going out right now and pricing as it kind of firms up in times to come after we have the unit economics in place, that's actually going to determine the success and the sustainability of this business. Mr. Matthias, do weigh in on this. What would you say is the single biggest marker now, if you had to look for one in the next 6 months or a year's time to confirm that this demand is truly sticky? What would you say that would be?
I would look at 2 markers, Vikram. I would say one is reliable unit economics for service providers and the platforms.
Okay.
I think, you know, that pricing has to determine, not as we see it right now in a land grab phase. And secondly, I think high repeat usage and customer retention. Is this just like a set of one-off fad, or people just doing it on festivals and special occasions? Or are people going to use them on a regular basis? Which means, you know, once or twice a week, I need to get someone to, let's say, walk my pet. Every time I have a party, I want someone to, you know, kind of help fix great cocktails. So I think it's whether how people start using it, what is the stickiness, and whether it moves beyond just the big metros and the relatively more upmarket condos. Is it a habit that's taking in the country, or is it just a very surface, very upmarket phenomenon? I think that's what I would watch for.
So the sustainability of it resting on two very important factors. There's no taking away from that. But let me take that across to Mr. Ganesh as well. You know, what's that one operational change that can have the biggest impact on improving the unit economics without compromising on speed? Because speed is an essential element over here, that 10 to 15 minute fulfillment. It is a pressure. And there is now a stricture against it as well. But talking about how this business model is going to evolve, how do you think any kind of operational change is going to impact unit economics?
See, here the unit, see, people are starting this, and here, Snapit, for example, started by somebody who's worked, the founder worked in Zepto. Okay, this model is fundamentally different from the food delivery model or the quick commerce model.
Right.
If you don't recognize that, we'll end up repeating the same cash burn cycle. Okay, right? The similarity is both burn cash, they acquire users to burn cash, and they want to build habit and then hope and pray for unit economics to work. We saw this with Zomato, Swiggy, Blinkit, Zepto. Okay, right? And somehow, I'm not complaining, but India seems to have an infinite appetite for funding cash burn to get category creation stories. But the home services is structurally different and actually much harder. In food delivery, your supply is a restaurant that already exists with all its infrastructure. In quick commerce, your supply is a product which is there in the dark store. In home services, your supply is a trained human being who needs to physically travel, spend 1 to 2 hours at someone's home, perform a service that is inherently variable in quality. You cannot standardize a maid the way you standardize a packet of Maggi noodles or a product.
Right.
The second difference is frequency and habit formation. Quick commerce can get you ordering 3 to 4 times a week because the basket is diverse. Groceries, medicine, electronics. Home cleaning is much, much narrower.
Correct.
Urban Company itself says 60% of InstaHelp usage is still event-driven. Now, event-driven, you cannot build a unit economic model. Maid did not come today. Guests are coming over for a party. Only 30% is habitual. That's a problem because event-driven demand is unpredictable.
Right.
Doesn't build the daily habit loop that quick commerce has cracked. And the third difference, and I'm being bullish here, is that the market is being replaced. That is being replaced by these is truly broken.
Right.
There is no reliable alternative. With food, you could always eat out or cook. With domestic help, if your maid does not show up, you are really stuck. That desperation creates a real willingness to play.
Yes.
So, but it's a structural advantage food delivery does not have.
Right.
But we are now repeating the cash burn cycle.
Right.
Underlying need is more acute, more frequent,
Yes.
more underserved, but execution and not demand is the problem. Density, hyper-local density.
Hyper-local density.
Because the maid should be able to walk 200 meters and be able to serve the next customer.
Right.
Now that I find it very difficult. Within 200 meters, you will need somebody who needs a maid for an event-driven situation. The maid does not come.
So very quickly, let me go across to Kushal since we are running out of time. But Kushal, do you see average order values rising meaningfully? Could that happen in the next 2 to 3 years? Or is the ceiling already visible right now?
No, I think there will be a push by platforms for this number to go up. I think like my fellow panelists also stated, I think for the economics to work, the AOVs have to cross a particular threshold, and they are clearly not at that threshold, right? So one, as the repeat user base increases, if you just go to the services today, there's a different pricing for a new versus repeat user. So the blended average, of course, will go up. So that will push up the platform AOV. And secondly, I think the kind of discounts that the platforms are exerting, they'll take those off at once the habit formation is kicking in. Because when we also conducted a few consumer surveys, we spoke to a few consumers who use this.
Right.
Pricing doesn't come across as the most important factor for them to book.
I see.
It is the availability of supply and the quality of their prior experience, and then the price.
Right.
So between these two factors, the AOV has to go up for this model to work, and there will be a push by platforms to make that happen.
Right. Of course, we'll have to see whether this instant home help model is built to last. The jury is still out on that one, and we'll see whether this can scale up to becoming the growth driver for our startup economy. This instant home help has tapped into a very real urban need. There's no taking away from that, like all the panelists are indicating, but whether it becomes India's next breakout startup category is going to depend on the delicate balance that we have between speed and sustainability and solid economics. Now, these are compelling views we are getting on demand durability, on worker models, on unit economics and market structure, and the cultural shift that we are seeing, which is, of course, driving this space, this universe. But as always, the truth likely sits in that tension between the promise of the space and the practicality of running a business. It's where innovation, capital, and consumer behavior, they will continue to collide. And that's that important meeting point. A big thank you to our panelists, Lloyd Matthias, K. Ganesh, Kushal Bhatnagar, Janmejaya Nanda. Thank you very much for your time, your candor, and your insights into this developing space, the entire opportunity in business. And that's where we're wrapping it up on this edition of The Big Question. Of course, there will be more big questions that we will answer, especially in the AI universe. Those don't cease to exist, don't they? But we will take them up as we meet tomorrow as well. I'm Vikram Oza from me and the team. Thank you so much for joining us. Good evening.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
you so much for tuning in to Market Express with me, Shreyanti Singh. Let's get straight into the show. This is the show that will get you a snapshot of everything that is happening right now, be it headlines, even the top buzzers of the day. Now, Nifty IT Index, that's also something that we should be talking about right now because that dropped over 4% amid fears of AI disrupting business models. The sector has now slid over 20% so far in the month of Feb, erasing 7 lakh crore. In terms of the market capital here, now IT stocks are pressured by mounting concerns over AI-driven business disruptions and the impact of persistently high US interest rates. So that's something that you're looking at even when you talk about the picture when it comes to IT. Let's also talk to you about brokerages. In fact, turning cautious on the IT sector then because they're acknowledging that an earnings turnaround could be ahead. CLSA in fact says that the macro cycle may improve this year, but also warns that stocks could see further downside in the near term and has trimmed target prices across several majors. Now, when you talk about HSBC, they've in fact flagged the risk of pricing pressure from AI over the next few years, though it believes other revenue streams can cushion the impact. Citi, meanwhile, says that growth remains healthy for now, but the sector must avoid any year-on-year slowdown, and that's something that we're looking at in terms of the brokerage view here. Let's also talk to you about cyber security stocks that were trading under pressure globally after fresh AI disruption fears. The trigger is Anthropic's new enterprise security tool, which has raised concerns that automation could dent traditional cybersecurity revenues. Global names have been seeing sharp selling and the weakness is spilling over to Indian stocks as well. And now, when you talk about the view coming in from analysts, they're saying that the reaction may be ahead of fundamentals, with focus now shifting to earnings guidance and even how companies integrate AI into their offerings. Let's also talk to you about Airtel that is entering the lending space now with the launch of its NBFC arm, Airtel Money Limited. Now, the company has secured a license from the Reserve Bank and plans a phased capital infusion over the next few years. So that's something that you're looking at, 2.5% downtick coming in for that particular counter with support from its promoter group. They're going to be making this particular foray. The strategy is to leverage Airtel's large telecom customer base and also expand digital lending. Now, when you talk about the management commentary coming in here, they believe that there is significant headroom for growth in India's under-penetrated credit market despite rising competition. Let's also talk to you about some of the brokerages in terms of the verdict here when it comes to Bharti Airtel. Morgan Stanley maintains an overweight rating on this particular counter with a target of about 4,500 rupees. Now, the brokerage sees the launch of its NBFC arm as a strategic step to deepen diversification into financial services. It also highlights Airtel's already established lending platform and says a dedicated NBFC structure could unlock incremental revenue streams, although it will be more capital intensive, and that's the view coming in terms of the brokerages here. Now, the street is going to be watching out for how Airtel manages operational separation between its own lending book and also partner institutions. Let's also talk to you about the government cutting the RoDTEP rates by 50% with immediate effect, reducing export support for the textile sector. In fact, that caused quite the rout when you talk about some of these counters that are flashing on your screen. So Gokuldas Exports as well as Kitex's Garment, among others, were falling in trade. This follows the FY27 budget move to lower the overall allocation towards RoDTEP. And for exporters, these incentives, in fact, put a key margin cushion. And that's something that you're looking at as a background here. Home textile companies are seen as the most exposed, followed by garment makers, while yarn and fabric press also are going to be seeing a relatively lower impact coming in here. The focus now shifts to pricing power and cost control. Let's also talk to you about IDFC First that is in focus. In fact, you do have Haryana's Chief Minister saying that the entire 590 crore lost in the IDFC First Bank fraud has been recovered within just 24 hours, addressing the State Assembly here. Now, he said that about 556 crore rupees was returned by the bank, along with roughly about 22 crore rupees as interest. The funds included money belonging to Haryana government departments and boards as well. The Chief Minister alleged that 4 to 5 million lower level bank employees colluded in the fraud. He's also assured strict action against anyone involved and also announced the formation of a high-level committee to fix accountability and prevent such incidents in the future as well. In fact, IDFC First Bank has clarified that it has fully paid principal and interest dues to the Haryana government. Now, the bank says that it remains committed to working closely with state authorities and law enforcement to pursue those responsible for this particular fraud. IDFC First Bank, in fact, also emphasizes its focus on recovering any outstanding amounts and ensuring accountability while also maintaining strong cooperation with the government. Now, big leadership change at Suzlon Energy is something that we should be talking about right now, because you do have the company that has appointed Ajay Kapoor as its new group CEO as Suzlon pushes into its next phase of growth and diversification. Remember, the company has spent the last few years cleaning up its balance sheet and rebuilding market confidence. Now, with the renewable sector booming, the company wants to move beyond traditional wind solutions and expand into newer as well as emerging clean energy segments. Now, you do have Kapoor's appointment that signals a more aggressive expansion strategy, bringing in someone with deep experience managing large industrial businesses. The idea is to sharpen execution, widen the portfolio, and position Suzlon for the next energy landscape of the next decade itself. Let's also keep it going and get back to the word coming in from brokerages, because MOSL has initiated coverage when it comes to Nadanark. That was one counter that was buzzing away in trade, as you can see on your screens as well. There's a buy rating that they have and a target of about 360 rupees, signaling an upside of about 46% versus the current market price. And you do also have the brokerage highlighting that the company's scalable, tech-driven credit platform and a balanced business model that supports stable earnings is something that they're looking at. Nadanark's direct-to-consumer lending now forms more than half of its portfolio, while disciplined risk management continues to deliver resilient asset quality as well. In fact, MOSL expects strong growth in both AUM and profits over the next few years, with valuations remaining attractive at under 1 times price to book. Let's also talk to you about MobiKwik's subsidiary that has received approval from the Bombay Stock Exchange to begin its stockbroking operations starting February 24th. Now, this follows the company's SEBI registration granted in July 2025. With this final clearance, you do have this particular subsidiary now authorized to execute equity trades, including buying, selling, dealing, clearing, and settlement, marking the completion of all major regulatory steps needed to operationalize its broking business. And that's the latest update that you have coming in as of today when it comes to this particular counter. Let's also talk to you about Vari's subsidiary that has taken a major step forward in its clean energy ambitions by expanding its 2.5 gigawatt electrolyzer project as well. Now, the company has inked a strategic MOU that includes the supply of 50 megawatts of electrolyzers, strengthening its footprint in the fast-growing green hydrogen space. Alongside this, the arm has also bagged a 500 megawatt solar module order, further boosting its integrated renewable energy pipeline. Now, together, these developments position Vari as a stronger player when it comes to both solar and even hydrogen technologies. Let's also talk to you about Patel Engineering. Through its joint venture, this company has been declared the L1 bidder for an irrigation project worth about 133 crore rupees. The company's share in the project stands at about 68 crores. The awarded work is expected to also significantly strengthen the company's order book and also reinforce its presence when it comes to the infra and irrigation segment. Now, the project is slated for completion within 48 months. So that's the timeline that you're looking at here, marking another long-term execution opportunity for the JV. Let's also talk to you about Pace Digitech that has secured a major 159 crore purchase order from Reliance Industries. Now, the contract involves supplying lithium-ion battery packs, strengthening the company's position in the energy storage and battery solution space. The order underscores Reliance's trust in Pace Digitech's manufacturing capabilities It also marks a significant addition when you look at their order pipeline as well. Deliveries under the contract are scheduled to be completed by August 31st of this year, giving the company a robust execution timeline going forward. Let's also talk to you about some word coming in from the brokerages. Morgan Stanley has reiterated its overweight rating on Indian Oil Corporation with the target price of 219 rupees per share, expecting the stock to rise meaningfully in absolute terms. The brokerage notes that IOCL has returned to growth in both fuel market share and also capital allocation efficiency. We're also looking at strong operational performance and strategic investments that are projected to drive a sharp improvement when you talk about their profitability as well, with EBITDA estimated to nearly double by financial year 28, underscoring a bullish long-term outlook. Let's also talk to you about one other counter, Signpost India, that is one of 450 crore thereabout order, 10-year extendable order that you're looking at here. Now, exclusive outdoor advertising contract is something that they've managed to bag from the Calcutta Municipal Corporation under the Kolkata Streetscape Renaissance project. Now, the deal grants premium advertising rights across the key stretches. So that includes Park Street, that includes Kamak Street, Theatre and Park Road as well. And that's something that reports are indicating. The company projects about 450 crore in gross advertising revenue, while KMC is expected to receive somewhere close to 250 crores, supported by an annual fee of about 16 crores with 5% escalation every 3 years. Now, this long-term PPP project significantly strengthens Signpost's footprint when you talk about the high visibility urban zones, and that's the takeaway that you should be taking from this particular report. Let's also talk to you about Samvardhana Madison International in partnership with Marelli that has inaugurated a new manufacturing facility in Gujarat. Now, the plant has been set up under a strategic joint venture and will focus exclusively on advanced exterior lighting systems for the automotive sector. Now, this is a move that you're talking about that strengthens the company's presence when you talk about the high-value automotive components and also expanding its manufacturing footprint in the country. That's also something that you should be looking at. The facility is expected to cater to both domestic and global automobile makers. Let's also talk to you about PNGS Reva Diamond Jewelry that will launch its 380 crore rupee IPO from today to February 26. The issue is entirely a fresh issue with a price band between 367 to 386 rupees per share and a lot size of 32 shares. The company operates 34 stores across Maharashtra, Gujarat and Karnataka under the brand Reva. It sells diamond and gemstone jewelry in gold and platinum. Proceeds are going to be funding 15 new stores thereabout and even marketing spends. That's something that the company is backing with the help of these proceeds. Financially, the income rose to about 259 crore rupees in financial year 25. Profits stood at 59 crore rupees, though margins have moderated over the past 2 years, so that should give you a little bit of background when it comes to this one. Let's also talk to you about Centum Electronics that has secured a large order from Hindustan Aeronautics for its radar systems. Now, the contract worth about 668 crore rupees will be executed in 2 phases. The company is expected to deliver the systems over the coming months, further boosting its order book and even their revenue visibility. Let's also shift focus onto some business news. Then the Union Cabinet has approved a series of key infrastructure and policy decisions amounting to over 12,200 crore thereabout. The measures include major railway expansions, a new integrated terminal when you talk about the Srinagar airport, and even an extension of the Ahmedabad Metro Phase 2B. The government has also approved reforms in the power sector. The cabinet has also, in fact, approved enhanced delegation when you talk about the power grid to increase the equity investment to about 7,500 crore rupees per subsidiary. Now, it's also set a new minimum support price for road route, and that's another update here. Among the policy decisions, the centre has formally approved changing the name of Kerala to Keralam. These clearances aim to boost connectivity, improve state infra, and also support agricultural producers. So that's something that you should be looking at as the takeaway here. Now, let's also talk about a futuristic breakthrough from India's aviation tech space. Chennai-based the Eplan That's a company that you're talking about that is teaming up with NVIDIA to develop what could become the country's first electric air taxi. The goal is simple but ambitious: short hop aerial mobility inside cities. Think airport transfers, medical transport, or even quick intercity hops. That's something that you're looking at. So India's getting its first air taxi without the noise, pollution, or cost of helicopters. NVIDIA is going to be providing advanced AI and simulation tools to design safer and more efficient aircraft systems. Now, E-Plane brings the engineering and aeronautics expertise. If successful, this could open up a completely new segment in urban transport, one that blends aviation and even EV innovation. It's early days, of course, but this partnership puts India firmly on the map in the global race for next-gen mobility solutions. Let's also talk to you about a major legal escalation in the US logistics space. FedEx has filed a lawsuit against the administration of US President Donald Trump, seeking refunds for tariffs it says were improperly withheld. This follows a recent Supreme Court ruling that opened a pathway for companies to recover certain duties paid under previous trade actions. Now, when you talk about FedEx, they want its share of those refunds, arguing the government unfairly blocked reimbursements. The case matters for more than just FedEx, though, because it could set a precedent for how companies challenge historical tariff collections. At stake are millions of dollars and potentially broader trade policy implications. So yes, this is another chapter in the long-running battle over US tariff rules, and FedEx is now taking it head-on. Let's also talk to you about the global AI battle that is heating up. Anthropic has accused Chinese AI developer DeepSeek, Moonshoot, and Minimax of stealing the capabilities of its Claude model. Anthropic claims these companies illegally replicated or reverse engineered key parts of Claude's architecture to accelerate their own AI products. The firms named in the complaint have rejected the allegations at this point in time, but the case has already triggered global attention. And you must be wondering why, right? Because this is not just a business dispute, it touches on national security, AI ethics, intellectual property protection in one of the world's most competitive industries at this point in time. With regulators in the US already tightening AI controls, this legal fight could have wide-ranging consequences for cross-border AI development. And finally, the Hollywood takeover saga just got more dramatic here. Paramount has raised, in fact, its offer to acquire Warner Brothers, intensifying the fight for control of one of the industry's most iconic studios. This comes even as Warner is still backing its merger plan with Netflix, but Paramount's improved offer puts fresh pressure on Warner's board and shareholders to reconsider. Now, the new unspecified bid improves on the $30 a share all-cash proposal that Paramount took directly to Warner Brothers shareholders on December 8 and addresses some of the company's concerns with previous Paramount bids, according to the people who asked not to be identified because the details are not public. You do have Warner Brothers that reopened those talks with Paramount for a 7-day period ending Monday. If the Warner Brothers board deems the new Paramount offer as superior to the current agreement, Netflix will have 4 days to respond. So that's the timeline that you're looking at here. On to national news, then India is gearing up to launch its long-anticipated nationwide HPV vaccination program aimed at preventing cervical cancer among adolescent girls. Health Ministry officials have indicated that the vaccine's rollout is expected within the next few months. As part of the National Immunization Framework, the move aligns with India's broader public health goal of eliminating cervical cancer, a disease that remains one of the leading causes of cancer deaths among Indian women. With strong backing from global health bodies and domestic policy commitments, the upcoming program is set to provide free HPV vaccination for girls between the ages of 9 to 14, significantly expanding access and strengthening preventive healthcare efforts nationwide. Let's also move on and talk to you about some more news and updates. New details have emerged about the tragic air ambulance crash in the state of Jharkhand. According to reports, the aircraft crashed within 23 minutes after taking off from Ranchi after losing contact with air traffic control. Moments before impact, the pilot reportedly requested a route deviation, suggesting deteriorating weather or technical difficulty before the aircraft went off radar. Now, the air ambulance was transporting a patient and medical team when it crashed in a forested area. Search and rescue teams located the wreckage soon after, and further investigation is underway to establish the exact cause. Officials say that they're examining communication logs, weather conditions, and technical records of this particular aircraft. Families of the victims have been briefed, and a full DGCA probe is in motion right now. Now, the newly launched Namo Bharat rapid train on the Delhi-Meerut corridor recorded over 1 lakh passengers on its first full day of commercial operations. This marks the highest ever ridership on this particular route. Now, the NCRTC has said this comes a day after Prime Minister Modi inaugurated the complete 82-kilometer corridor along with the new Meerut Metro Link, making the entire stretch fully operational. Now, the Namo Bharat RRTS, designed for speeds up to 180 kmph, is expected to significantly cut travel time between Delhi, Ghaziabad, Modi Nagar, and even Meerut. Let's also move on and get you some other news and updates. Supreme Court has issued notice to the center as well as the Uttar Pradesh government on a PIL seeking effective implementation of the 2024 EV charging infra guidelines. The petition says several states are not enforcing the guidelines uniformly, creating difficulties for residents in housing societies to install EV charging units. The plea seeks directions to enable group housing societies and RWAs to provide safe charging infra and allow residents to install private chargers at their own cost. Now, it also calls for strict compliance with fire and electrical safety standards, and the court in fact has sought responses from the governments as well. Now, US President Donald Trump's new global tariffs have come into effect at 10% lower than the 15% rate he had indicated previously. The temporarily imposed duty was imposed under Section 122 of the 1974 Trade Act, allowing tariffs for up to 150 days without congressional approval. The move follows a Supreme Court ruling that blocked several of his earlier sweeping tariffs under emergency powers. The White House has not issued any directive to raise the rate. Analysts, in fact, warn the shifting policy could raise trade tensions, with countries including the UK, EU, and India reviewing their responses. And a powerful winter storm has battered large swaths of the United States, grounding more than 11,000 flights and knocking out power to over 500,000 homes. The blizzard brought heavy snow, strong winds, and dangerous travel conditions across the central and eastern states. Airports from the Midwest to the East Coast saw widespread cancellations, leaving travelers stranded. Thousands of customers remain without electricity at this point in time as utility crews work to restore service. Authorities have warned of icy roads, reduced visibility, and continued snowfall, urging residents to stay off the roads and prepare for prolonged disruption. And a helicopter carrying 7 people has crashed into the sea near the Andaman Islands, but all aboard were successfully rescued. The aircraft went down off the coast during flight, prompting an immediate search and rescue operation involving local authorities. All 7 passengers and crew were pulled safely from the water and taken for medical checks. There are no reports of serious injuries so far. Details on the cause of the crash are still being assessed by officials. The Navy and Coast Guard were among the agencies that responded to this particular incident. Well, with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in. Stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table.
Cabinet approves power sector reforms, gives the nod for an enhanced delegation to Power Grid to hike the equity investment of 7,500 crore rupees per subsidiary, also changes Kerala's name to Keralam. Market ends in the red with benchmarks falling over 1% lower. Nifty closes below 25,500 mark while Sensex loses over 1,100 points. Broader markets reflect the fall in benchmarks. Anthropic fear hits Indian cybersecurity stocks. Names such as Quick Heal, TAC Infosec and Tech T Cybersecurity lose between 5 and 20% after Anthropic's new enterprise security tool triggered AI-driven disruption fears. Textile majors trade under pressure after government slashes remission of duties and taxes on exported products by 50%. Scheme provides refunds of taxes, duties and levies incurred during manufacturing and distribution of exported goods. N. Chandrasekaran reacts after Tata Sons board meet, says he recommended that his reappointment be deferred on request of some directors. IDFC First Bank clarifies that it has paid out 100% principal and interest to Haryana government. Clarification comes the same day as Haryana Chief Minister Nayab Singh Saini claims that entire amount lost has been recovered. Trump's temporary 15% tariffs take effect from today. These replace the tariffs struck down by the US Supreme Court. Experts question the legality of these tariffs under Section 122 of the Trade Act of 1974. Prime Minister Modi will embark on a 2-day state visit to Israel. From tomorrow, he will hold wide-ranging talks with Israeli PM Benjamin Netanyahu and attend a series of programs scheduled later. Hello and welcome viewers, this is Mallika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest insights on markets, national as well as international stories. Let's begin with a spree of major decisions taken by the Cabinet today. Many stand out due to their importance in fields like infrastructure. The Union Cabinet has cleared over 12,236 crore rupee worth of key infrastructure and policy decisions, including major reforms in the power sector. For instance, the Cabinet has raised the equity investment limit for Power Grid to 7,500 crore rupees per subsidiary. Besides that, the Cabinet has also approved changing Kerala's name to Keralam. Let's go across to my colleague Rishabh Bhatnagar to take us through the key Cabinet decisions taken today.
Well, the Cabinet on Tuesday has approved several railway projects, one new terminal that is to be built at the Srinagar airport, a couple of interesting railway line extensions as well. But what stood out was, of course, the name change of Kerala to Keralam. And also what stood out for business viewers is the power sector reforms that came in the form of Power Grid being able to bid for larger projects now. So what exactly has happened with Power Grid is that there is enhanced delegation that has been approved. Currently, there's a 5,000 crore rupee per project limit that has been extended to 7,500 crores in the case of Power Grid. So earlier, what used to happen is that there were DPE guidelines that would limit Maharatna companies to approve equity investments up to 15% of their net worth. That means that Power Grid's net worth roughly around 90,000 crores, 15% of that would be around 13,800 crores. But the 5,000 crore rupee limit per investment per project was proving to be a limitation for them. They weren't able to invest in a lot of and participate in a lot of high value projects. But that is now set to change with this change that has come in. We're seeing that it will be able to now participate in high value tariff based competitive tariff bidding processes. What we're seeing is that it can also now participate in the several HVDC projects that are coming in, which are the high voltage direct current projects that the government has put out. And this is going to be a regular feature in the future. You'll have a lot more HVDC projects coming in because of the national grid wanting to become more and more robust as demand spikes. So that's what we're seeing when it comes to cabinet decisions.
So let's zoom in on the Cabinet's decisions on Power Grid, one of India's largest public sector companies that helps build and run the highways for electricity. As Rishabh explained, what changes? Earlier, it could invest only up to 5,000 crore rupees in each of its subsidiaries. Now, this limit has been raised to 7,500 crore rupees. This change follows the existing rules for Maharatna companies, which are top-level public sector enterprises like Power Grid, set back in 2010. Now, why the change limit now? It's because India is building huge solar and wind parks far away from cities. To bring this clean power to homes and factories, we need bigger and costlier transmission lines. The old limit was stopping Power Grid from bidding on the largest projects, but the new limit removes this hurdle as it can invest a bigger sum. In simple words, this means more clean electricity, lower costs, and faster development for the country. Before I bring in our esteemed guest to discuss this story further, let's listen in to what the IT Minister Ashwini Vaishnav said on the same. Listen in.
पावर सेक्टर के इस रिफॉर्म से जो सबसे बड़ा बेनिफिट ये होगा कि जो बड़े प्रोजेक्ट्स होते थे, उन बड़े प्रोजेक्ट्स में जहाँ पे ज़्यादा इक्विटी की ज़रूरत होती थी, वहाँ पे पावर ग्रिड पार्टिसिपेट कर नहीं पाता था, कम्पीट नहीं कर पाता था, उसमें पार्टिसिपेट नहीं कर पाता था, क्योंकि इसका लिमिट था 5,000 करोड़ रुपीस तक की इक्विटी आप एक सब्सिडरी में लगा सकते हो, उससे ज़्यादा इक्विटी नहीं इन्वेस्ट कर सकते। 7,500 करने से बड़े प्रोजेक्ट्स में भी पावर ग्रिड की पार्टिसिपेशन बढ़ जाएगी। और अभी बहुत सारे HVDC हाई वोल्टेज डायरेक्ट करंट के प्रोजेक्ट्स नए बनाए जा रहे हैं, जो हमारी ग्रिड को आने वाले समय के हिसाब से बहुत एक रोबस्ट ग्रिड बनाने का काम है। उन सब प्रोजेक्ट्स में कैपिटल बहुत लगता है, इक्विटी भी प्रोपोर्शनेटली ज़्यादा लगती है, तो उन सब में पार्टिसिपेट कर पाएंगे।
Now that's been heard. To understand the specifications and the financial boost in detail, we have Ashok Pense, power sector expert, joining us at the moment. Thank you so much, Ashok, for making the time. Let me go straight with this. Will this extra 2,500 crore per project actually help Power Grid win more competitive bids? And what does the landscape of competitive bidding for power transmission projects look like in India at present?
Yeah, let's look at PGCIL. PGCIL has been taking majority of the project which are interstate transmission projects. And that is where the large amount of money is required. Now, in the earlier part, in addition to PGCIL, Tata's, Adani's, etc., where Kalpataru were also participating in that. And all these projects are not on Section 62, which is cost plus basis, but they are via competitive bidding process. So when PGCIL also participates, we will have, say, let's say, instead of 2 players or 3 players, we could have 4 players. And one of them is a Government of India company, which is PGCIL. But all these projects were basically via competitive bidding, what we call it as Section 63. So more players is obviously always beneficial. The reason is being very clear. The competition brings down the price. So it will definitely help in overall reducing the price. The second part of it is, as Mr. Vaishnav said, if you have, there are 2 ways of doing AC transmission and DC transmission. When you have HVDC transmission, one positive part of it is the cost shoots up. But one part of it is, because in case of AC transmission, let's say we are transferring, say, 1,000 megawatt, NIMSIC I'm saying. Then because of the impedance matching and imbalances in the circuit, what happens is you are not in a position to transfer 1,000 megawatt, but you will end up in maybe 800, 850, etc. When you have got HVDC transmission, you can transmit the entire 1,000, and the losses in HVDC as compared to the AC are definitely better. So we will have the two positive parts. One is more competition. Second part of it is HVDC, which will become over a period of time competitive.
So then a natural question that comes from what you just explained, there are 2 models in which power transmission happens in India. And now that competition could get tougher because rules become easier for Power Grid now to compete and to participate in this bidding process. What kind of private companies do you see coming to the forefront of power transmission capacity here in India?
there are already Kalpataru, Tata, then Adani's are already there in this project. It was not that because PGCIL was not in a position to compete, there was a vacuum. There were other companies also which were via what we call it as independent. I can't call it independent power producer, but independent transmission companies who are capable of building this. So it was definitely there. We will have definitely more competition. These were basically the private enterprises. Now we will have one more company, which is basically via Government of India, which is PGCIL.
I think you've misunderstood my question. What I was trying to ask you is that I did not question, or I was not sounding skeptical on the capability of the private infrastructure in transmission lines. What I'm trying to allude to is that now that the level playing field almost evens with this limit that has been expanded, how do you think this is going to affect the private players that have already been having a strong hand at this kind of project so far?
They will have to be much more competitive, not by choice. Because, if initially only one player was there, now we will have 3-4 players. Like, to give an example, let's consider namesake, which was a smaller value, this one. When it was an Mumbai, Vikhroli, Navi Mumbai, this one, there were 3 players. So obviously, one of them was PGCIL, Adani, details of that. What I'm trying to say, more the player, obviously 101% the price comes down, and PGCIL joining this group of, let's say, this sort of picture is 100% going to reduce the cost on the bigger project. That is for certain.
So you made an important point. You said that this is definitely going to bring down the cost of electricity.
Yes.
For a common consumer like me, how much would that change, and would that be a significant change in the electricity price? Do you think so?
See, what happens is, let's put it other way around. Normally, if you break down the electricity bill of our, 75% of the cost comes from one basic part, that is distribution, power purchase cost.
Discount.
Then comes the distribution cost. And out of all this, so one power purchase cost is going to generation, rest of the comes to discom. But the transmission cost varies from 3 to 4%. But in the long run, you can see if this transmission cost comes down, roughly I have a feel between 5 paisa to 7 paisa per unit should be the reduction in the price.
Okay, that really helps. Ashokji, what other big changes does the power sector still need to fully support India's clean energy goals, according to you?
One of the basic thing is, our major problem is right of the way. Then, for example, in Rajasthan, we have that great Indian bustard issue. So what is happening is, right of the way is creating a major problems in putting the transmission network. So evacuating the power from the solar to the main grid is one of the major problems still we are struggling with. And I think in the long run, we will have to get over it unless and until we do that. Transmitting this solar power, which is in the arid regions, and from there bringing it kilometers and kilometers away to the main substation, is going to be a problem. Otherwise, what will happen is, we are creating solar, but we don't know how do I vacate that from that solar plant to my substation. That means transmission.
Okay, so transmission needs to be bolstered more going forward.
Yes.
Thank you so much, Mr. Pense, for helping us understand this in such great details. And viewers, this simply means that there will be more competition. Because of that, it would be a level playing field in the power transmission space. And perhaps in the coming months, you could see your electricity bill tweaking down a bit. But let's quickly now look at the government non-tax money collection. The government has collected 90,264 crore rupees in total capital receipts so far in FY26. Capital receipts are the money the Indian government receives that either creates a new liability or reduces its assets. And these are not regular income from day-to-day sources like taxes or fees. Instead, they come occasionally and are used for big long-term needs. The biggest part comes from dividends paid by central public sector enterprises, and that's at 58,193 crore rupees so far. Then capital miscellaneous receipts have crossed 32,000 crore rupees, and this includes disinvestment, which is selling government shares in companies, and that's worth about 13,233 crore rupees, and asset monetization, earning from existing assets without full sale, that's come in at about 18,837 crore rupees. The government had set a target of 47,000 crore rupees for these miscellaneous capital receipts in FY26. And just for context, for dividends from CPSEs, the revised estimate for the full year is 71,000 crore rupees. This basically shows strong progress in getting money from public assets and companies, which helps fund government spending without borrowing more. And just in case you're wondering, these statistics are released by the Department of Investment and Public Asset Management. But moving on, let's check how the markets fare today. And it's been a bruising session on the Lal Street. The Nifty has slipped below that crucial 25,450 mark on F&O expiry day, ending near the day's lows, while the Sensex 2 closed over 1,000 points lower. Heavyweights like Infosys and L&T and Bharti Airtel dragged down the indices, with Tech Mahindra and HCL Tech leading the fall in the Nifty 50 index. Both, in fact, cracked over 6% in trade today. Broader markets also mirrored the pain. And for the full market roundup, in fact, let's go across to my colleague Jasmeet. Jasmeet, what led to the sharp reversal and how widespread was the damage across sectors?
While Nifty ends in red to red, ends 1% down in line. While in terms of the market closes below the 25,500 mark, and Tech Mahindra and HCL Tech lead the fall in overall Nifty, both down about 6% in trade. While in terms of the broader market reflect the benchmark both in red. Nifty Midcap 150 ends 0.21% lower in trade today, and KPI Tech and LTT has become the top losers in Nifty Midcap 150, down about 6% in trade. While in terms of Small Cap 250, they are down about 0.5% in trade today. Affle and Zensa Tech lead the fall in Nifty Small Cap 250, both down about 5% in trade. We see that overall IT pack is creating the pressure on the broader and the benchmark markets as well, and they are all suffering in trade on the back of that extended AI losses and the AI fear that the streets saw, with a major sell-off going on globally as well. Now, in terms of sectorial, sectors end on a mixed note. Nifty IT leads the fall in all the sectors and becomes the top sectorial loser. Nifty IT down about 4.5% in trade today, while Nifty IT falls for the 5th day in a row, majorly on the back of that AI disruption. While in terms of Nifty IT, it hits the lowest level since August 2003, while down about 20% in this particular month. In terms of the overall pack in the Nifty IT, we said Tech Mahindra and LTIMindtree lead the fall in Nifty IT, both down about 6%, while Nifty Metal becomes the top gaining sector, about 1% in trade today. Vedanta and NMDC gain the most in Nifty Metal, both up about 2% in trade. In terms of the overall trend, we see that Nifty Financial Services, Nifty Auto snaps the 2-day gaining streak, while Nifty Bank snaps its 2-day gaining streak. While Nifty FMC, Nifty PSU Bank gain for the 3rd consecutive day in the row today. While in terms of Nifty Pharma, Nifty Oil and Gas, they gain for 3rd day as well in row.
Thanks for that, Jasmeet. And in fact, apart from IT stocks, viewers, cybersecurity shares are also under pressure globally. Stocks of cybersecurity companies have been sliding worldwide after fresh AI-driven disruption fears triggered by Anthropic's new enterprise security tool. And the belief is that automation could squeeze traditional security revenues, keeping investors' sentiment cautious. My colleague Jasmeet joins us back again on what's spooking the markets when it comes to this space especially. Jasmeet.
Every day we have new or the other AI news flowing in and targeting different sectors. We have wealth management last week, and this week we have the cybersecurity. While the cloud companies, what AI is seeing is that the overall disruption being faced in the overall cybersecurity space. While what we see is the overall cybersecurity global tech firms see a downtake on the back of this new cloud AI tool. While this AI tool can simplify the overall cybersecurity, and it can impact that to the traditional services firms that are giving the cybersecurity at large. While we also saw the global tech firms where we saw mass sell-off in those on Sunday, Monday as well as today in trade. What we have seen that major names like CrowdStrike and Palo Alto Network slide in the trend. If you look at the overall global ETF, which handled the global security companies, even that saw a slight decline in the overall performance, and which hit the low of